All right. Good morning and welcome to the second day of ABG's Investor Days seminar, and thank you all for dialing in. My name is Jesper, and I cover IT and technology companies out of our Copenhagen office. And the first company presenting today, out of I think 14 in total, is Penneo, which is a company that I cover. And we are fortunate enough to have the CEO Christian Stendevad and the CFO Kasper Christiansen with us today. So guys, please take the stage for 20 minutes or so, and then we do a short Q&A afterwards.
Thank you so much, and thank you for the opportunity to speak. If you take the next slide, then a little bit about who we are. We are a business-to-business software as a service company based on a subscription model, and we have approximately 2,400 customers. And what we focus on is digital signing and document workflows around that, and then the Know Your Customer or KYC under the anti-money laundering regulation or the AML. So these are our focus area, and we have customers in Denmark, Sweden, Norway, Finland, Belgium, and Germany. And we have an aim of becoming the de facto platform for auditors and accounting in across Europe. And we are approximately 90 employees with more than 20 nationalities. So if you take the next slide. The auditors and accounting is our beachhead segment. And what we mean by that is that it's really our primary, so where we enter first and where we do our investments. And for those, we have our offerings with our KYC, so Know Your Customer, as one part of it. So they need to onboard all their customers and do the risk assessments as part of the KYC and anti-money laundering. And then they will often have their own systems for doing their annual reports and other things. And then we are then integrated into that with our Penneo Sign, where all documents and workflows around that to get signed, approved, and so on are covered by us. And that we have been investing in from the very beginning. We also have ideas of how we can expand that in the future to other revenue streams and offerings for this one. If you take the next slide. Then as a strategic direction, we have as the target and tier one, we have the auditors and accounting. So that's our primary. But we also have other customer segments, and we have the tier two, that are those that are regulated under anti-money laundering. So those companies like the finance sector, they will have a need both for our sign and our KYC. And so that's the second tier. And then we see as part of our, when we now have these two with our auditors and accounting especially, we see a network effect of our customers. And what we mean by that is when customers are using our product, then in an audit account, they send out, for example, all the annual reports. CEOs and board members are seeing that, see how easy and effective that is, and how they stay compliant. And out of that, then they get, and we get that as inbound leads, a lot of those where they say, okay, we could also use that for our business. And that's what we call the network effect to other industries. So we also have a large portion of our business based on that. If you take the next slide, then this is some numbers of the total addressable market. And what we would like to say with this, these numbers are based on both the digital signature market and the KYC market. And these are global numbers. Our experience is that in Europe, where we have our main target, we see similar growth over the coming years, and we experience that every day. So it's really a growing market that we are and tapping into, and that we are basing our expansion on. And if you take the next slide. Here, that's our growth acceleration. So the way we see our growth going forward is we will grow in existing markets. And existing markets have primarily been Denmark and then Norway and Sweden, and then now also some of the other ones like Belgium. Have a clear focus on growing in these existing markets, but also as a second part, have a geographical expansion into new markets in Europe. And how we will do that? Yeah, that is basically to have some investment streams, and one of them is to upsell our Penneo KYC product to the auditors. Our KYC product was something that we bought as part of an acquisition last year, or it was in late 2020, and we are now with that product. We have the opportunity to sell it to all the auditors that have a need to it. We have approximately 700 auditors today, so that's one of the investment streams, and where we see the growth. The second is that we would like to penetrate AML government industries with our both KYC and Sign product. That's for example, the finance. We have more than 250 finance customers, and we see a growing need for both our KYC and our Sign. So it's really have basically more focus on that than we have so far, and invest in that. And the third part is expansion through the audit and accounting vertical into Europe. So simply enter new markets. And as part of that growth, we announced here last week that we have raised capital. So we have raised additionally 60 million Danish kroner to help us fuel this growth acceleration with investments in these three areas. So that's something that we are very happy about, that we have succeeded with. So that's going forward, how we will see it. If you take the next slide, then we can see some numbers, and I will hand over to you, Kasper, to look at how it has been so far.
Yes, thank you, Christian. And looking forward is a matter of also looking backwards when you are a SaaS company, since our future growth is built on top of our current portfolio. This slide is all our cohorts since we start out in 2014, and we divide all our customers into the year they became customers. And this is the yearly value that our customers bring into Penneo. What is pretty unique for Penneo is that all our cohorts are growing year over year over year. So if you, for instance, see the dark blue column in the bottom here, you will see that this is the customers coming in 2014, and the number is growing, meaning that when one customer is churning, the other customers uplift their annual subscription more than the customer was churned. Next slide. And this is a 12 months look backwards. You can see that we overall have growth by 50%, and half of it, approx, is coming from the current customer base uplift, net annual recurring uplift on 124%, and on top of that, we also add new customers in. This is the first report where we divided our uplift and our new biz into the two revenue lines that we have. As you saw on the slide that Christian presented, we have now two revenue streams, especially for the audit segment, but also the AML regulated segment. And we now start seeing that we are gaining also revenue from this new and second revenue line. Next slide. This is also the first time in this report that we have chosen to disclose our foreign markets revenue coming in from the foreign markets. And what we are seeing here is that we are growing from 7 to 14 million on the market outside of Denmark. And this is a part of our European go-to-market strategy that we want to focus and also put more pressure into the market outside of Denmark, ensuring that we can get new customers in and also uplift on the customers going forward. Next slide. This is our unit numbers. What I just want to highlight is that the entire 21, we got 530 customers in on an average on approximately 90,000 the first year. And on the next slide, you will see that we have disclosed how much customers is uplifting the first 5 years. Then you can do your calculation of CAC compared to the value, lifetime value on a customer. What you see is that we now have approximately 27,000 cost for new customers coming in. So it takes a bit more than a year to gain that revenue to pay for the customers. Yeah, and what you saw on the previous slide is that when you uplift on your current customer base, meaning that the average customers there is growing, and you also grow the average AR first year for the new customers coming in, then you see that this total ARPA is also growing. So yeah, we are satisfied about this numbers. If you take next slide. This is our P&L, and in 2020 we raised 50 million when we became listed on Nasdaq First North, and what you saw was that we increased our growth in our customer base, and now we see the result in the revenue. So I think that this kind of a proof that we have done this S-curve one time before, and now we, as Christian said, has raised further capital to do it once more. Yeah, next slide.
And then I will take over from here. So this is regarding our guidance for ARR. And if we just look back from when we went IPO'd, in the IPO we had a guidance of 38 to 43 until H1, and we succeeded that by achieving 48. When we started the annual report a year ago, we said between 52 and 57, and we realized 55. And then looking forward from our growth this year, we have now guided that we will expect to be within 77 to 82. And that if that is, you compare that up against 55, then it will be year-on-year growth of 40 to 49. So we will simply continue the growth as we have seen, and that is based on 3 factors. Continued low churn, as you saw on the first slide. We are very happy about having a churn. Now last year was around 2, but if we can have it 2, 3, 4%, that will be very good. And then it's a combination of both the uplift, so where we sell more to existing customer. As we have seen so far, we expect that will continue, combined with that we will also have a new business. And that will be both within our Sign product and within our KYC. And at the same time, we also expect to continue to grow in our out of Denmark, both in Denmark, but also all the countries outside as part of our European expansion. So that is what is part of it. From our guidance on the EBITDA, then we have guided -5 to -10. These guidance are right now based on, and we went out in our annual report before we raised the additional capital. So that's based on those assumptions that we had before. Now we have raised additional capital, and we are now starting to execute on those plans. Our expectation is for those investments, that is what can secure the growth into 23 and onwards. Yes, so this is our guidance. So we will continue the growth as we have had it. Then on our last part here, if you take the next slide, that is we have announced already in June, so a long time ago, that we will go from First North here in Copenhagen to the main market and being listed there. And we have got several questions around that on when and is this a long process or not. And here we have now shown the process that is really from a formal point of view. You have to go through a lot of steps getting approved a listing prospect, and we are following that plan accurately and expect that our first day of trading on the main market will be the April the 4th, so the Monday, the April the 1st. So that is so that's following that plan. And the main reason for doing on the main market is as we grow and become as a company more and more mature, we will, and with our European expansion, we will also very much like to be on a platform where we can attract investors from more and more abroad. Now we have, with our capital raise, we have got some industrial investors to back us up. So we now have some really strong corner investors that can support us. But of course, we are up to attracting many more shareholders. So we hope by listing on the main market that we can have that as an attraction in addition. So that basically ends our formal presentation. And I will now hand it over to you, Jesper, or any others, if you have any questions to these things.
Okay, great. Thank you very much for your presentation. You just raised these another 60 million kroner, which will be used at least partly to increase your workforce, as far as I can understand. But I don't think it's a secret that IT professionals are in high demand at the moment. To what extent will that impact your ability to actually deploy the newly raised money and hire the required amount of people?
Yes, that's true. That one of the main challenges that we and other companies have is the war for talent. We have been working with this for a long time, and we have seen that we are able to attract some great talent. And I expect that despite the fact that it is a hard time, that with our culture and our ability to execute, that we continue to be able to attract the talent that we need. But it is true, it is a clear focus area. So if you looked up in our value creation plan, this is one of the things, you know, they really develop our team and making good career opportunities for them is part of together with our culture to attract talent.
Okay, thank you. A follow-up to that regarding the capital raise. How well capitalized are you after the capital raise, and what would you be looking at if you were to use some of the new money to finance further M&A, if that's an option?
Would you answer that?
Yeah, I can. I think the most important thing to understand by the money raised is the 4 new investors getting on board. So Jesper, if you find any good thing, you can give me a heads up, and we also have internally eyes on what's possible out there. I believe that we now have friends, so it's not just the money we have raised, but it's also a matter of getting the right investors on board so we can grow along with them.
But the main focus for the capital raise is what we showed on the slide with the growth acceleration. So investing, so we can now do it quicker than we anticipated before. That was the whole point of raising for now. But it was also a clear thing for us to have the right investors on board, to have being backed by somebody who can help going forward.
Okay, you talk about growing faster there. And that leads me to my next question, which goes to your guidance. And Christian, you spoke a bit about that. You're guiding for, I think it's a 40 to 49% ARR growth in 2022, which is impressive. But that was under the assumption that you would not raise any cash in 2022. And now you raised the money, and we only just entered March. What keeps you from adjusting your guidance?
Because we just raised it and got the money before yesterday. So we had plans on how to execute on, and we will now start being launched. But until we have that fully settled, the guidance stays as it is. And the thing what it can do is now we can start doing these investments, get the people on board. So both before, but also now, we will never use more cash than we have. So all our things was based on that we will never run out of cash. Now we had this plan in door, so now that we succeeded, we can start launching. But there is a delay to that. So for us, when we accelerate the growth, we can do some of the investments, is both in product and sales and marketing. Of course, as soon as that goes into, okay, now we expect to have higher growth already this year, we will go out with an updated guidance. But it's really also for the coming years that will support us. So as soon as we have the plans ready, then we will go out if necessary.
Okay, and is it reasonable to assume that if you grow faster, your EBITDA guidance will be lower, i.e. more into the negative territory?
Correct.
Okay.
It will totally the same way as we have done so far since the IPO, basically. So we go down, use more and more, so we front load it and then go up again. And it will always end up being cash positive again before we run out of cash.
Okay, great. Moving on to your KYC solution, you just started reporting separately on that, and ARR stands at, was it 3.4 million kroner, out of a total ARR of 56 million kroner. What are your feelings regarding the potential in upselling the KYC solution to existing clients of yours who are only using your signing solution?
We see that for what we call the audit and accounting and the AML regulators, those two segments, the tiers, they have a clear need. It's basically mandatory to have a solution in place. And many of them might either have a manual processes or a simple solution. So there's a clear need for a KYC solution. So for us, it's an excellent fit into our offerings and the type of dialogue we have. So we do expect that we have a good potential by upselling it to existing customers. What we could also see on that slide was upselling to existing customers, but there was also some called basically new biz, where the KYC itself was the first product that the customer bought. And then we expect that then they can add on or at the same time buy the sign. So it basically helps us with both upselling to existing and making new biz.
Okay. Regarding your upselling, and then, I mean, looking at one of your other SaaS metrics, the net retention ratio, it looks really strong, probably one of the strongest in the Nordics at 124%. But on one of your previous slides, you indicated that your net retention has historically been around 116.5%. How do those numbers compare, and what should we expect for the future? Will it be closer to 116.5 or?
I would expect, so 124 is a high number. So at least from a mathematical point of view, it might be more difficult as our growth, as we grow, to keep it as high. On the other hand, now we have shown that we with success had added additional revenue stream, like adding a KYC product. So of course, going in the future, as we also saw on the slide with the beachhead strategy and audit and accounting, we saw that we had one in light blue, that we also always looking at, could we add other revenue streams, either investments, or it could also be, we're going to make or buy, but one of them. So we add more revenue stream to it. And the focus on that is always to have more to sell to existing customers.
Okay, but maybe you could just elaborate on the 116.5%, and I think that was one of your slides, Casper.
I can try to do it. It's built on all our cohorts the first 5 years that the customers became customers. And what you can see is that when you, at the end October 2020, we acquired the CLA Reply, who has this software on their clients. And up until the first half year last year, we're building the product more scalable, meaning that all the servers and so on being ready for onboarding big clients like Big Four, and also outside of Denmark. It was built for the Danish market, get all the data from CVR.dk, and that now we have built it up to Dun & Bradstreet instead. So now you start see, and that's a part of this numbers. Now you start see we have 2 revenue lines, but we still gave out this past records for the cohorts. The average uplift every year when you take all our cohorts and see this the first 5 years.
Okay, makes sense. I'm afraid that time is flying, guys, and we have to make room for the next company, which is Formpipe, as I recall. But thank you guys for taking part today. Always a pleasure.
Thank you so much for the opportunity.
Bye.
You're welcome. Bye.
Bye.
Good morning and welcome to this next presentation at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG, and one of the companies that I cover is Formpipe, and with us today we have Formpipe CEO Christian Sundin, who will present the company for about 15 or 20 minutes, and then we will follow up with a shorter Q&A session. So with that said, Christian, please go ahead and present.
Thank you, Simon. Christian Sundin is my name, and I'm the CEO of Formpipe. I'm planning to go through this agenda today. Just a very, very short introduction to Formpipe, who we are, what we do, the customer value that we provide. Then I will go back in memory lane a year ago, presenting the growth strategy that we presented with the Q4 report for 2020. And then I will follow this up by showing what the outcome became in 2021. So that will be my overall agenda for today. And starting with Formpipe at a glance, we are within the space of content services, a software company. We, in broad terms, you can say that we bring order and structure into digital information. And especially in the public sector, we're like the ERP systems, but for words. We make sure that the municipalities and central government customers get their digital information in order and be able to follow the case management process and all the way from a registration from a citizen up to a decision point and so forth. And in private sector, we're strong on customer communication management, document management, and are actually on speaking about ERP systems. That's where we are actually making the ERP system stronger in terms of document management and customer communication. We are on the markets of public sector in Sweden and Denmark, where we are market leaders. And then in the private sector, we're mainly approaching the market through an international only. We have a partner only approach on the sales of Lasernet, which is the product within customer communication management that we distribute and sell over the world through a certified partner network. And we are 274 employees at the moment, or at the closing of 2021. Mainly in Denmark, Sweden, and UK, but also growing in US and Germany with more partner support and sales and partner support people. So I mentioned the growth strategy. We come from a period, several years, with a strategy of executing on two things: transforming the business model to recurring revenue only, or more or less with a focus on growing SaaS revenue, and also improving the margin. Doing this gradually, and we've been successfully executing that. We've had a growth of recurring revenue of approximately 10% since 2014 up to 2020. And we have, during that time, despite the fact that shifting the business model from traditional license to SaaS actually puts a damp on margins, we've been successfully improving margins all over those years. But coming into 2021, we realized that we want to grow top line as well, and we decided to shift strategy to a more growth focused strategy. And with that, we also published new financial targets. We said that we will actually grow top line with 10% a year up to 2025 in average. And we will, due to the fact that we will still push a lot on the SaaS growth, and SaaS growth is recurring revenue. So coming 2025, the majority of the growth will still come from recurring revenue, but it will be supported by service revenue. So in 2025, we will have a 70% recurring revenue of our total revenue. And since that type of revenue, the SaaS revenue, is scalable, even though the first years of this strategy will put a big pressure on our EBIT margins, the scalability of recurring revenue will bring us back and above historical EBIT margins, and in 2025 we will reach about 20% in EBIT. And yet again, the SaaS business model or recurring revenue business model is cash generating, and we will thereby be able to pay dividend along the journey of this growth journey to our shareholders. The 2021 was, as I said, a start of a new journey, a paradigm shift, a new era in Formpipe, where we published the financial targets. We focus on accelerating our growth, mainly in Europe, but also a lot in the US, where we see great market potential for our Lasernet product. We are investing in increased sales and partner support resources. We will continue to drive, as I said, the recurring revenue, mainly SaaS, and we will also more actively, proactively looking for M&A targets to complement the organic growth that we're seeing in this strategy. However, 2021 was a year of investment. 2022 will also be a year of investment, where we continue to increase resources in our business. And it is to support the partner network, but it is also to support to build even more excellent deliveries to our existing customers in public sector. And we will focus the growth in private sector on the partnership we have with Microsoft Dynamics and Temenos, the banking system, where our product Lasernet complements their platforms in a very good way and make their systems even better. Both of these platforms are gaining market share, and we're piggybacking on their success on gaining more and more market share. So that is what we're doing, and what we want to do is to help them with getting on every customer deal that is made on these platforms. We want to have a partner there. We want that partner to bring Lasernet along with that offering, and make that partner more competitive to other partners when they offer Dynamics or Temenos together with Lasernet, rather than building those documents and stuff like Lasernet do better themselves. So the investment will have a damp on the future on the EBIT margins, and we've seen that in 2021. I'll come back to that, but we'll see it going forward as well. I'm talking about strategy for private sector, and a lot of the comments I've touched base on so far are referring to the private sector, the Lasernet and the Temenos growth journey. But we also have a growth journey in the public sector ahead of us. We are, as I said, market leader on public sector, and when it comes to case and document management, digitalization of the society in terms of public sector, municipalities, central government. We have customers like the tax authority, the transport agency, the Landbrugsstyrelsen in Denmark, and we have a lot of municipalities, both in Denmark and in Sweden. And we want to really grow with those customers and win new customers in the public sector space. Growing with the customers requires more resources to help them out with more things than we've done historically. So we're going for a one-stop shop strategy on the public sector, getting even closer to our end customers. And we will add, by M&A, additional geographies or markets outside of Denmark and Sweden by approaching and trying to find those acquisition targets to become the European one-stop shop for digitalization of the public sector. This journey will still be profitable. We have already a very big customer base. We have strong recurring revenue. It will not be the same growth journey as the private sector, but it will be growth journey, not as big ramp up as in the private sector, but in the public sector, we will do this profitable, and we will do it in a controlled growth journey going ahead. While in the private sector, the growth potential is even bigger than in the public sector space. However, it will also put a lot of cost initially to execute on the partner strategy we're having and going with the growth of Temenos and Dynamics here. So how did this play out for us then? How did we do in 2021 on this strategy, start of the new journey, so to say? Yeah, we actually grown the ARR, the annual recurring revenue, on contracts from 260 to 304 million Swedish. It's a 17% growth year-on-year, which is quite an evidence of that the strategy is paying off. That is 37 million in ACV, in new built up annual contract value, in order to do that. And that is compared to 22 million the year before. And that growth is then coming to 66% growth of ACV. That's a lot of numbers, but I think actually this graph tells the story even better. Looking on from how we've grown our SaaS revenue from 2017 up to 2020, and then the investment we've done in further support for our partner network, and you can see what I've put a circle around here. That we have now established a new level of quarterly ACV, and we see that growing in further going forward. So the investment is paying off. So revisiting the financial targets, the average annual revenue growth, we see that as very reasonable, that we will succeed with achieving those targets. And since a lot of the growth comes from recurring revenue, the 70% target for 2025 is very realistic. And yet again, the scalability of the model, we will take a few years hit on the margins, but the margins will come back with this business model, and so will the dividends as well. So that, I think, sums 2021 up, and we're looking for a similar journey in 2022 and the years to come here. So that's what's it. Thanks for the time and for listening.
Thank you so much, Christian, for giving us that update. Initially, I'd like to stay on the public sector side, and for some quarters, Public Sweden have been on a decelerating growth rate, but in Q4 that actually turned out to be positive. Could you talk a little bit on the market dynamics in Public Sweden? What are the pros and benefits on how that business unit is developing, and what could we expect in terms of the Alchemit acquisition contribution?
I will answer in several ways. The market in itself, Q4 is normally a strong quarter for the public sector generally. It's very budget driven, and it's not that the customers are unprofessional in any way, but at the end of the year they know if they have the money to spend or not. Early in the years, less. So that is one explanation on why Q4 is. It's not about spending the money, it's making sure they have the budget in order to do that. So Q4 is always a strong quarter. It was also that we launched a product for digital signatures during the year, and that needs some reference customers and so forth. So it was sort of that we really got traction on the sales of that digital signature project in Q4 in public sector Sweden. But the other thing, bear in mind that we shifted business model to the one-stop shop from being strictly delivering everything via a partner network. And as I said, with the strategy, we want to get closer to the end customer. We have recruited a lot of people during the year in order to support that journey. However, it has been a struggle. Denmark and private sector growth strategy, they've been just tick in the box. They've gone exactly as we planned. In the public sector space in Sweden, we have not the shift of business model was more challenging than what we thought it was going to be. But we now the pieces of the puzzles are now starting to fall in place. And with the Alchemit acquisition, we really take a giant leap on this forward on this strategy with getting the competence in. It's a former partner knowing how to deliver our products, knowing how to talk to the customers. So we sort of taking that step all the way out to the customer base with one acquisition here. So it's very, very good step for us to get the Alchemy knowledge about consultancy, building things customized for our end customer base in the public sector space. So, yeah.
And thank you for that. Continuing on the public sector space, Public Denmark, as you point out, has been performing well.
Yeah.
Is there any specific customers or product that is driving that market, or what is the main reason for this, or is it just that business the unit is doing very well?
Yeah, it's doing really well. One thing was the big deal we did with Lantbruksstyrelsen in Q2, where we sort of extended our partnership with them and got a new frame agreement in place, making sure that we have a long-term relationship with that customer and making sure that they get the flexibility on who they buy from in terms of other things that are so they can put us out for competition. So the relationship is better than ever. So it's been a good growth of the consultancy revenue on that customer, of course, but that is within the grants area, and in the grants area we also see a lot of tenders coming out going forward. So we see that our position as on grants is really improving, but also in case and document management, which has actually been kind of a slow market for several years back in time. And we saw the market opening up, and a lot of more customers realized that they need to go out in tenders on case and document management. So both of those sort of platforms and the business value we provide are going good, well in Denmark. So we see, we're really executing on the growth strategy there, and we see potential to grow that even further. So that's good.
That's very encouraging to hear for the future. Another less positive topic is the circumstances that are occurring in Ukraine.
But however, we bear in mind that it was sort of a catch-up thing. We were in Denmark, the first half was quite slow in consultancy. Second half was strong. A lot thanks to that, it was a catch-up on Lantbruksstyrelsen. So Q3 and Q4 might be a little bit too much to ask for in terms of going forward. So it will stabilize and be more smooth ride going forward. Sorry for interrupting. Yeah.
No, but that's good to keep that in mind for us going forward. About Ukraine, you have some sub-consultants in that region that are working with developing projects, and you've had that for quite some time. Could you give us any flavor on what is
Yeah. I mean, Ukraine in general is awful, of course. It's very emotional for us. As you said, we have a partnership in Ukraine where we have a lot of product developers, product development teams. We've known them for 15 years, some of them, and we have a very, very close relationship and with our people in Ukraine, even though they're through a partner. The situation is just awful. However, the partner we're having a very, very professional, ISO 27001 certified, as we are as well, having executed excellently on the contingency planning, have relocated all 86% of the people to safer places within Ukraine or in Poland or outside of Ukraine. And the company, it's a 2,000 people company. We have, of course, much less than that, but they are to 85% degree have moved to safer places, and the people that not yet have moved are staying freely because they have families or stuff like that they still want to be in places where it's less safe. However, they are in production, so we still see we're able to talk to them on a daily basis. We continue to get new code built and so forth. It feels very odd, of course, being in that situation. They are in war and they're still producing code for us. And yeah, as I said, 85 or 86% productivity there. But we are taking it as it comes here. We are preparing to trying to get some of the people here to us. We are looking on finding ways to fill the gap if it becomes even worse in Ukraine. We have other partnerships as well, but as long as it's working fine with our Ukrainian partner, we will continue to support them with work because they really want the work. They want the normality in life and so forth. So that's what we see, and we will continue that path. But all our code, all our documentation, everything, if things goes really sour in Ukraine, we will be able to shift that to outside of Ukraine without any work lost. But of course, there's a lot of competence built up around our products in the team over there, a lot of history and experience, which will be a bump for us if we need to move that elsewhere or parts of it elsewhere. But we have routes for that as well.
Okay, thank you for giving a very comprehensive answer on that topic. Moving back to some of your business areas, moving back to private more specifically, it had a very good year in 2021. Would you say that business area is performing in line with your expectation, or is there anything that is holding back? You previously mentioned that one bottleneck could be competence and finding that. Is there anything else? Or?
Yeah, I mean it's a war for talent right now, especially in the U.S. The inflation rates are hysterical, and it's really tough to find people. That is, and if we find it's really expensive as well. So yeah, we would have hoped both for the public sector space and the private sector to been able to be even more than the 274 I mentioned. We've recruited a lot of people, but there's people approaching our people as well. So on the cost side, and make not only on the cost side, but also to attract and retain good people is difficult. And yeah, we would have preferred to be having even more capacity today than what we're having, and we would have preferred to give a much lower EBIT number last year than what we achieved, because then we would have been more successful in the recruitment and retaining of people. So that we're working hard with that. I think everyone is. There's a lot of movement in the people move around a lot in the IT sector anyway at the moment. So that is a challenge. Yes.
Yeah.
But in terms of performance of sales, couldn't ask for more when it comes to ACV and ARR of private sector. No, I could. That is definitely a very strong year, and we see that ahead of us as well. But if we should continue to step up on quarterly basis, we need to be more successful with recruiting even more people, and that is difficult at the moment.
Makes a lot of sense. In your last report, you mentioned a potential spin-off, or at least you're looking into the topic, whether a potential spin-off could be value accretive or not. And any flavor you could give on that topic? Where is this coming from, and what do you expect to achieve from this initial initiative?
Yeah. I mean, it's only an evaluation. We're taking help to see if that is a good thing. We see industrial logic, and we don't have a lot of sales synergies between private sector and public sector space. As you could hear from my presentation, we're selling different products with a different business model to different geographies in different verticals. So it's quite different business that we're pursuing in private sector compared to public sector. However, we're quite small. So this is, and we would be more focused separately. We could have the value proposition for the customer could be clearer rather than having it together. But we're still quite small. We have a lot of already realized synergies on the product development side, on overhead cost and so forth, and sharing all of those costs. So over time, I would assume that a split would be the recommendation that since it's in a few years from now, when we are significantly bigger in both parts, yeah, then it probably could make sense. That is at least a hypothesis we're trying out. But it could also be that, yeah, if we realize that now, perhaps it's easier to do it right away, or we realize that, yeah, there is no use of doing this because we will grow with acquisition, we will do this, and it works out. So we're open for all paths here actually, and we just want we've asked for advice and see if we want to pursue it, how should we then pursue it? That's also part of the question that we've asked. So, but yeah. Well, let's wait and see. I think the industrial logic is there, and then it's a matter if it's generate shareholder value or not, and so forth. But let's await the recommendation and whatever the board likes to add to that. So
Yeah.
yeah.
Thanks. And as a final question, I'd like to ask to put sort of the recent award you gained from Temenos in perspective, because you were awarded a Partner of the Year or Partner Solution of the Year.
Yep.
And Temenos is a large company, so this is obviously a very big achievement.
Yep.
How important is this for you as a company? You are starting to bundling some of your products. What does this bring?
Well, it's a tremendous opportunity for us, and for the ones knowing us and been following us for a couple of years. In the summer of 2020, we acquired EFS, a partner in the UK. That had the product Autoform that complements Lasernet, especially for the Temenos customer base. And that acquisition also put us much closer to Temenos. And I mean, we did occasional deals with Temenos, and that was traditional license deals and so forth. We shifted that around because Temenos wants to sell SaaS. We now have a lot of traction within the Temenos business and a lot more close relationships with them. And our ambition now is that Lasernet, together with Autoform, which we now bundle to within actually so Temenos is actually in a demo environment of Temenos. Autoform and Lasernet comes automatically installed in that for any new customers, and they can choose if they want to use it or not. So that's of course a tremendous opportunity for us to get the sales on every new Temenos customer out there in the cloud. So yeah, we're really pursuing that route. We want to help Temenos to be as successful as possible and tag along on their journey. So and we see great opportunities in that. Going forward. And the Autoform product, as a side comment here, is now also bundled in to the Dynamics offering. So we have now Lasernet and Autoform also coming to that. We call it Lasernet still, but the bundle is there. So we see great opportunity for that as well.
Very exciting. Unfortunately, we'll run out of time now,
Okay.
but we could continue all day, as I'm sure I would love to do that at least. Thank you all for listening in, and a special thank you to Christian for attending here today.
Thank you.
Good morning, everybody, and thank you for participating in ABG's Investor Day. My name is Benjamin Silverstone. I am an equity analyst here at ABG, located in our Copenhagen office. I now have the pleasure of presenting the next interesting company, MT Højgaard Holdings, which will be represented by CFO Martin Solberg. Martin, thank you very much for being here today, and the word is all yours.
Thank you very much. I will, the next 20 minutes, try to give a short update on the status on MTH Holding. Next slide, please. We will run through the agenda where we'll give a fast introduction to the new organization of MTH. We will go through the financial figures. We will look at the trends for the market for the coming period. And then we will also see we will look at our outlook. And finally, we will just shortly touch our strategic update that will be towards end of the 22. Next slide, please. To the right, we have the five companies today representing MTH Holding. We have over the last couple of years changed the organization towards a portfolio strategy where we have five separate companies with individual brands, individual strategies under the portfolio, of course, of the holding. We are today sitting with Enemærke Petersen, who are a contractor primarily in new building and refurbishment. We have MT Højgaard Denmark that are into major contracts, major constructions and civil works. Enemærke Petersen and MT Højgaard together are approximately 80% of the volume of the company. MT Højgaard projektudvikling, development of projects early in the construction phase, and are also delivering projects to Enemærke Petersen and MT Højgaard Denmark. International is our MT Højgaard International is our international activities, which is primarily focused on Greenland and Faroe Islands, what we call the North. And for the south, we have the Maldives and our activities sit in Portugal, which is very much related to the activities in the former Portuguese colonies. Totally 2021, we were slightly above our latest guidance, and we have been updating through the year. We had a revenue touching 7.2 billion for the year, and we delivered a result of 179 million. When we look at our total business, more than 90% of our total business in the group are coming from our activities in Denmark. We are today close to be 3,000 employees in the total group. Next slide, please. Part of our strategy for 2022 has very much been focused around setting the organization right after our challenging years, and part of the focus has also been divestment of our non-core activities. The divestment focus started early 2020, where we have successfully sold Lindbro to Kemper Laursen. Then throughout 2021, we have sold the activities sitting in Ayers. Ayers had four underlying activities, so we have been selling it basically piece by piece, and have of course taken a lot of the depth off the balance and bring more focus into our core activities. During the same period, we had a number of strategic acquisitions. It's not a major acquisitions as when we look at the total group, but it has been acquisitions that has had a strategic important element for us related to Madu in Greenland, which is more into the security on the projects. We have RTS, which is the construction on the Faroe Islands. And then we have successfully been acquiring Ravnstrup, which give us a NemByg, which give us a much better geographic footprint, especially in the western part of Denmark. We have only acquired 60% of NemByg and have the former management team still part of the company and also part of the ownership. Especially Ravnstrup and NemByg has been important for the geographic coverage of Enemærke Petersen, and also give us a new focus on service jobs, which will have more focus in the coming years. Next slide, please. We have in 2021 seen positive developments on basically all our key figures. Our revenue is up at 25%, which has been important to show the market that our strategy is paying off. We have seen a market with in average 7-8%, so we are able to beat the growth in the market, and we are very happy with that trend. We have seen a result saying 17 here is 179 million, as mentioned before, and that is up with 72%, and that is continuing a development we have seen also in 2020, and that is that trend we have to continue also in 2022. Part of the momentum in 21 has very much also been focused on reducing our debt, of course, strongly supported of selling the IaaS activities where we have been able to free up cash. IaaS was heavy on investments, and it has and we have been using that free of cash to reduce debt and of course improve our balance sheet. Overall, our order intake met 10 billion for the year, which is better than we expected, and is up with 35%, and of course is a satisfied result for 2021. Next slide, please. Mentioned we are happy with our order intake, and it's important to say when we are comparing with 2022, even 2022 was up compared to the year before. So we are showing a good trend, and that is a trend that we are expecting to continue also into 2022. I know that there's a lot of insecurity in the market, but we are in general happy with our pipeline. We are seeing orders getting secured also here in the beginning of the year, and looking at our pipeline, we should be able to keep the trends we have seen from the last 5 quarters. If you look at the 5 last quarters in average, we are looking at an order intake of 2.5-2.6 billion. And as we stand right now, that is the momentum we should be able to keep going forward. As mentioned before, it's very clear that the order intake in MT Højgaard Danmark and Enemærke Petersen approximately account for 80% of the group. Next slide, please. Very important slides here. Our backlog, of course, with a very high order intake, we're also seeing a backlog that are increasing. We have today a backlog of 10.8 billion, which is an all-time high backlog. Even more positive when we're looking at that order backlog is that we have still a significant number of orders that is still not booked into those figures. So when we are saying 10.8, that is the booked orders that we have been taking in. We still have, on top of that, 4 billion of orders where we have been awarded the job, but we have still not signed the contracts. We're still working with the customers to formulate the projects, but they have been awarded to MTH. We have a value here of 4 billion, where approximately 50% of that is related to the big jobs for DSB. And that is, of course, giving us even more confidence on our order book. At the same time, we have throughout 2021 been able to win a number of important strategic partnerships. And to be mentioned here is, of course, Trust2 for the commune of Copenhagen. We have also Trust2, which was a significant jobs for us. And winning Trust2 is very, very important to continue that momentum we have in Enemærke Petersen. Same time, we also were able to book the order Civica, which is refurbishment of rental buildings in Fyn. MT Højgaard Danmark have also been able to win the first strategic partnerships in 2021 for the region of Copenhagen. So looking at an order book of 10.8, and on top of that, still have awarded 4 billion, particularly for DSB, and still have also the strategic partnerships, give us a strong confidence for the coming years. And we'll of course ensure that the total group can take more long-term decisions and that give an element of confidence. Next slide, please. If you look at the market dynamics, what we have seen in 2021, and that is also carrying forward to 2022, we have seen the refurbishment market continuing developing positive. We have seen the biggest order in refurbishment ever in Enemærke Petersen with Galjebakken of 1.1 billion. And we are seeing a number of the more traditional projects, traditional size projects, both for Enemærke Petersen and MTH Denmark. In 2021 was also the year where our focus on infrastructure projects are really starting paying off. We have, if you look way back of the group, we had a focus on infrastructure projects. If you look at the last 4 or 5 years, that focus has been taken away, and we have been part of our 2022 strategy. We have tried to bring that focus back in again, and specifically target infrastructure projects in Denmark, and that has been paying off already with three important projects, and there are more to come in 2022. We are still seeing a high momentum and high investment in construction of housing and offices in Denmark, in many ways driven by pension funds that are still continuing investing into big projects in the Danish market. And the biggest projects in 2021 was Holm 8, which is the biggest project we've been booking the last number of years, and definitely the biggest project in 2021. And that is a new headquarter for AP Pension and Nykredit Bank that we are building. Looking in, as I mentioned before, we had important projects for strategic partnerships, and as already mentioned, the capital of region of Copenhagen, the Civica project in Fyn, and then the Trust 2 Copenhagen municipality. All three really important projects for us for the next 4 or 5 years. We are seeing sustainability still being a major driver in the market, and we expect the sustainability driver will increase, and we are we are preparing ourselves for that more and more. That is part of our daily life, and we are seeing an increasing demand for having projects certified, and we are also seeing an increasing focus on our box buildings from Scandibyg. So we have high expectations to the drivers of sustainability, and we believe we as a group are prepared to support the market in that direction. Next slide, please. As I mentioned just before, delivered 7.2 and 179 million on a bottom line, and that momentum we have seen from 2021 with our increased backlog, we expect to continue into 2022, where we are guiding on a total volume of 8 to 8.2 billion. We are from 2022 also giving a range that we are believing that we are going to deliver an EBIT and operation profit from 250 to 275. Important for us to show the market that we could continue delivering on our guidance and bring trust into the company and our guidance. We are confident on the figures when we're looking at our order book, and when we're looking at our improved execution of projects throughout the group. Next slide, please. We developed a strategy end of 2019, beginning 2020, a 3-year strategy called Sustainable 2022. Of course, sustainable focused on the market, but also the fact that we have to look at our figures and create a sustainable MT Højgaard holding. We believe that we are following our laid out strategy. We have 1 year left of our strategy, and are very focused on delivering on 2022. We are slowly starting up developing our new strategy for the coming 3 years. And we can see that our key focus areas in the last 3 years, or the last 2 years, in our 3-year strategy has been our 5 focus areas: employees, innovation, process, sustainability, and corporations. We are sure that those 5 focus areas will continue throughout the coming strategy period also. We as simple as it might look, but for us, we will we will only deliver with our employees. It is super, super critical that we are a company that are seen as attractive for employees, and we can attract employees and maintain our employee group. Of course, with a high growth, it is very important that we can attract, and we believe we can attract the people. We are seeing a high focus on improving processes and innovation. Of course, part of that is also going into sustainability, but we also have to improve our processes and being more reliable in the way we're delivering projects. And that is what we have been working very hard on the coming years and also have to work on in the future. We have been praying internal and to our external market that we want to be seen as a company and an employer who are very strong in cooperations with our clients and also internal in the group. Might again look very simple, but it is a DNA that we have to have in throughout the company and throughout the Danish building and construction business. We have to improve the cooperations with our customers. We are seeing too many conflicts, and that has we have to show that the direction to start with internal in the group. So that is a major focus area for us. The coming years will very much have focus on continuity. We are not here to flip the whole thing upside down. We have started a momentum that is strong, and we have to show that continuity throughout the coming years. We will be ambitious, but we also throughout that we have to make sure that we build flexibility to adjust to the market. We have seen a number of impacts the coming years, both the COVID-19 and potentially now also with the crisis of Ukraine, that we have to have inbuilt flexibility to deal with the different perspectives coming in the coming years. And then we have to make sure that we continue, as we have seen the last couple of years. We have to be very much focused on getting things done. We should not make it more complicated than it is, and we need to make absolutely sure that we still continue delivering putting our responsibility into the projects. So we are taking the right decision and right actions where the decision is best taken. Yeah, we're looking forward to present the coming strategy towards the end of the year, and then the final slides, just indicating the development of the share price, and also give an overview of the ownership of the shares. We have close to 60% sitting with fixed ownership, of course, towards the original funds on the Knud Højgaards Fond, and also from the original MT funds. We are maintaining our policy for dividends, and are working towards a situation where we can pay out dividends again as a group. I think that was the presentation, the 20 minutes from MT Højgaard Holding, and I'm ready to take questions, Benjamin, if needed.
Thank you very much, Martin, for the great presentation. To start out with, for the people who might be more new to the case, could you just give a brief comment on how your supply chain is developing, especially regarding COVID and Russia-Ukraine, and how the supply chain is thought of when you do go into new contracts?
We are sitting with Danish projects, and of course are also depending primarily on Danish suppliers and Scandinavian Northern Europe suppliers. When we are moving into new projects, it is very important that we have our supply covered. We cannot hedge currency or oil prices, but we have to have back-to-back agreements with our suppliers. So we have basically sitting back with fixed prices and have as much as possible covered. We have throughout the COVID tried together with the customers to lock in prices and lock in supplies as early as possible. And that has for the last couple of years been working quite successful. Of course, there has been fluctuations on the prices, but when we are looking at the last couple of years, we have been able to absorb those prices into the projects and in cooperations with our end customers.
Thank you very much, Martin.
Of course, we are sitting in a new situation with Ukraine, and we have to monitor that very, very close. And of course, the situation is new. We have very much focus on if we had any supplies coming from Russia or Ukraine, and we believe at this stage we have that under control and are not depending on Russian supply or Ukraine supply.
That is duly noted. Thank you, Martin. For the second question, for the people who are a bit more new to the case, your Sustainable 22 strategy is almost coming to an end, and you are going into a new phase with a new strategy coming this year. Could you just give a brief comment on how you see MT Højgaard's position now entering a new strategy for the next 3 years versus how MT Højgaard looked when you entered the Sustainable 2022?
Yeah, I think that the situation is very different. First of all, when we are sitting at end of 2019 to beginning 2020, we were relatively short-term thinking when we were looking at the strategy. We had to be short-term thinking due to the financial situation of the company back in 2018-19. We have today an order portfolio, an order book that gives us a better chance to be have more long-term focus, and of course we should use that when we're looking at the next 2 years. But we also have to say that when we have been successful at the last couple of years, we have to replicate some of that into the coming years. And I think I hinted a little bit. We don't want to have to make it more complicated than it is. We will continue having a strong focus on our organization and put as much responsibility into the 5 operating units. When we are making a new strategy from the holding, it will still be a frame strategy as a holding, and then we develop 5 individual strategies in the 5 portfolio companies. We have 5 portfolio companies that are all now part of the core strategy, and of course there are similarities, but the 5 companies are also have different elements in the market position, and they also have different maturity level, and that has to be adopted. We will not bring in one strategy fits all. We will have a group strategy, and under that we will make 5 individual strategies.
Thank you, Martin. And then just time for a last question. We did hear about your order backlog, and it is, I mean, I think everybody agrees it's very, very strong. You do mention that you are seeing the current trend of around 2.5 billion per quarter to be reasonable for next coming year. Could you just give us a brief indication of which underlying projects could be driving this? Are we looking at projects? Are we looking at infrastructure? Which sort of elements or segments are we looking at?
Yeah, but that is basically the segments we mentioned before, and we do not have a target to specific go after new buildings or refurbishment or infrastructure. We will still try to be relative spread on that. We have been gaining from also having a fairly good spread between private investors, public customers, and also pension funds. And that spread is important to keep also for the coming years. So we try to be a relative spread and are not totally dependent on one sector. On the other hand, you will not see us going into new projects. I mean, and new sectors. We will continue as we have focused the last couple of years, and we will also see that in 2022. And we are expecting that the market will give us that. We have to keep in mind part of our order intake in 2022 will of course come from our strategic partnerships, and that will give us I expect that will give us a strong momentum throughout the year.
Thank you very much, Martin. One last question. We know we spoke about some of your current big projects that are already ongoing. Could you just, for the last minute here, give us an indication of how these projects are progressing?
We are fairly confident on the projects that we have been booking the last couple of years. We are seeing projects, the big project Holmode. We are also seeing the project for Rønne Havn. We are seeing the project for the big project in ARP are executing time-wise as it stands right now as expected, and the big surprises that we have seen in the past we have still not seen Of course, this is still project business, and we have to be very focused. But the jobs we have seen coming in the last couple of years are basically executed on time and on budget as expected.
Thank you very much, Martin. Due to the time, we'll have to conclude the presentation here. But again, thank you very much for being here today and participating.
Thank you.
Have a good day.
Nice. Bye-bye.
Hi and welcome everyone to today's presentation of Projektengagemang. My name is Stefan Knutsson. I'm an equity analyst covering the company here at ABG. And with me today I have the CEO, Helena Hed. Welcome, Helena.
Thank you very much. Today I look forward to talk to you about Projektengagemang and our focus to be experts within buildings. I want to tell you a little bit about our journey from 2006 until today, and also our focus forward. And I look forward to answer some questions in the end too. So if we could go to the next slide, please. We focus on buildings. We are one of Sweden's leading technical and architectural companies, one of the 10 largest companies in Sweden. What we do, we focus to renew the society with innovative and sustainable solutions. And our engineers, architects, and experts, they shape the future of tomorrow. And we offer services throughout the whole life cycle of a building, but also what's within it and around it. Every year we have a revenue of about 1 billion Swedish crowns, and you find us on 20 different locations in Sweden, close to our customers with strong, focused teams. So if we go to the next slide, please. I would like to tell you a little bit about our projects, but first, every year we do more than 13,000 projects to more than 4,000 clients. So our engineers, our architects, our specialists, they focus on what's in and around buildings. And everything in our industry is driven by the big global trends as globalization, it's urbanization, digitalization, and to combat climate change. So our consultants are needed to make the difference. So there's a stable and solid demand of our services. These are a few projects that we made during 2021 and also going forward, looking for instance at the Citygate. Citygate in Gothenburg is the largest office building in the Nordic countries. It's 144 meters high, and we, Project Engagemang, PE, we are the main constructors and designers of the frame. If we look at, for instance, Ångströms Laboratoriet, this is one of the larger buildings at the university in Uppsala. Our architects, our landscape architects, been involved, as well as our engineers, as well as looking to telecom and electricity, and we also been able to have the whole contract for all the consultants at Ångströms Laboratoriet, a really impressive project. And finally, looking at the Tram Museum in Stockholm, this is an old building, and we have the possibility to have the whole contract where we renew the Tram Museum. So these are a few of the projects where we are involved and where we can make a difference. So if we go to the next slide, please. Our history started in 2006, and today we are a multidisciplinary consultant company with all the different kinds of expertise needed. What we do is we create the future, the cities, and the society of tomorrow. And our history and growth journey, it's been organic growth, but also by acquisitions. So in the beginning, 2006 until 11, we see this as a startup phase. Then we start to build a critical mass, and now we have a foundation for future growth. In 2018, we were listed on the stock market on Nordic Small Cap, and we have had a small tough start since the introduction. In 2019, we decided to have one company, one brand. So we went from 50 different companies to one brand, one PE, which is very important for us. Although we also had to make restructures of the company, and we had a big cost-saving program in 2019. We entered 2020 in a better shape, but then we were also affected by the pandemic. So for instance, in the fourth quarter of 2020, we had 260 employees in short-term leave, and we ended 70 employments. Although all these actions taken have been important because they created this strong platform which I see that we have to enable future profitable growth for the company. So if we go to the next slide, please. 2021 was a really eventful year for me. It was my first year as the CEO of the company. And as I said before, we took a lot of measures to have this efficient and stable platform to enable profitable growth today and in the future. We took a really focus on the strategy going forward, and I will tell you more about this further on. We also have had a strong focus on sales and on recruitment, and this gives result. What we also can see is the market has been stabilizing since it's been affected by the pandemic, and we entered 2022 in a better market condition. So if you go to the next slide, please. Our focus and our ambition is to be Sweden's leading technical consultant specialized within buildings. I can really feel that we have a strong culture in the company. And when I look at the offer we have, it's wide and it's high and it is sustainable. And when I say high, I want to say that we are one of the leading companies today in Sweden. We have a very strong position on the tall buildings in Sweden. But when I say high, I also look at the high competence within all our employees. When I say wide, we have a multidisciplinary skills. We do everything from preschools to schools, to hospitals, to commercial buildings, to properties where we live. We work with old buildings, new buildings. We help museums, as you saw, and we help the Swedish Army. So it's a very wide and multidisciplinary skill. And it's a very broad and wide base of clients and a wide range of projects where we work. And it's a stable demand. And when I say sustainable, for us, it's very important that every day we work with sustainable and innovative solutions. It's important to have a sustainable business, and it's important for us to have a sustainable workplace. So sustainability in everything that we do, in the projects, but also developing our employees. So if we go to the next slide, please. Our focus forward is to continue to be a committed partner, a long-term partner to our customers. We want them to recommend us, and we want them to choose us over and over again as their partner. What we do is that we develop and grow in our core areas, and that's everything within and around the buildings, within architecture, within consultancy with engineers and specialists. We are a creative and learning organization, and for me and us, it's very important to build the competence within all our employees. We can contribute to combating climate change, and for me and us, it's very important that in every assignment we do, we can make the sustainability a little bit better all the time. So every assignment is important. Every time we can contribute to the sustainable society development. And of course, we use new technology and digitalization to be in the front line. So if you go to the next slide, please. So what we've been doing during 2021, it's concentrating to our core areas. It's focusing, it's streamlining the company, everything aiming to be a better partner and also to be able to have long-term profitable growth. One measure we taken is to focus our business to Sweden. That means that we ended our involvement in India. So our customers are customers in Sweden. We also choose to divest our railway expertise. That was not a part of our core business and also an unprofitable part of the business. So in September, we divested the railway expertise. We also decided to move out some parts of process and product development in order to really focus on what we do best. And finally, we also chose to decentralize our organization, taking away one management level and also merging business areas to larger units. And this has given us a more sales-focused, more customer-focused organization with the clients always in the sight. So if we go to the next slide, please. During the last year, we also updated our financial targets, and this is to reflect the potential we see, the great potential I see going forward. So the EBITDA margin is 10% over time, and I see that there's no reason why PE should not have the same margin level as other leading companies within the industry. So 10% EBITDA margin over time, and we also have a 15% growth over time. And this includes the organic growth, but also acquisitions. So if we go to the next slide, please. It is very important for us to grow. So during last year and also during 2022, we have a lot of focus on the organic growth. For instance, we work a lot with our culture and the leadership development, and I can see this gives results. Last year and this year, we have top scores in employee satisfaction and also in customer satisfaction. So we have top record in the eNPS and also in the NPS, two KPIs which are very important for us. And also, we welcomed a record number of new colleagues in 2021. So we will continue to focus on the activities that will enable organic growth going forward. So if we go to the next slide, please. If I make a short summary and a short outlook, we have chosen this strategic focus, which strengthen our position going forward. So by 2025, we are the leading technical consultant and architects in Sweden, and we focus on buildings. This is important for us. The focus and looking forward has made a difference for us. We can see that the sales activities has improved the order intake, and we have stable demand on our service. So we entered 2022 in a much better shape with a better order intake and a better order backlog than before. We will continue focus on recruitment and sales. That's very important to us to create the highest customer value, the best workplace, which will give us the long-term profitable growth. And we will also supplement organic growth with strategic acquisitions around the country within Sweden. And we can also see this positive market condition, although of course everyone look at Ukraine and Russia, and it's devastating what's happening. So except for these unpredictable external factors, we see a positive market condition. And there is always a demand of building and renewing society. The architects, the engineers, and specialists are needed to create sustainable future together. So I feel very proud and very convinced that all the actions we have taken, all the measures we've chosen, the focus we have in the business will give result. And I see this journey to take PE to full potential as the best thing I could do. It's been a really good and nice year 2021, and I look forward to the journey forward with the company. And with that said, Stefan, I know you have some questions.
Presentation, Helena. And as you said, you have been about or roughly more than a year with PE now. What would you say that you're most proud of and are the key lessons, and what is still to be done?
I'm very proud of all the employees working with the culture, working with making a lot of new employees. We signed 156 new contracts with new employees last year. That makes me very proud. I'm also very proud of the management team with the focus and with this strategic direction which we put up and the platform we now have going forward. So the culture and all the employees.
Perfect. And then if we look some more on the business side, I mean, the market conditions seem to be good going into 2022. Unfortunately, now we have to talk about Russia's invasion of Ukraine. You're a Swedish company, obviously you don't have any direct exposure to that, but do you see any change from your customers that they are more maybe not as quick to make decisions or anything on that side?
Not yet. As you said, we are a Swedish company. We help the Swedish clients in Sweden. We don't have any assignments in Russia or Ukraine. We don't have any employees in Russia or Ukraine. And we can still see that all our clients are working with a focus going forward. But of course, everyone is considered about what will the next step be. But still, what we do, it's long-term projects. So from the first idea of a house, for instance, it can take 10 to 15 years before it's constructed. So still we see that the clients are going on.
Perfect. And another thing that we have witnessed is soaring energy prices in Europe as a consequence of this invasion. I mean, you have sustainability as one of your core values. Do you think that you can actually have increased demand from customers looking to make the buildings more energy efficient as a solution to this problem?
Definitely, and this is what we work with all the time, to make more energy efficient solutions. So the demand is increasing even more now and today and going forward.
Perfect. And I know that during 2021 you had decline in revenues overall for the group. Part of that was because you had fewer employees at the beginning of the year, and then you did in 2020. The situation looks similar now with you entering 2022 with less employees than you had last year. But what would you say is different this time around?
I can see that now we have this platform ongoing. We have the sales and the recruitment process going on. We also have this better order backlog, better order intake, and we have this stable platform going forward. So I see that we will have the organic growth going on during 2022.
Perfect. And in the year-end report, you reported substantially improving employee promoter scores and also net promoter scores from your customers. How important would you say that this will be for PE going forward?
Very important. The employee satisfaction and the client satisfaction it's very important. To be number one, that means to be the first choice for the employees and for the clients. So for me, this is a very positive sign for us and for the future.
And can you give some examples on what you think have been the drivers of these improvements?
A lot about the culture, a lot about leadership. For instance, more than half of all our leaders are entering and going our leadership program. We work a lot with our, for instance, what is the best workplace and how can we together shape the best workplace. So it's a lot about the culture trip that we are going through at this time, but also asking the clients, what do you think is good? What can we do better? How can we help you even more? So the more focus we have on the client and the client satisfaction, that also gains the employee satisfaction, which also gains better results, both in the projects but also in the margin EBITDA.
Perfect. And if we look on the employee side, I know most forecasts sees that engineers is a shortage in Sweden, and that there is no short-term solution to this. How much would you say this is an issue for PE, and how do you work with attracting talent and also maintaining talent within the organization?
I think that this is a problem for the whole industry. And it is a lack of both architects, it's a lack of engineers who know construction, or engineers who know energy efficiency or sustainability. So to win the battle is to have this, as I said, the best workplace where employees can feel that they can develop, that we build people, that they can get new challenges in their job, to have the great leadership and a good culture, and that we together shape the workplace, a sustainable workplace where we want to work for a long time. So I think that's very important for us. And that's to win the battle, because it is, as you said, a lack of engineers.
Perfect. And then some on the financial side, you reported an EBITDA margin of 5.6% for 2021, and you have a financial target of 10% EBITDA margin. What would you say will be needed in order to reach that level of profitability?
I think organic growth is very important for us. Also, of course, the billing ratio and also the hourly rates. And we work with all these three parameters.
And in Q4, you actually had improvements in two of the business areas, whereas the installation segment had some problems. Would you say that it's mostly to turn the installation side around in order to gain traction on the margin target, or how do you view it?
I see that we have great potential in architecture and in engineering too, so we can still raise our EBITDA margin, and we need to make the structural changes within systems. But I also want to say that in systems, we were more affected by the pandemic. We had assignments that were stopped and did not start as early as, for instance, the architects. And what's important to understand that the architects are very early in the business cycle, so it's a positive side that the architects are really developing so well right now.
Perfect. And then lastly, historically, Projektengagemang has been quite active with acquisitions. It has been more quiet now for the last 2 years. But as we saw with your revenue target, I suspect that acquisitions will be an important part going forward. And I just want to hear more about your thesis there, and if you do any progress on that side.
The M&A agenda is important for us, and we will continue growing with acquisitions. And for us, I think this focus within building, it's also driving the M&A agenda and makes it easier for us to find the perfect match companies that will develop within PE Projektengagemang companies, that we together can make even better projects for the clients. So we will continue with the M&A agenda, and it will be strategic acquisitions that we will make, both acquisitions that will help us to grow on different kind of locations, but also who will bring new competences to the company.
And this focus of being, specialized on buildings, would you say, how much would you say that this decreases the potential targets that are out there?
Not that much.
Perfect. Then I will look forward to following you during this year, and hopefully see the improvements that you are talking about.
Thank you.
Hi, and welcome back to Investor Day here with ABG and Introduce. My name is Victor Kruger. I'm a real estate analyst for the equity team here at ABG. Our next company to present is Stendörren Fastigheter, and with us we have the CEO Erik Ranje and CFO Per-Henrik Karlsson. So with that, I'll leave the word over to you guys.
Okay, thank you very much. Again, yes, my name is Erik Ranje and I'm the CEO of Stendörren since 2 years ago. Yeah.
Yes, Per-Henrik Karlsson, CFO at Stendörren. I've worked with Stendörren for about 3 years now.
So if we jump into the presentation, basically we are a listed real estate growth company. We focus on light industrial, warehouse and logistics, and our property portfolio is located in the growth area in Sweden, i.e. the greater Stockholm region. We also, as you may have seen in the press release today, we also do residential. We, within our existing property portfolio, we rezone land into residential for the purpose of further development and keeping it under management. And that is a business model that works very well in our most urban areas. You could say that Stendörren has a market opportunity in the sense that we are a derivative on a few macro trends. One is urbanization. A large part of our property portfolio is located in the greater Stockholm region. But also another macro trend is e-commerce, which obviously generates a very high demand on logistics assets, and a relevant part of our property portfolio is logistics, and in particular when it comes to our development portfolio. So we keep under management, we develop and we buy real estate within light industrial logistics and warehouse. If we go to the next page here, a few data points on Stendörren. We have a property portfolio of around 11.7 billion, so it's a relatively small listed company. Market cap slightly less than 7 billion SEK. We have a yield of 5.6%, i.e. we are in an asset class with relatively high yield, and we have long lease duration. On average, remaining lease duration is 3.7 years, so it's high yielding, long leases, i.e. very stable cash flow, and that paired with LTV below 50% gives a lot of stability. But we also perceive ourselves as a growth company. We have standing asset around 790,000 square meters, but we have in relation to that a very large building rights portfolio of around 650,000 square meters, so some 80% more. I will skip the next page in the interest of time here. The background of Stendörren. Stendörren was founded 2014 as a carve out from Kvalitena and put under separate management and listed on the stock exchange, First North at that point in time. Stendörren has always been a growth company. The growth has been almost exclusively acquisition driven. We continue that acquisition-driven growth journey, and we are actually accelerating it because, as you may have seen, we have added new markets. We entered into Copenhagen last year and also Oslo. We also made a few acquisitions in Borås, west of Sweden. So we're adding more hunting ground, you could say, to accelerate growth. And in addition to that, we also have accelerated our building rights or development activities. We have submitted a large number and also obtained a large number of building permits. So that's a bit of the background. The business model and what we do to sort of capitalize on the potential in Stendörren. We have, as I said initially, a very stable cash flow as a result of the fact that we are in the high-yielding logistics, light industrial, and warehouse segment. Long leases, but we also have a sustainable growth potential. The fact that we have a large part of our property portfolio in urban areas, 1/3 is in the Stockholm municipality, where land is scarce. There we have an increasing demand of square meters from tenants, but at the same time, there is a conversion potential into residential, which means that the number of square meters in our sector in urban areas is, if not decreasing, at least not increasing. And if demand increases and supply does not increase or even decrease, then rent increases a lot. And if you look in our latest quarterly reports, you will see that on average, we, upon renegotiation of leases at maturity, increases the rents with roughly 25%. So there is an embedded lease growth potential in our asset class in our location, i.e. urban areas. We generally see high increasing demand for logistics space, both in urban areas but outside of urban areas. That is very much e-commerce driven. I've seen different statistics on this, but around $1 billion of US sales e-commerce requires 1 million square feet of logistic space. And that is approximately 3 times more logistic space than traditional retail needs. So the growth, but also the migration into e-commerce generates need for logistics square meters. And then obviously, if we talk about growth, we are continuing to buy properties. We have a very value accretive acquisition model where we buy properties off market, basically property by property, where we can acquire properties at, in our opinion, a lot higher yield than would have been the case had it been a larger portfolio in a competitive auction. An additional source of growth is, as I've said, the building rights portfolio, 650,000 square meters, very much within logistics, light industrial, but also residential. If you go a little bit more into the detail when it comes to our portfolio, excuse me, the stability of the cash flow, approximately 2/3 of our property portfolio is within light industrial and logistics and warehouse. 1/3 of the portfolio is within the Stockholm municipality, i.e. urban areas. 1/3 is in greater Stockholm area, and an additional third is in Mälardalen, which for those of you who are not Swedes is the, let's say, the greater Stockholm area then. In a high yielding segment. The lease profile is very granulated as well. Our largest tenant is around 10% of the lease cash flow, and that is Coop Logistics within groceries, which is basically retail, grocery retail. We have tenants from engineering, such as Alfa Laval, medtech, such as Bactiguard. We have also some municipality tenants, Nacka Vatten and also Uppsala Vatten. So we have a very granulated and diversified tenant base with some 800 tenants, and the lease profile is fairly evenly distributed over time. If we go into the growth, this is, I will keep this very short because this is sort of, you know, all of this, but the Stockholm region is growing regardless of if you measure it by GDP, population, consumer spending, GDP per capita. We are located in growth region. And secondly, we have an exposure towards e-commerce in the sense that both within our existing property portfolio, but more in particular within our development portfolio, we have logistics potential. We will go into that a little bit further on. Actually, we can go to that straight away. Here, this is an overview of our development portfolio. As you can see, this is future projects. We have in total 650,000 square meters of building rights in comparison to the 790,000 square meters of standing asset, and most of it is zoned land already. It's basically just to submit a building permit application. There are some projects that may require rezoning or that will require rezoning over time, but mostly it is in good locations, in reasonably urban areas, already zoned land for industrial use. Our existing project pipeline, we have some 40,000 square meters, which we are working on a daily basis, so to say. Most of it are projects for which we have already obtained building permit. And it's both within logistics, light industrial, and residential. We, as I said, sent a press release this morning that we have received building permit for our first residential project. That is the first stage of this project that you see on the screen. I think it was 326 apartments. And this is a very good example of the industrial logic or link between what we do within light industrial, warehouse and logistics on one side, but also residential on the other side, because it's obviously very different asset classes. But here, this was an asset that we acquired 2016 as a yielding asset, but with a very low plot ratio, i.e. large land plot, relatively small building, we can erect more buildings on the spot. We drove rezoning project, and the residential buildings that you see around here it's just empty land right now. So these are illustrations or renderings to show what it will look like. But this is a very typical example of how we can use change the use into something more valuable, i.e. residential on land plots with a low plot ratio. A few words on sustainability. We are right now working on a new sustainability strategy. Will be presented in the annual report end April, and it will contain a little bit more of the same, but with a little bit higher ambition. But nonetheless, we're proud of the fact that under the existing sustainability strategy, we have accomplished quite, in my opinion, impressive things, reducing the CO2 emission per square meter with more than 50%. We have decreased energy intensity by square meter again, so it's comparable, and also migrated over time into more renewable energy sources. As a first slide on the financial part of this presentation, some data points on the full year 2021. Within asset management, we implemented some change, primarily on the letting side, end 2020, which basically gave a strong effect already. We changed the way we worked in a very fundamental way to improve the letting activity, and that again had an immediate effect. We are very proud of the development on the letting side, where we have had net letting of 40 million during 2021. And unfortunately, our second largest tenant went bankrupt second quarter 2021, and had that not happened, the net letting would have been 57%. This is nonetheless a result of implemented changes, a new way of working, which means that this is a sustainable improvement and not one-offs, in my opinion. Again, I mentioned the fact that the combination of our asset class located in urban areas or in growth regions gives a very strong rent potential. On average, during 2021, renegotiated leases gave us an increase on those leases with an average of 22%, which is a very strong figure. And also that is an underlying trend or an embedded growth component in our portfolio. So that's, in my opinion, also sustainable. Within the development side, we have since let's say 18 months gone through and analyzed on a property by property basis the full property portfolio, which we have found quite a large number of very attractive projects. We have submitted 6 applications during 2021, and we obtained 3 building permits during 2021. And another one, or actually yesterday, one more, and I think it was end January one as well. So yeah, that's on the development side, strong progress as well. On acquisition side, we made 11 acquisitions during 2021, worth 750 million. 3 of them were in Denmark during 2021. Then we made another acquisition early 2022 in Denmark, Copenhagen. We also made an acquisition in Oslo, and we expanded into west of Sweden, i.e. Borås, Viared. So strong achievements there. Also off-market deals at attractive yield levels. And all this has fueled through in our financials, as you can see, with quite strong performance on both net letting, return on equity, and net asset value growth.
Yes. Next slide is our financial year 2021, and we had a strong financial year with a rental income of 653 million, an NOI of 488 million, and a net profit of 1.2 billion, LTV of 46%, and equity ratio of 43%. And also, as we mentioned before, a property value of 11.7 billion. Next slide is some financial key metrics. Up to the left, you can see our property value, and we are growing property portfolio, both in number of properties, but also when it comes to value. We have a stable and improving ICR, and it was 3.0 at year end. Down to the left, we have property from property management, also increasing and more stable since Q1 2020, and was for the full year 267 million. And we have a strong balance sheet, solid balance sheet, an equity ratio of 43%, as I mentioned before. Next slide is our net income walk, where we start our walk at the rental value of 734 million, vacancy worth 81 million, and other income of 3 million, which gives us the total income of 656 million. Property expenses of 168 gives us an NOI of 488 for full year, and then central admin 77 million, and financing costs of 144, which then will be leads to the profit of property management for 267. We also had the value changes of about almost 1.3 billion, mainly the properties, but also our derivatives. And then taxes, mainly deferred taxes of 313, which then ends up on our net income of a little bit more than 1.2 billion. Next slide is our debt funding. We had at year end a total interest-bearing debt of 5.6 billion, of which is 4.3 is secured bank debt and 1.3 billion is senior unsecured bonds. And we use several of the leading Nordic banks for our financing and approximately 60% on acquisitions. We also have a hybrid bond of 800 million. So if we look at the graph to the left, 68% of our total debt funding is secured bank debt, 20% is our senior unsecured bonds, and then 12% is our hybrid bond. When it comes to a loan maturity, we can see in the graph in the middle that we have a good spread on a maturity profile. We have average loan to maturity of 2.4 years and an average interest rate of 1.9%. And also, if we include our interest caps and swaps, the average interest fixing is 3.7 years at year end. Next slide is our share value. We've had this graph starts at 2018, and as you can see, we have increasing share price, but also increasing equity and NAV. But this, of course, after year end, some things has happened also with the share price. Next slide, I will go shortly on this. This is our top 10 shareholders, and to the right, you see our share price development. The final slide is our assessed earnings capacity. Our assessment is that as of Q4 2021, for a rolling 12-month basis, our total rental income will be 705 million, and our property cost will be about 158 million, which gives us an expected NOI of 547 million. Thank you.
Thank you. Thank you both. You have one of your financial goals is to grow your NAV by 15% at least annually per year. Could you break that down a bit more in terms of cash flow, leverage, project, etc., where you see that this growth will stem from?
I think it will primarily come from the development portfolio. But I mean, if we say that on an annual basis, our renegotiated leases increase with 25%. Obviously, that is the ones that are renegotiated during the year, which is obviously not the full all leases, but especially considering that we have an average lease duration of 3.7 years approximately, then obviously the 25%. We will not have a sort of huge effect each and every year. And then on acquisition, we do off-market deals, tend to be relatively small deals. So it's difficult to build scale and volume by doing that. So I think the largest potential is by far the development portfolio. And that's a good thing because we have the building rights portfolio already, and land is the most scarce resource in our business. So we already have the scarce resources just to get going basically, and it's already zoned land to the largest extent in very good locations.
Yeah.
So from the development portfolio basically.
And you had around 250 million invested in existing properties in 2021. How much on average was into projects and how much was into tenant adjustments?
Since we basically started going through our property portfolio some 18 months ago, we have not been in a, let's say, capital intensive execution phase yet. So most of it is tenant improvement and, let's say, general real estate investments. But once we get into more an execution phase, and with that I mean erecting buildings, then it starts to obviously consume capital. So that's ahead of us.
Is that ahead of us by half a year, or do you think it's 2 years ahead? Or?
No, we are. I mean, it depends on what kind of volumes you mean, but we have started to build a couple of our logistics and light industrial assets already in 4 locations already. We are up and building, so it's happening as we speak. Hopefully.
I'm sure. And if we just look a bit to the other markets as well, as you've expanded into recently, Denmark and Norway, how would you explain the differences, the main differences in those markets compared to what you have in Sweden?
I mean, what we like is where our asset class and location meets. It is light industrial, logistics and warehouse in reasonably urban locations. So we want to have the same, we want to have that commercial dynamics, you could say. We want to have, we like the asset class, we like the micro location. We just changed the macro, i.e. Oslo and Copenhagen, but we want to have more of the same. And then adding more hunting ground. So in that sense, the rationale is not different from what we have done in Stockholm and Sweden. However, the market dynamics is a little bit different. It's faster in Oslo, for example. It's more difficult to chase or to get volumes to buy there. It has been obviously easier in Copenhagen since we have made 4 acquisitions already. I think the total purchase price is just below 250 million SEK in Copenhagen.
And do you view the outlook for those two countries? How do you view the outlook for those two countries?
I mean, we hadn't made the first acquisitions unless we thought that we could build critical mass within a reasonable time frame. So that is our aim, to build a reasonably sizable portfolio in each of those markets.
And establish an organization there too?
Yeah, well, if you go through all the leases, you would see that they have both been fully let on long leases, and in general there is a lot of responsibility lies on the tenant, which means that we have bought fairly asset management light properties. But over time, yes, we need to have an organization there. But now we have arranged it in another way. We basically outsourced it. But then again, they are asset management light.
And just the last question, you mentioned a few times during the presentation how you can how you can raise your existing rents on renegotiations by around 20%. You did on average in 2021, and you sounded quite optimistic on the outlook for the coming years due to the demand situation or the demand supply.
That is hopefully a result of that we have done a very good job, but it's also a result of that is characteristics which lies within this asset class and these kinds of locations. So that's sustainable. What we have done, we have made some changes on the letting side, as I mentioned. I think one part of them is that we really go through each and every lease that matures within the next 12 months and compare it to what can be achieved upon a renegotiation. And we put a red flag on that particular lease. So we really have made an assessment on each and every lease that's maturing within the next 12 months to really push rents to the right level.
Okay.
And that's the same thing that we have done with the property portfolio to find more projects. We have the head of asset management, head of development, myself, and a few others, the property manager, of course, have gone through each and every property twice to find properties with low plot ratios, where we can knock buildings down and build something more valuable. Really have a business plan session on each and every property, and that is what we see in the project pipeline here. So it's just nitty-gritty work.
That's good. And for the ones that you flag, you mean that you pinpoint the ones out that have the lowest rent, and then you will try to renegotiate them next?
Yes, exactly.
Yeah.
So.
Clear. All right. That's our presentation for today. Thank you for being with us.
Thank you very much.
Thank you.
Hej och välkomna tillbaka till ABG Investor Days. Vårt nästa företag är Trianon och jag som fastighetsanalytiker heter Viktor Kryger och vill lämna över ordet till vd Olof Andersson och kommunikationschef Nina Gilliam.
Tack så mycket och välkommen till vår presentation av Trianon där vi kommer att berätta om fjärde kvartalet och om vår bokslutskommuniké 2021. Jag heter Nina Gilliam och är kommunikationschef och bredvid mig har jag...
Och jag heter Olof Andersson och är vd i bolaget.
Då kan vi byta bild. Då byter vi bild här. Trianons, nej det var en bild före där.
Presentation.
Där var en annan presentation på engelska där vi har vår affärsidé också som vi har skickat till er. Men annars...
vi ger oss direkt på våra Q4-siffror som är ännu ett starkt kvartal. Vi hade hyresintäkter på 160 miljoner och det är en ökning med 8%. Vårt driftnetto ökade med 3% till 102 miljoner och så hade vi ett förvaltningsresultat som ökade med 19% till 64 miljoner kronor. Periodens resultat blev 532 miljoner och det motsvarar per aktie 13 kronor och 64 öre. Vi har som mål att vi ska öka vårt förvaltningsresultat med 12% årligen och i Q3 hade vi en lite lägre tillväxt med 3% och förklaringen där var att vi sålde fastigheter först och köpte sen och att tillväxten skulle komma tillbaka och det gör den här nu i Q4 när vi är uppe i 19% tillväxt i förvaltningsresultatet. Vi kan ta nästa bild. Och här har vi siffrorna på hela år 2021. 2021 var det mest lönsamma året i Trianons historia. Vi ökar våra hyresintäkter med 12% till 618 miljoner, driftnettot med 7% till 396 miljoner och förvaltningsresultat ökar med 13% till 253 miljoner. Och totalt periodens resultat så gör vi ett resultat på 1,3 miljarder och det ger en avkastning på eget kapital på hela 31%. Och motsvarar per aktie 33 kronor och 64 öre. Så det var väldigt händelserikt och lönsamt 2021 som vi har lagt i handlingarna. Och vi kan ta nästa bild. Våra finansiella mål. Förvaltningsresultatet ska öka med 12% årligen. Och där hade vi ett utfall på 13. Avkastning på eget kapital ska också vara 12% årligen över en konjunkturcykel. Där ökar vi med 31%. Eller hade en avkastning på 31%. Och belåningsgraden ska vara högst 60% och där ligger vi på 53,5% för närvarande. Räntetäckningsgraden ska vara 1,5 gånger vi haft och vi har haft styrelsen i Trianon tagit beslut på en ny affärsplan här i november månad och uppdaterat våra finansiella mål och våra hållbarhetsmål. Och då har vi ändrat räntetäckningsgraden att den ska vara 1,75 gånger. Men vi har god marginal, vi har 3,2 gånger i utfall 2021. Och sen har vi andelen bostäder och samhällsfastigheter. Vi har satt som mål att vi ska 80% bostäder och samhällsfastigheter. Det har vi arbetat mot i några år här nu och nu är vi uppe i 85%. Vi kommer fortfarande jobba med att ha en hög andel bostäder och samhällsfastigheter men vi ändrar det målet här och vi ska leverera en investeringsvinst från vår projektportfölj här framöver från och med 2022 fram till 2024 med 100 miljoner kronor årligen i investeringsvinster. Och här har vi viktiga händelser under Q4. Vi gjorde en nyemission på 1,5 miljoner aktier i november månad och vi tillfördes nästan 400 miljoner kronor för emissionskostnader. Vi förvärvade 174 lägenheter på ett av de absolut bästa lägena i Malmö, ett väldigt välskött bestånd för 630 miljoner kronor. Vi förvärvade en samhällsfastighet och en handelsfastighet ute i ett av våra områden på Hermesdal. Och en utvecklingsfastighet med möjlig byggrätt. Det var också väldigt glädjande att vi fick igenom 2 stora detaljplaner för produktion av bostäder. Så nu har vi möjlighet att byggstarta ytterligare 500 lägenheter på Rosengård och Norra Sorgenfri i Malmö. Så där detaljplanerna har vunnit laga kraft. Och vi har byggstartat i Hyllie och vi har byggstartat i Segerpark, och det har vi också gjort innan årsskiftet så att vi fick med dem under det här investeringsstödet. Och sen har vi, som jag sa tidigare, beslutat om uppdaterade finansiella mål och hållbarhetsmål avseende 2022 till 2024. Vi tar nästa bild. Här har ni resultaträkningen. Vi har varit inne på de här siffrorna. Jag kan kommentera lite här värdeförändringarna på förvaltningsfastigheter på 608 miljoner. Vi verkar ju i en väldigt stark marknad och med en yieldkompression neråt, så att det har ju påverkat värdena på våra fastigheter positivt. Och sen kan ni också se här att vi har en överskottsgrad på 63,5%. Det är 3,5% lägre än vad vi hade under samma period i 2020, och det har ju förklaringen där är ju att energikostnaderna som har varit mycket dyrare under kvartalet, och det har vi också tagit höjd för här i vår intjäningsförmåga som vi kommer in på lite senare här framöver. Vi kan ta nästa bild. Här har vi balansräkningen. Vi har ett fastighetsvärde på 12,7 miljarder. En ökning under året med 34%. Vi har ett långsiktiga substansvärde på 5,7 miljarder. En ökning med 50% på ett år. Och per aktie motsvarar nästan 145 kronor. En belåningsgrad på 53,5 och en soliditet på 38,6%. Så att vi har tittar man på belåningsgrad, LTV på balansomslutningen, så är vi närmare 50% i belåningsgrad. Så vi känner oss väldigt komfortabla med det med tanke på att vi har så stor andel bostäder och samhällsfastigheter. Vi tar nästa här. Då har vi vår intjäningsförmåga. Har vi ett hyresvärde på 738 miljoner. Rabatter och vakanser på 37. Och en intjäningsförmåga per aktie på 7,48 kronor. Och fullt uthyrt, när vi får jobbat bort de här vakanserna, så har vi en intjäningsförmåga på 8,43. Och ni kan se där uppe vakanser 22,3 miljoner, men vi har kontrakterade vakanser på 11,6 och rabatter på 3,1. Och vi hade en väldigt stark uthyrning under fjolåret, och vi har fortsatt i år och med väldigt stora kontrakt som vi har satt framför allt på en av våra fastigheter, rang 3, där vi har en hel del av vakanserna. Och de här kontrakterade vakanserna, de kommer att trilla ner i förvaltningsresultat så fort vi har gjort hyresgästanpassningarna klara och hyresgästerna har flyttat in. Och det kommer att ske under året här nu. Vi kan ta nästa här. Ja. Och sen har vi våra intressebolag, intjäningsförmåga. Och vi har ett antal fastigheter som vi deläger. Det är landshövdingen på Rosengård centrum som vi ägde till 100% tidigare. Vi sålde 50% under fjolåret till Bonnier fastigheter. Och sen är det Burlöf Center som vi köpte i december 2020 som vi äger tillsammans med Wallfast i Stockholm. Och ett antal mindre fastigheter. De stora fastigheterna är Burlöf Center och Rosengård centrum. Och där har vi en intjäningsförmåga där vi har ett hyresvärde på 154 miljoner. Och vår andel för det här förvaltningsresultatet på 40 miljoner är då 50%. Så 20 miljoner kommer in i vårt resultat här. Och detta är 2 stora stadsutvecklingsprojekt. Burlöf Center har vi möjlighet att utöver de projekten vi har i egen portfölj, nyproduktionsprojekt, så har vi möjlighet att bygga upp mot 1000 lägenheter precis i anslutning till vårt center och den nya centralstationen som kommer, nya Burlöf centralstation som blir klar nästa år. Och då kommer det att komma ett tåg var 10 minut. Det kommer att ta 5 minuter in till centrala Malmö och 7 minuter till Lund. Rosengård centrum är också ett stort stadsutvecklingsprojekt, och här har vi också möjlighet med förtätning med väldigt mycket bostäder. Och det är det enda köpcentrumet i Malmö som är fullt uthyrt och vi har kö in med hyresgäster som vill in och har 70 000 besökare i veckan. Så det här två är två stora stadsutvecklingsprojekt där vi har möjlighet att skapa mycket värden framöver. Vi tar nästa. Den finansiella ställningen. Så ser ni att vi har en kapitalbildning på 2,1 år. Det är kanske relativt kort, vi jobbar lite med den, men vi är inte speciellt oroliga för kapitalbildningen eftersom bostäder, de finansieringarna blir förlängda hela tiden och har historiskt sett alltid blivit det också. Så vi känner oss väldigt trygga med det. Vi har en räntebindning på 2,7 år och en snittränta på 1,9. Vi gjorde ett stort förvärv, det var till och med det största förvärvet i bolagets historia när vi köpte ett annat börsnoterat bolag under fjolåret, Signaturfastigheter. Och det var en högre snittränta där, så vi håller på att jobba ner snitträntan nu genom omfinansieringar. Vi tar nästa.
Lite mer om våra segment. Som vi har nämnt innan så är vi nu uppe i 85% bostäder och samhälle. Där bostäder är vårt största fokus. De bostäderna är bokade till en yield på 3,6% och det köper ju inga bostäder för idag. I övrigt så har ju samhällssegmentet ökat något och handel minskat. Det beror ju till stor del, det beror ju på den här konverteringen av den ena entréfastigheten. Där vi har satt ett antal hyreskontrakt för Malmö stads gymnasieförvaltning, Statens servicecenter, vårdcentral och mera inom samhällssegmentet. Vi har en mycket liten del kontor. De flesta de ligger väldigt centralt i paradfastigheter och de behåller vi gärna, men vi köper inga nya kontorsfastigheter. Snittgilden som ni ser här, snittgilden är 3,9%. Då byter vi slide och bostäder och samhälle. Här har vi ju en bild som visar att vi renoverar ju. Vi nämnde nog det innan. Vi har ett renoveringsmål på 200 lägenheter per år och av våra lite mer än 5 000 lägenheter så är ju 68% orenoverade och har därmed en stor potential till värdeökning. Vi har en affärsmodell där vi investerar 300 000 i varje lägenhet och får en värdeökning till 500 000. Vi har jobbat på bra med renoveringarna under kvartalet och nådde på årsbasis ungefär 190 lägenheter av de här 200 som vi har som mål. Nästa bild. Och på handelssidan som Olof nämnde innan, vi har ju Rosengård centrum och Burlöv center. Men vi har också en mycket framgångsrik handel på Limhamn där allting är utgjort och även då har vi jobbat på bra här med entré som vi nämnde där man nästan är uppe i 90% uthyrning nu. Det som är väldigt framgångsrikt här i vår handel det är ju den bostadsnära handeln, närhandeln med livsmedel, apotek och sådant som man behöver när man bor i närheten med mycket låg risk. När det gäller upplevelser som är en stor del också, det har vi ju på entré haft väldigt stor framgång. Det fick tyvärr ett litet hack nu under pandemin, men där ser vi ljuset i tunneln att det kommer lyftas igen och kommer bli bra. Nästa bild, ja.
Ja, vi hade en väldigt stark uthyrning under 2021. Vi hade en nettouthyrning på 5,5 miljoner och vi tecknade totalt nya hyreskontrakt för 39 miljoner kronor. Så det kommer ju att efterhand som vi får investerat och gjort de här lokalerna klara så kommer det att ge en ökning av vårt förvaltningsresultat. Och vi har fortsatt här med en stark uthyrning även under Q1 och satt ett antal större samhällskontrakt. Så att vi har en väldigt stark marknad på uthyrning för närvarande och vi har väldigt stort fokus i bolaget på att arbeta bort våra vakanser. Tittar vi historiskt i Trianon så har vi alltid haft väldigt låga vakanser. Men detta är ju, de här vakanserna är förvärvade. Vi har gjort bra förvärv med vakanser som vi nu arbetar bort. Jag kan ta nästa bild. Och när det gäller transaktioner så verkar vi i en väldigt stark marknad. Som jag var inne på tidigare så gjorde vi i fjol ett antal större förvärv. Totalt tillfördes vi 1500 lägenheter under fjolåret och har över 5000 lägenheter för närvarande. Och vi gjorde också det största förvärvet i bolagets historia när vi köpte Signaturfastigheter som tillförde 800 nya bostäder. Det tillförde ett antal samhällsfastigheter och ett par väldigt bra byggrätter. Vi verkar i en väldigt stark marknad. Det är svårt att hitta, det är utmanande att hitta bra affärer för närvarande. Men vi utvärderar det som blir till salu i vår region. Och när det gäller bostadsfastigheter så är ju yielderna nere på mellan 2,25 och 2,75. Så att, men vi tänker inte dras med i det här. Vi ska göra bra affärer samtidigt. Och vi fokuserar på nyproduktion och uthyrning och värdeskapande investeringar på ett befintligt bestånd som ska kunna ge tillväxt. Vi tar nästa bild. Och vi har en projektportfölj där vi kan byggstarta och kommer byggstarta 700 lägenheter nu under året. Och en del av dem är redan byggstartade. Och totalt kan vi då byggstarta 1300 lägenheter 2022 till 2024. Och det här ska ju då ge en årlig investeringsvinst på minst 100 miljoner kronor. Och det kommer vi då framöver att redovisa separat så att det går att följa det här målet.
Trianon har ett förstärkt hållbarhetsarbete under vår affärsplaneperiod. Vi har ju en stor erfarenhet av hållbarhetsarbete genom åren. Vi har jobbat mycket socialt och även grönt i områdena. Malmö är ju vår bas för våra bostäder och Malmö växer ju enormt. Det är den mest växande storstaden i Sverige, men det är också en stad med utmaningar, högre arbetslöshet än snittet i Sverige och lägre inkomster. Och det behöver vi förhålla oss till. Och vad vi gör är ju att vi producerar nya lägenheter och gör det med rimliga hyror som man har råd att efterfråga och bo kvar i. När vi renoverar så gör vi det enligt vår Trianon-modell på ett sätt så att vi inte bara standardhöjer utan bibehåller rimliga hyror. Vi har satt igång ett stort arbete med kundundersökningar i Lindängen och Hermodsdal för att ta reda på vad hyresgästerna upplever och vad man behöver förbättra, vad man önskar förbättra för att det ska vara både trivsamt och tryggt. Och där kommer vi också kunna öka fastighetsvärdena. Vi har också som affärsplanemål att minska energiförbrukningen med 10% under den här perioden i vårt befintliga bestånd. Nästa bild. Händelser efter periodens utgång. Vi nämnde det. Vi har tecknat flera hyresavtal inom segmentet samhällsservice, bland annat på Limhamn men även Hyllie. Rosengård centrum och entré i Malmö och dessutom i den närliggande kommunen Burlöv i kvarteret Hanna. Och styrelsen har föreslagit årsstämman utdelning om 2 kronor per aktie och styrelsen har även föreslagit att genomföra en aktiesplit med villkor om 4-1. Nästa bild.
Ja, och det är fullt fokus framåt i bolaget. Vår strategi ligger fast. Vi fortsätter att arbeta med vår uthyrning där vi har varit framgångsrika. Vi fortsätter med värdeskapande investeringar i vårt befintliga bestånd. Det är lägenhetsrenoveringar, 200 lägenheter per år som skapar värde. Men också, som Nina var inne på här, mycket investeringar i energieffektivisering som blir viktigare och viktigare att få ner våra energikostnader. Och så är det fokus på nyproduktionen. Vi kommer att byggstarta de här 700 lägenheterna här under året och det kommer ju att skapa mycket värde för bolaget. Och sen utvärderar vi de förvärv som blir till salu, men vi köper inte på vilka yielder som helst utan vi utvärderar och så att vi ska kunna hitta bra affärer. Så med det så tackar vi och öppnar upp om det finns några frågor.
Tack så mycket. Det gör det. Jag börjar att konstatera att ni har ett mål på årlig tillväxt i ett NAV, ett substansvärde med 12%.
Nej, det är inte navet, det är förvaltningsresultatet som vi har 12% och så avkastning på eget kapital 12%.
Just det, avkastning på eget kapital. Skulle ni kunna bryta ner de olika delarna och hur mycket som ska komma från alltså för till exempel kassaflöde, belåning, projekt för att nå den här avkastningen på eget kapital?
Ja, så vårt förvaltningsresultat som under 2021 var 253 miljoner och det är klart att det är ju inga 12% i avkastning utan det krävs ju att vi skapar värden i våra befintliga fastigheter och nya fastigheter för att vi ska klara det här. Men vi har ju ett track record att vi har klarat det med god marginal sen vi börsnoterade bolaget 2017 så har vi ju legat snittat kring 20% gott och väl.
Ja. Och sen så vill jag fråga om hybridobligationen som ni tog upp i mars 2019. Den ligger på en ränta på Stibor 3 månader plus 7% och kostar ungefär 35 miljoner årligen. Och då tänker jag om vi leker med tanken att ni löser in den och tar upp ett banklån på en nuvarande snittränta för banklån. Så ska ni spara strax över 20 miljoner eller 25% av de räntekostnader ni betalade under 2021. Hur går ert resonemang kring hybriden just nu så att man förstår?
Jo, det är helt klart så att vi kommer omfinansiera den. Vi tog upp den 2019. Den är bokad som eget kapital och har då varit med och möjliggjort den expansionen vi har haft sedan dess. Men det är klart, självklart ska den finansieras om under året här.
Okej. Sen så har ni också dubblat investeringarna i era befintliga fastigheter eller gjorde under 2021. Kan ni specificera lite vad som kom från projekt och vad som kom från hyresgästanpassningar?
Nej, vi har ingen exakt specifikation på det, men alltså det är ju lägenhetsinvesteringar, lägenhetsrenoveringar om 300 000 per lägenhet och 186 lägenheter. Så där har du en stor del av våra investeringar. Sen så håller vi på med en ombyggnad av en av entréfastigheterna som vi nu gör om till en samhällsfastighet där vi har satt väldigt bra hyresgäster här. Malmö stad och Statens servicecenter och en vårdcentral. Så att det är klart att där ligger stora investeringar där. Och nyproduktionen, de investeringarna hade ju knappt kommit igång mer än när det gäller projekteringskostnader under fjolåret och markköp.
Och sen som avslutning här så har ni tidigare sagt att ni skulle expandera utanför Malmö om det är till en tillräckligt stor volym ni köper i den orten ni då expanderar till. Så i och med köpet av Signatur så har ni fått på en del fler orter. Många är till ganska små i antalet lägenheter, men Landskrona ligger på 4% ungefär av era totala antalet lägenheter. Skurup, Svedala som ni hade köpt sen innan är på 6 och 4% ungefär. Malmö då är upp mot 80%. Ungefär vilken volym ska man vänta sig för att ni ska kunna se att det är attraktivt att behålla eller liksom gå vidare in i en ort? Och ska man då samtidigt också tänka sig att ni ser fram emot att avyttra de orterna som ni inte når den kritiska massan på?
Alltså vi har ju alltid hävdat att fastighetsföretagande är local business och det är en konkurrensfördel för oss att vara lokala och då innebär ju det att vi kan ju inte verka i för många kommuner för dels måste vi ha en kritisk massa och ha ett bestånd så att vi kan bygga upp en förvaltning, men det är också så att man ska bygga upp ett kontaktnät på den orten man verkar i och just nu med förvärvet av Signaturfastigheter så är vi för många kommuner. Så att vi är inne i ett arbete här nu att sälja av i vissa av de här kommunerna. Vi har identifierat vilka vi vill vara kvar i och de vi är kvar i vill vi givetvis växa i.
Mm. Ja, det är tydligt. Och Köpenhamn ligger nära Malmö. Har ni tänkt på, eller kan ni tänka en expansion till andra sidan Öresund?
Ja, alltså från början har vi sagt nej, men vi stänger inga dörrar för framtiden, men just nu har vi inget på gång.
Ja. Det är tiden vi har för idag. Jag får tacka för att ni har lyssnat in och för att ni har varit med oss och talat idag, Olof och Nina.
Tack ska ni ha.
Tack så mycket.
Tack.
Hej.
Hi, and welcome back to our next presentation. My name is Jacob Lemke, Healthcare Equity Research Analyst here at ABG. Our next company presenting is animal horse vaccine company Intervac. And with us today, I have their CEO, Andreas Andersson. Please go ahead.
Thank you so much. Thank you for having me, and thank you for listening in. So let's get right to it. So Intervac, we are developing modern vaccines for animals, and we're using a technology based on recombinant fusion proteins, and we are in the very lead in this technology field. Our lead product, Strangvac, a vaccine for horses against the equine disease strangles, is approved by EMA now in August, and by VMD for the UK in September. And we are just about to launch this vaccine, and we are on track to start sales now in March. So it's really exciting time for us with a big changes for the company. We are addressing a global market, and the animal health market has shown great resilience and growth throughout the pandemic, and is foreseen to keep growing. So it's a very good space to be a part of. We are developing those vaccines in collaborations with two world-leading universities here in Sweden, the Karolinska Institute, KI, in Stockholm, and SLU in Uppsala. And we have a pipeline of vaccines based on the same technology and focusing on similar types of pathogens. But now our first vaccine is ready to launch. We're a Swedish company, and we're listed on the First North. So let's start with Strangvac. So this vaccine against the equine disease strangles that has been approved by EMA for Europe and by VMD for the UK market. It has an excellent safety profile based on that it has no live agent. It has an intramuscular administration, which is the way that veterinarians prefer to give vaccines to horses by. It has shown excellent protection with up to 94% efficacy, and that is after the third booster dose shown in public studies. We are addressing a global market with this vaccine, and we will look closer into that. But in discussions with key opinion leaders, several times it has come up that this is a game changer in the fight against strangles. And what you need in order to reach a good use and good spread on a global market is a vaccine that is safe, protective, and easy to use. And Strangvac has those features. And that's why we are confident that we will be dominating the vaccine space against equine strangles. So this disease, strangles, what is it? It is one of the most, if not the most, frequently diagnosed infectious disease in equine. And there are some 60 million horses in the world, so this is a large global market. It's highly contagious, and it's a nasty disease that can be lethal, and horses can be infected for a long time. And it has big consequences for the horse and for the horse owners. Outbreaks are very costly to control, and you have to quarantine the horse and often the whole stable for weeks or months. So this is a dreaded disease that horse owners and veterinarians are very eager to prevent. Strangles are quite common. If you compare in Sweden, where it's very transparent with strangles and we have good data, if you compare this to equine influenza, which is one of the diseases that you vaccinate most against, we only have a handful of outbreaks per year of equine influenza because you vaccinate. Whereas for strangles, we have between 40 and 120 outbreaks per year. So 10 to 20 times as many outbreaks of strangles in comparison to equine influenza here in Sweden. And we think this is representative of the frequency of equine strangles around the world. And our ambition and our target is to get the number of outbreaks of equine strangles down to similar levels of equine influenza. But in order for that to happen, we need to work together with other disease preventing measures and including vaccination. And we believe that is possible. So strangles is a global disease, a global problem, and Strangvac addresses a global market. And when you addresses a market with vaccines, you don't only target horses that are already sick, you target healthy horses, all horses. And in the global market, there are around 60 million horses, and about 1/3 of those are in what we call our primary markets, so around 20 million horses. And that is North America, Europe, Australia, New Zealand, Hong Kong, Japan. And so those are the markets that we are targeting first. And we have now approval in Europe, we have approval in the UK, and we have just submitted the first application to the US. So a large global market, and we will also then apply for approval outside of those primary markets in good time. In those primary markets, about 30 to 70% of the horses are vaccinated today against something else, or medicated and see a vet regularly. So that is also our target, to reach those kind of levels. And good to remember is in vaccination and with a vaccine like Strangvac, once a horse enters a vaccination program, it revaccinates it regularly. So what we foresee is that a horse will take at least 2 doses when it enters the vaccination program. We have indications that many will choose to take a booster 3 months after the first 2 doses, and then revaccinate once or twice per year. So that is our expectation, and the indications we get from our discussion with key opinion leaders. So here is the first box here of Strangvac ready to start to be sold to sell. And this is one is for the Swedish and the Danish and the Finnish market. We are on track to start selling now in March. And in the Nordic countries, we will sell this vaccine ourselves with our distribution company, Nordvac, who's a daughter company of us. For the rest of Europe, we're using a distribution partner, Dechra Pharmaceutical, an excellent partner. And we will look closer at Dechra. And with this model, we believe that we have a very scalable model. So going global using large global partners that with a distribution partner model. We had from the beginning expected to or planned to launch the vaccine before the end of the year. So this was slightly delayed. And the reasons for this is that we were approved as a mumps project. Equine is considered a minor species in comparison to some other larger species like pigs and poultry. And with that, we had some post-approval commitments. And very important one of those were the extension of shelf life for the antigens. And today we had an approval from EMA that prolonged this shelf life to 28 months, which was an essential part in order to release those batches. So that's very good news, and we are on track to start selling here in March. So if we're looking at how to reach the market, so our distribution partner for Europe is Dechra Pharmaceutical. They have it's the 8th largest animal health company within pharmaceuticals globally. They are even stronger within equine, where they have, according to our numbers, they're number 4 for equine in Europe. They had an excellent growth within equine. So here between 2020 to 2021, they had over 25% in organic growth just in the European equine segment. So this is a partner that we have chosen wisely, and we're very happy with the collaboration so far, and we expect to do great things together. We have a 5-year distribution contract with Dechra, and our strategy is that this is how we will build our global sales reach, to have pure distribution partner agreements that gives us leverage in negotiating and growing globally. This is also why we think it's important that we keep our home market to ourselves, so we have our own knowledge and contact with the end users, so we can support our distribution partners globally. So what the phase we have now been in since the approval is that we have worked closely with key opinion leaders and informing them about Strangvac and Strangles. And we have great internal resources to do this. Our Chief Scientific Officer, Dr. Andrew Waller, is a renowned and respected scientist within this field. So this dialogue with those key opinion leaders across Europe has been going very well, and the Strangvac is well received, and there's a lot of hope on what this vaccine can do. So those key opinion in turn have now started to present Strangvac for their local markets. And once we have launched the vaccine, we will also help in doing that to target more directly the veterinarians. Those are our sales channels. So for the horse owners, then we are doing more awareness campaigns, not talking about the vaccine directly. The vaccine information goes to the veterinarians. And here's an example of an awareness campaign, Strangles Awareness Week, that we participated in last year, and it reached over 2 million people in 2021, and continues to spread to more countries. And we're actively participating in spreading this campaign. So we have also formally started the approval process for the US. So we here in February we handed in the first part of the dossier or the application to the CVB. For animal health vaccines in the US, you submit to CVB, the Center for Veterinary Biologics, is part of the OPIS, which is then under the USDA, the Department of Agriculture. And to do this, we have engaged very experienced local experts that has previously worked at CVB. So we have the best type of support, and we can use much of the data and information we had in the dossier where we submitted to EMA and VMD for our application in the US. But the process is a little bit more interactive. So you submit an initial application, and then you work out a plan together with CVB. So it's a little bit too early to say exactly what the schedule will be for this approval process, but we are confident that we will get approval also for the US and the Canadian market. So what we do now is we have applied for the US market, but they are coordinated or aligned with the Canadian process. So you could, with very little extra resources, also use this application for the Canadian market. We have also applied for supplementary protection certificates here in larger European markets. This is a way to extend the exclusivity of the protection, and there is a similar system in place in the US. And we have every reason to believe that this will be accepted. We have a patent up until 2031, but with this SPC, it will be. We expect this to be extended to 2036. Now, as the world looks today, there are no copies, so to say, of vaccines. They are for traditional, more chemical pharmaceuticals. There are a lot of generics, and the generics are encouraged. in order to drive down prices after the patent expired. This is more unusual for biologicals, so there is something called biosimilars. And we have not found a single examples of this, that this has been done for vaccines, because it's very complicated, too complicated to make a copy. So what we expect is that once we have dominated this segment for equine strangles, we really don't expect any copies or serious competition even after the patent expires. But we have still done this because, you know, the 10 years from now, it's difficult to know where the technology is. So this is also very good news. As I said, we have other projects in the pipeline. So most advanced of those projects is a vaccine project for pigs. It's against a pathogen called Streptococcus suis. It's a very serious disease that causes sepsis in young piglets. So after they have stopped weaning, or from the mother, from the sow. So that's when they are mostly at risk. And this project is also doing progressing according to plan and doing good progress. So what we do is that we use the same technology and we stick to the similar types of pathogens with the same research teams, and that gives us great chances of success also in those projects. In this, for this potential vaccine, we also had a patent approved here in November 2021 in the US, and that's a good step forward for us to prepare for that vaccine as well. For the mastitis project, we it's a similar pathogen again, same technology, and we're also progressing according to plan and doing good progress in that vaccine project. So I think that's a positive message from our pipeline projects. Briefly, the animal health as such is showing good growth. We have the market is valued around $40 billion, and in the core center, this is vaccines. It has shown 4 to 7% growth. Vaccines have been growing faster than that. It's often mentioned around 10%, and it's driven by increased demand for animal protein. We're spending more money on our pets, and vaccines in particular is also driven by that there's a big trend of we have to use less antibiotics, and there's a lot of new regulations on that. And with less antibiotics, the infection pressure increases, and the need for vaccine increases. If you look at this and animal, there's a lot of initiatives from governments around One Health and zoonotic diseases. So we are in a very good sphere to get incentives, and both our main pipeline projects here are partly funded by the government. The EU has a target to reduce antibiotics with 50% to 2030, and I think that's a good driver for this market. So if I'm going to sum up here, we have really good momentum. Strangvac has been granted the market authorization in the EU and also in the UK. We're preparing for commercial launch, and we are on track to start sales here in March. We have submitted the first part of our application for Strangvac in the US. We are doing good projects in our pipeline projects, and we also have a very good cash position with over 100 million Swedish crowns and a very manageable cash burn. So with that, I'll leave over to you for some questions.
Okay, thanks for the presentation. Maybe if we start with the press release you sent out earlier today, where you said that you have gotten an approval for an extended shelf life of your antigens. Maybe you could just sort of go into that and say what it means for you.
Yes. Right. So just before this presentation, we sent out the press release that EMA has today approved an extension of the shelf life for our antigens. They have approved 28-month shelf life now, and that was an essential part for us to be able to release the doses and to start sales. So what this is that when we produce vaccines, in the first step, we grow those we produce those antigens, those molecules. And in that process, we produce antigens that reach for several million of doses. And in the next step then, we make the vaccines in the vials. So we use the antigens together with adjuvants and salt buffer and put those in vials and label them, and that is a vaccine. So the 28th month is for the antigens in the manufacturing before we put it in the vials. Once you have put it in the vials, you get another new 24 months. So this is great for us. In the long term, it gives us bigger flexibility and able to produce more cost efficient. And it was important for us now in order to release those first batches. So very good news.
Okay. And as you said, now I mean you are on track to starting selling the product in March.
Yep.
But when will Decra get out and start sell the product?
Right. So Decra is as we are extremely eager to start. So we are all pushing as hard as possible to start as soon as possible. I think it's going to be tough for Decra to start selling in March. It's already now. We're already in March, so as soon as possible after that. But and I think it's most likely not all market at once, but more one market at a time. But within the next few months. So as soon as possible, shortly following, Decra will also launch in Europe, and it's more up to us, so we can supply the vaccine to them. They are prepared and very eager to start.
And as you said, now, I mean, you're out and, speaking to key opinion leaders and so on. Have you gotten any feedback on the dosing or the sort of booster regimen?
Yeah, so basically from the key opinion leaders, the feedback we got from them is that they will all start with 2 doses, and then for most key opinion leaders would recommend to take a booster vaccine 3 months after those primary 2 doses, and then revaccinate every 6 months or once per year, a little bit depending on risk situation from the horse and how much you're ready to spend on your horse. So this is what the key opinion leader tells us, and in the end, it will be the horse owner and the local veterinarian that will design how they will use the vaccine for that particular horse.
Okay, and I mean, you mentioned that you have submitted for the US market now. Can you just sort of briefly update us on the sort of timeline here?
Right. So the next step now is that they will assign handläggare, so the person that will be in charge for our project, and then we will discuss the plan together with them, and that will now take place in the next couple of weeks, a few weeks, couple of months, and once we have agreed with them on what will be needed, then we can be more public about that. So there are different options here. Today we don't know if local studies will be required and to what extent. What we have seen is that we just published a study quite recently where we have shown that the strain Streptococcus equi is quite homogeneous over the world, and that our vaccine is very likely to protect against all known strains. So that kind of supports our case when we now file for more countries outside of Europe. But with that said, we have to discuss with CVB on what kind of studies, if they want local studies.
Okay. And just another question on the US market. Where are you in terms of getting a commercial partner? Are you in any discussions, for example?
So for the European market, we discussed with several of the global players, and it's very similar as players that are also present in the US market, and we have not. We're not in a position where we disclose our that kind of discussions, but in general, our strategy has, as we've done here in Europe, that we prefer to go with distribution partner agreements. I think that puts us in a better position in keeping more of the revenue to ourselves.
Okay, I think that was all the time we had. So I would like to thank you for participating, and as well thanks to all the watchers tuning in.
Thank you for listening.
Good day, everybody, and thank you for participating in ABG's Investor Day. My name is Benjamin Silverstone. I am an equity analyst here at ABG. I now have the pleasure of presenting the next interesting company, GomSpace, which will be represented by CEO Niels Buus. Niels, thank you very much for being here today, and the word is all yours.
Thank you, Benjamin, and thank you for listening to us. Yes, my name is Niels Buus, and I'm the CEO of GomSpace, and I would like to present our investor presentation with some new information or rephrasing some information about our strategy. Please take the next slide. Yes, the highlights of our company is that we are a space pioneer in the radio-based areas of nano and microsatellites. We've been growing 30% annually on average since 2015. And we are mastering the full process from manufacturing to turnkey solutions to our customers. And we are positioned to take advantage of a very, very big future market. Next slide, please. The team is, our chairman is Jens Maale, who's been running Terma, the biggest defense company in Denmark for years, and Troels Dalsgaard, who's been here since the IPO, and myself, who've been here actually been with the company all the way through, and the CEO since start of 14. Next slide, please. The GomSpace at a glance is such that we were founded in 2007, and we are in more than 50 countries. We are a leader when it comes to radio-based solutions. We have the full product portfolio, which is very interesting, giving an interesting revenue, and we have a full capacity to assemble the satellites here in Aalborg. And since the IPO in 16, we have invested around $80 million in technology in the company. Next slide, please. We are in the satellite area that is the second growth market for nanosatellites. The mini satellites is driven by OneWeb and SpaceX at the moment, but the nano, and we are also starting to term it microsatellites, is the second largest growth area in the business. And you can see on this slide who is our partners and competitors in those areas. Next slide, please. We aim to become an integrated service provider in the future. Today, we regard ourselves as the champion when it comes to technology and technology level in the nanosatellites in Europe. And you can see the market sizes and shares on this. I'm a little bit confused because I cannot see the whole slide here, but I don't know if you can change that so I get the full view of it. There it is, yes. And you can see that we regard ourselves as a technology leader with an EBIT margin which is rather low at about 55%, and the total addressable market about 1 billion in that area. We aim to move ourselves upwards to have a larger product content in our deliveries and delivering full constellations. By doing that, we expect to be able to raise our earnings up to 15%, but also total addressable market up to 4 billion euros in total. Beyond that, we are also working how we can start to provide services to our customers. And again, by providing services, we will be able to increase our earnings capacity, but also the total addressable market will change dramatically. Our aim is to continue to be a European champion on all those levels into the future. Next slide, please. We are already pushing the boundaries. Some notable things, not very big at the moment, but still very notable, is that we are doing blockchain payments tests with JP Morgan. We are sending satellites into deep space to measure the content of asteroids for future deep space mining. Next slide, please. But today we are a technology. We have a technology focus. Technology focus can drive revenue, but it is not very good at driving earnings. And the reason is that today we have about 30% of product content in our deliveries and 70% engineering content. It's very hard to make very good money with a high engineering content, so that we intend to change. You can see that we have been able to drive the growth and also bringing the earnings back in place or towards being at the right place. But it's still a task ahead of us. But before I explain about that, let me show you where we are financially at the moment. Next slide, please. The order intake have been growing very good. We had by the turn of the year an order backlog at more than 500 million Swedish kronor. And so in that sense, we have things that our customers really like and really want. But to drive the revenue, we need to have a very high amount of new employees. And you can see we can do that. Right now we're close to 200 employees in the company. Next slide, please. And you can also see the revenue is going up, and it will go up. We would like to have it to go up quicker, but it is a complicated task to have enough people coming into the company. You can also see the operating profit is improving and going in the right direction, but nevertheless, and next slide, please. We need to take the next step for the company to make sure that we improve the earnings of the company. And what we will do is to focus more on having the standard products in a modular way so that we can put, that's the picture on the left, so that we can put standard platforms together to address many possible applications in a structured way. And on that route, our goal is to reach 60% standard product content in our deliveries and only 40% engineering. It is still projects, and we still have to be able to do different things for our customers. But by improving that, we expect to be able to increase our earnings to 15% instead of the around 5% that we can expect at the moment right now. Please move to the next slide. And but tomorrow we will go even further. And now you can see up in the right corner that we go to the second step. We are already now aiming at the constellation phase. We have the work with Indra and Startical, the Spanish consortium, where we are making satellites at the moment to test for air traffic management. And the goal is to make more than 200 satellites for their constellations between 2024 and 2027, as the plan is now. There's also a big European project, the New Symphony project, where the European Union is going to invest in constellation here in Europe as a counter to everything that's going on in the US. So that is moving forward, and that's where we will build our capabilities along with these projects to move into the constellation phase. Next slide, please. And it is now we have to do it. We have all of us heard about the megatrends in digitalization, connected mobility, Internet of Things, and so forth. That's been driving a lot of activities for quite some years now. But now the space environment are also starting to take big part of that. The decreased launch cost, increased capacity for launches, what's called decreased satellite production cost, and smaller satellites as we do it, together with many new companies coming into the market, more than 100 companies going into the market, coming up with new services. That equals to a lot of new business opportunities. In 2020, the total satellite market was expected to be 447 or 450 billion US dollars. In 2030, it's expected to be more than $1 trillion US dollars. And if we look at the content of that, next slide, please. The first part first, I'm sorry about that. We have a 4 billion market opportunity until 2030. Totally, it is expected that 54,000 satellites is going to be sent up. 13,500 of those is nano and micro satellites.
that equals to about $4 billion US. And that is what we are going to aim for in the manufacturing of satellites over the next period. Next slide, please. If we look at beyond that, and we look at the content of the big market, the 450 million today and the more than $1 trillion in 2030, only about 10% of that is hardware. 90% of that big market growth is also services. And that means that we will have to look into how we can enter in our company into helping our customers in more ways than just making the satellites. And we'll be looking in those areas. You can see to the right, the maritime, ocean, what's it called, monitoring and air traffic management and Internet of Things and so forth. We will not start to become a data provider, but we will probably be looking in directions as a satellite infrastructure provider for our customers in the future. But that is up for definition at the moment. But it's very important for us at this point in time to point out that this is the direction that we are going with the company. And as you saw before, and I think we can see it on the next slide as well, please. You can see going through these steps, we will be able to enter into a higher earnings capacity, but also to a much larger total addressable market. But the first step is to move ourselves out from being a technology leader to also becoming a constellation leader and a company that can put together a constellation of various sizes from combinations of standard products. That is the first step that we are going to take, and then define our service level services more into the future. So next slide, please. With these words, I have now told you where we were from at the end of last year, and given you some information about our future plans and where we want to go with the company. We are in a phase now where we're looking, we define ourselves as being out of the you could say the turnaround, having very much stabilized the company, and I'm now positioned to take part of the big growth that is out in the market. So thank you very much for listening.
Thank you very much, Niels, for this presentation. Going into the Q&A session, I think if we could just really quickly brush up on the supply chain issues that are obviously impacting the industry at large, and just give an indication of where GomSpace is currently. And then let's go into the more interesting parts of the Q&A session after.
Yeah.
So could you give us a brief update on where the current supply chain is situation looks like at GomSpace?
Yeah, sorry, I didn't hear you well enough.
No worries.
Yes, we are. It's basically status quo as it was, as it has been. We have to have some longer delivery times. We are looking more into the backlog of components that we had, qualifying components that we had on stock, that we had to make sure that they were of the right character and things like that. So we've been working with that. But basically, we are on the same level and is by and large able to do what we expect to do and what we have expected to do so far.
Thank you very much, Niels. During your presentation, we saw on slide 16 that you are now, in a phase of technology leader, and you are then aspiring to go into constellation manufacturing and really win that segment by 2024. Could you give us just an indication of what makes you confident that the GomSpace is at the position now where they are able to sort of progress in that direction?
Yes, we are working. Well, it's a combination of things here, because we are working on the in-orbit demonstration projects for our customers, some very notable customers in that respect. And the whole aim is to move those into making the constellations. it's the first part of that step is to be when we do these in-orbit demonstrations, we need to make sure that we have more standard products in them because we will have again and again do test flights for customers that need to test before they send up constellation. We need to do that in a more efficient and less expensive way, so there's less engineering hours of that. Then there's the phase of the smaller constellations, the 50, 25, 50 or 75. They will probably be very much in the same production manner, just more efficient, or with the same component, just more efficient in the manufacturing part of that. And for that, we have joined forces with some very notable consultants in those areas. We are working with Porsche Consulting, the car manufacturer, who's very much efficient and have very much knowledge in how to make tact production so that you can make many variants. And that kind of knowledge we are gaining that from their support in that phase to build that up. The next step from the small constellation is the larger constellation, and in that respect, it's going to be interesting to see how we're going to put that together. It's very likely that kind of very high volume or higher volume production for a Spanish customer also will have to take part in Spain. But that all these things is what we are preparing ourselves for with that with the support from Porsche.
Thank you very much, Niels. Touching on the potential Spanish order from Indra, you do mention now that you hope to have a 200 plus satellite order, to be delivered between 2024 and 2027. But are there any updates on where this development is and how far Indra is, and sort of a timeline to what we should be looking at for GomSpace in terms of when you would be able to tell the market if you have the order or not?
No, we don't know anything about that yet. Right now, we are working on the IOD-1. It's called the first test flights. After that, it'll be the second test flights. And once the first is up, I think we can start talking about when we can aim for constellations, and they have to release things before we will be able to release about that. But the space business, we are very busy now, but it's also it's because there's a lot of work to do, but it's also a little bit longer time constant that we have in this kind of business.
Thank you, Niels. Next up, you were speaking about how the market is going to transition into being very much driven by the service aspect and not the hardware aspect. As you do mention and clarify, GomSpace is not going to be a data provider, but could you provide some details on which sort of feedback you get from your customers in terms of what data you would be able to bring to them to add value?
It's what we are able to do and what we are preparing ourselves to do at the moment is to manage the constellations. We have this site in Luxembourg where we are building the software to manage many satellites in space at a very low cost, and that is a key point in starting to make some sort of infrastructure services for our customers. So we will not be interfering into the customer's data. The data is the customers themselves. But we can possibly do something in helping getting the data down. We can certainly do something to service the constellation so it's always working the way that it's intended. You could also imagine some other future things that we can do for the customers to make sure that their platform in space, the place in space for the instrument, is ran the best way possible. So that's the level that we are investigating at the moment.
Thank you, Niels. Looking at your slide in terms of market growth potential and the potential total addressable market going forward, We do see quite some interesting numbers, especially for obviously your focus areas being the nano and micro segments. Given your current market share today in the nano segment, how are you guys thinking about the ability to keep or even expand your market share going forward?
Well, that's the big question, and that's what we are focusing for. We have a respectable market share at the moment. I believe the number is around 13%, we are everything what we are doing about our future plans will be to keep and possibly expand that market share into the future. I don't have any more details about how we want to do that at this point in time.
That is perfectly fair, Niels. Thank you so much. Looking into the future, you guys are coming with a new strategy at the mid of 2022, if I'm not mistaken. And you are also, we recently saw that you hired a new senior position from Airbus as well. So just in terms of the overall team at GomSpace right now, how do you see it being? Are there any need for more hires, or are you at the current level where you would need to be to sort of execute on the targets that's going to come?
No, I expect that there will be more hires on various levels in the company. We have already said that we have started this presence in France, and we will also. I expect that we will also start hiring engineers in France at some point over the next months.
Thank you. And what about on a more high level scale, Niels? Will there be any other managerial positions being filled or needed to be filled?
Not at the moment. No plans at the moment. No.
Thank you very much. And then speaking of France and your international expansion, could you just please give us an update on where you currently are and what might be some interesting locations for GomSpace in the future?
Yes, we are obviously here in Denmark and in Sweden. We are in Sweden in two ways. Our holding or the company that's listed on the stock exchanges in Sweden, but we also have the Swedish subsidiary where we're doing the propulsion part of it, and also do have engineers that participate in projects across the company. Then we're in Luxembourg, which is Sweden is about 15 persons. In Luxembourg is between 25 and 30. Moving into new facilities over the next couple of months. Then we have an office in Washington, sales office, one salesperson who's doing well, by the way, very well, by the way. And then we are now starting up in France, in Toulouse, in the middle of the space environment in France. And I expect that there will be some. It will be necessary or an advantage for us to do something. Something is maybe a wrong word to put, but we will have to be in Spain as well to make sure that we are positioned for the constellation when that comes up. But it's also likely that we will expand in that way into more European countries, because the basis for being in the space business is to be able to invest in technology. And a lot of those investments in technology is coming from the European Space Agency. And to be able to capture that in different countries, we have to be there and work in those countries. So we are going to be, you could say, pan-European company as such, being able to work together. And we have a tradition for that, because many of the space projects are always very international, many different partners in different countries. So it in a way it's only natural for us to be there as well. And there's still some other interesting companies in Europe, countries in Europe that is interesting, because not so many are doing so much on nanosatellites, and that still represents an opportunity for us.
Thank you, Niels. I think that is a really interesting point here at the end as well. We do have 1 minute, Niels, and could I just, because there's a lot of people here who might be new to the case, Could I just please have you to elaborate really quickly on how you see your current backlog order? I mean, it is very strong from my perspective. It's been growing quite rapidly, and now you're also entering new markets and having more access to ESA. Just a quick sort of ending on how that is looking for GomSpace.
Yeah, we have plenty of work to do at the moment in the company. We have the ESA, or sorry, the what's it called? The Indra order on the nanosatellite, the IOD nanosatellites, which is about 15 million euros that we are working on, have worked for nearly a year now. And then there's a new Scout project, which is an ESA project for 3 nanosatellites, 6U nanosatellites, to make measurements in the upper stratosphere on the content of the air to be able to predict global warming. Then we have the Juventas project, which is a deep space project, which is also a very technology driving, capability driving project, not only with technology, but also quality wise for making quality procedures in our company, which is also very important going forward. And then we have another project which I can mention. I can mention quite a few, which is with the Colombian government, which is building up space capabilities, and they have a very interesting use case where they are looking at a very big country for especially opal mining, illegal opal mining, which is a big problem in Colombia. There's a space project with the Norwegian defense, what's called R&D organization for an Arctic project. We have really many projects going on in many different directions at the moment.
Thank you very much, Niels. Due to the time, we'll have to conclude the presentation here. But again, thank you very much for participating here today, and thank you to everybody who listened in. Hope you have a good day.
Thank you. Thank you. Thank you for listening.
Hello and welcome back to ABG Investor Days. My name is Rebecca Järdrup and I work here at ABG as an analyst in the IT and tech sector. With us here today we have Simon Gustafsson, the CEO of Adtraction. Simon, please go ahead with your presentation.
Thank you very much. I'm also one of the founders of Adtraction and a big shareholder. We floated Adtraction on Nasdaq First North in December. So I think that Adtraction may be new to many viewers, so I will do this sort of from the start. I will go through our business model, our financials, I will say something about the market, and then I will spend some time explaining on how we try to grow. I think a nice way of starting to explain our business model is looking at this picture. Here is a site called Elle. It's a women's fashion site, and what's going on here is that they've written an article about spring coats, and what they do is they write something about a certain coat, then they provide a link to an e-commerce company that sells that specific coat. They use attraction tracking links for that purpose. And what happens is that if a consumer enters the Elle site and buys a coat, Elle will get a commission. If the purchase happens at H&M, for example, Elle will get a commission for H&M. Adtraction will get part of that commission, and H&M is happy because they spent their marketing budget wisely. They only paid for an order, and hopefully the consumer is happy too because she just bought a beautiful coat. This is the essence of our business model. And in the next few slides, I try to outline this business model in text. So we at Adtraction call our customers advertisers. So what we do is we help our advertisers sell more. They only pay for results or an order. We help our partners, that can be sites such as Elle, monetize their traffic and content. We help them make money. And I think it's also important to understand that we are a tech company. Everything in our business happens in our proprietary platform, and we spend a lot of time and resources developing that platform. From a financial point of view, we're about profitability, growth, and cash flows, and I think we have a strong track record in this area, which I will show later on in this presentation. This is another way of illustrating our platform. So in our platform, we have 7,500 active partners. These are typically sites with great content, and visitors are interested in buying something, and they face a problem. How can they make money? And basically, the different options that they have is that they can try to charge fixed fees. They can get money from display ads, from click ads, or they can use our business model, which is that they only get paid if they generate an order. And of course, it's easier to generate display impressions and clicks than an order. But the beauty of our business model is that if the conversion rate is high, then partners actually make more money using our business model than any of the other business models. So what's interesting here is that a lot of the times our business model is actually more cost efficient also for our advertisers. They only pay if there's an order. And the reason that our business model is more cost efficient is that advertisers do not waste any money on impressions that don't generate clicks, or clicks that do not generate conversions. So the beautiful thing here is that incentives are aligned. Partners make money when advertisers make a sell, and it's the same story for Adtraction. We only make money when partners and advertisers make money. And for us, this is a volume game. In the fourth quarter, we generated close to 2 million transactions. Typically, that is a sale of some kind. And this is what our platform is about: scale, putting more and more things into our platform. So we call our business model partner marketing. We used to call it affiliate marketing, but we find that term is a little bit too narrow. In the past 5-6 years, we've really expanded our partner base, and we think that the term partner marketing is more relevant. I would also like to say that the term affiliate marketing is associated with iGaming or online gambling to a great extent. We have nothing against those industries, but We don't work with those verticals, so from that point of view, affiliate marketing is a little bit misleading too. We launched our service in 2009, so we've been doing this for a while now. We have, it says here 90 employees. I think we're closer to 100 employees now. We are currently employing a lot. We started expanding internationally around 2015, and what we found out then was that in order to make good business in Finland, we need to be able to speak Finnish, and in order to establish good relationships in Finland, we need to have feet on the ground. So that has been our strategy, and we're currently present in 12 markets. We used to start sort of slowly with these markets. We would hire 1 or 2 people, and once we had a little bit of traction, we would hire more people. Going forward now, we will probably start with bigger teams when we start a new market. And I can also say that from a cost and profitability point of view, it's obviously pretty expensive to have this many offices, but what we're trying to do is setting the stage for future growth. Currently, we have great margins in the Nordic. We're actually profitable in almost all our markets, but margins are far better in the Nordics because of a greater volume. This will happen in a few years in the rest of Europe. I said before that we were about growth, profitability, and cash flows, and here I think we illustrate that we do have a pretty strong track record of generating growth. We've actually grown every year since 2010. If we look at the growth rate since 2010, it's around 50%. The last few years, which is perhaps more relevant, it's been around 30%. So some things here should be commented upon. We see a little dip in 2020, a much lower growth rate, and that was because we have customers in the finance vertical, consumer loans, and many loan providers tightened scoring because of increased risk related to Corona. So we actually saw a drop in sales related to our finance vertical in 2020, and e-commerce, our other main vertical, had great growth rates in 2020. In 2021, we've seen a recovery, as you can see here. We're back to growth in both verticals. I should also say that the pink little box that you see here on top of the sales bar is pro forma sales. So this just shows what our sales would have been if we had owned some acquired business the full year. I will take a deeper dive into that a little bit later on in the presentation. I should also say that for us, it's pretty difficult to keep track of what is organic growth and what is acquired growth, and the reason is that we put everything on our platform. Obviously, we know what the sales are of companies that we buy, but quickly, once we migrate the business to our platform, it's difficult to keep track of that, so we will not make a difference between organic and acquired growth. We're just talking about growth. That's what we're interested in. Adtraction is actually more interested in gross profit than in sales, and the reason is, of course, that gross profit is what we keep. We keep around 20%, and 80% is sent to partners. So internally, we only talk about gross profit. It's the same thing here. You can see a little dip in 2020, and then in 2021, there is a significant recovery and also some additions from acquired businesses. I would also say that we're pretty good at converting gross profit to EBITA. And by EBITA, I should say that what we do, the adjustment that we make is we add back goodwill amortization, because Adtraction reports under the K3 accounting standard, under which goodwill is amortized. So we just add that back. That's the EBITA. And the pro forma numbers here is we've also excluded IPO costs. So we're generating healthy profits, I would say. And if you relate our EBITA to our sales, we may look like a low margin business. Our EBITA margin has been around 5% the last couple of years, but we think it's in many ways more reasonable to relate EBITA to gross profit, and then the margin has been around 28%, because again, gross profit is what we keep. And if we look at pro forma numbers, the margins look even better. We're also good at converting EBITA to cash flow, and The reason here is that what you see is what you get with our financial reporting. We do not have any weird capitalization of R&D expenditures, etc. So there's a very strong correlation between EBITDA and cash flow. This cash flow pattern looks a little bit weird, and I would say that the reason is that cash flows are much stronger in 2020 and 2021, and that's because we focused a lot more on that since we knew that we were going public and we need to demonstrate our ability to generate strong cash flows. Before, it didn't matter if a customer paid on December 31st or January 6th. That really matters now, so there's a lot more focus on it. Here's the pro forma I've been talking about, and all we do really to reach the EBITDA pro forma is we start with our reported EBITDA of 35 million. We add EBITDA of Klara Lån and Digital Advisor, two acquired companies from the period when we did not own them. And then we add back IPO costs of 4.2 million, because we don't expect that we will have IPO costs next year. So in total, we end up with a pro forma EBIT of close to 45 million. The reason we do this is that we want to establish what the base level is. Our base level sales going into 2022 is 740 million. Our EBITDA is around 45 million. But of course, our reported EBITDA is still 35 million. Nothing has changed there. And to summarize the financial situation, we have a beautiful growth in 2021, around 30%, and also a beautiful profitability, where we actually see increased margins if we look at the pro forma numbers. Going back to our business model, we have 1,400 advertisers. We operate in two different main verticals. Finance is perhaps currently 35% of gross profit, and e-commerce 65%. By finance, we mainly mean consumer loans, but also some investment and savings products. And e-commerce is basically everything else. Here we have listed a couple of advertisers that we're very proud of. And these are, I believe they're good examples, because you can see the variety in our advertiser base. So C More and Viaplay are streaming services. Åhléns, Lindex is health and beauty and fashion. Webhallen is consumer electronics. Hallon is a telco operator. Lendo, Medmera Bank, Samla are loan providers or loan brokers. Going to the partner side of things, we have 7,500 active partners, and a partner is active if they send traffic to at least one advertiser in a given month. We divide the partners into different categories. The first one and biggest one, most important one for e-commerce, is content. And a great example of a content partner would be Elle. They write content about products that consumers are interested in, and then they link to those products. Influencers is another category. What's special about our influencer approach is that, again, advertisers only pay if influencers generate sales. So historically, influencers on Instagram and YouTube and so on have charged a lot of fixed fees. I believe that that's changing, because influencers are getting better and better at generating sales and conversions. The third category is affiliates, and this is the legacy of our industry. That would be price comparison sites, it would be voucher code sites, cashback sites. Those categories are still very important, but it's just one out of five categories. The fourth category is tech, and that is typically something that happens, some sort of technology that's installed on an advertiser site for retargeting purposes, or it can be an app. Examples of tech partners are VE Interactive, if you want to check that out, and actually Klarna Media is a big and important partner in our network. Finance, that is simply sites that compare different finance products. So this is the world as we see it. So you know, our positioning and our competition. And the fundamental thing in our industry is CPA. That is, advertisers only pay if there's an order. CPA means cost per action, and this is the common denominator for all competition in our industry, and I would say that this is actually what defines our industry in a way. Adtraction is a full service network, so an advertiser could log into our platform and manage their own partner marketing campaign, but we know that the results are much, much better if one of our account managers is involved, because the account manager knows everyone, knows what works, and therefore the results are much, much better with the involvement of an account manager. We're also locally present. Again, that is a little bit expensive, but we're setting the stage for future growth, and we really believe that we need to have feet on the ground to do good business. Adtraction is still managed by founders. We think that's an advantage because we care and we have a very strong sense of direction. We're also present in both e-commerce and finance, and that's nice because sometimes e-commerce grows quicker, sometimes finance grows quicker, and overall we have a more even growth pattern. And when it comes to growth, our growth strategy is simply this. So if we just stick to our installed base in our existing markets, we will still grow because there's an underlying market growth. In Sweden, the underlying market growth for e-commerce is perhaps 15%, and it's probably sort of the same across Europe. Of course, we try to do more than that. We try to win new partners. We try to win new advertisers. And also, we're trying to move into new countries. So in 2021, last year, we started an office in Austria. This year, we've announced the French office. Then we've made acquisitions. So we've acquired a company in Switzerland called Connects and a company in Denmark called Digital Advisor. What they wanted was access to our great platform and our international distribution. We've also acquired a small Swedish loan broker called Klara Lån. And in 2022, we have some very specific plans. Again, we're starting in France. That has already happened. We're currently negotiating about starting in Italy. This will increase our OpEx by 8 million. And just to be clear on what's going on there, it's not like a one-off cost of 8 million in the first quarter. Instead, this will be basically cost of salary and so on throughout the year. And the French team is already in place. The Italian team will probably start working in Q2, hopefully. Of course, we also try to hire more people in our existing markets. We're basically growing everywhere. The third thing is acquisitions. That's a little bit difficult in this market climate. It's difficult to know what the correct valuation is, but we know that these things take time, so we try to keep up the discussions, and then sometime along the road, something will happen. And of course, there's continuous development in our platform. So I will also say something briefly about the share and the ownership structure. We did our IPO on December 7th. That was the first day of trading. The IPO price was 60. I believe the share price is currently around 45, and the market cap is around 575, I think. And we have a net cash position of 150 million. Again, we have pro forma EBITA of 45 million and the growth rate in the first quarter of around 30%. So founders and employees own 49%, founders own 45%, I own 21% of the company. Anchor investors from the IPO own 23%. Some early investors who are not working for the company own 17%, and retail investors from the IPO own around 10%. So what we're trying to do here, and why I think Adtraction is an interesting opportunity, is this. We have a strong financial development since we started. We've delivered growth and profitability every year. We're an international business where we have great margins in the Nordics, and as we grow, we will have great margins also in Europe, and we really have a strong foothold out in Europe now. We have a great business model. Advertisers only pay for results. And we're acting in a fast-growing industry. So there's a growth for e-commerce, there's growth for online advertising, there's growth for consumer loans. And lastly, we're owned and managed by founders, and we have a strong sense of direction. We know that we want to keep growing the company. We know that we want to expand internationally. And that's it for me. Thank you.
Thank you very much, Simon, for the presentation. I'm very interested in the growth journey going forward. And you mentioned that you're expanding to other parts of Europe, for example. In general, what are important factors to grow in other parts of Europe?
So first of all, we need to be there, and it's fairly difficult to establish our business in a new market because we basically start from scratch. We have 0 partners and 0 advertisers, and therefore it's important to hire people with good relationships, and that will help us. And also we try to capitalize on our existing network. So, for example, we will bring advertisers from Germany into the French market and so on. So our strategy now has been to cover all of Western Europe, and with France and Italy, I believe that we are doing that. Those are very interesting markets. A lot of happen. So e-commerce used to be fairly slow in Italy, but a lot of things have happened in Corona. That's why we're going there now. And now we cover Western Europe, and then we'll see what the next step is.
Very interesting. So is the most efficient way to enter those areas through M&A or hire your own people straight away?
So it's clearly much quicker if we can do it with the M&A. We've done this in Denmark and Switzerland, but there also needs to be an M&A opportunity. And we can also combine things. Perhaps we start something and then we understand what's going on in the market, and then we know what to acquire. So I'll be honest and say that we're fairly new on the M&A scene. We've done 3 transactions. I think we have learned something, and we know what we want to do. And you know, we're constantly looking for opportunities. We know after the IPO, we also have the resources to do acquisitions, so we're certainly interested in doing that.
Yeah, interesting. And in general, so far, how long does it take to until a new market gets profitable?
Yeah.
In general?
So that depends a little bit, but if I were to say something in general, it's like 12 to 24 months, depending on what existing relationships there are and how much we hire and so on. So for France and Italy, it may take a little bit longer because we're starting with slightly bigger teams, but somewhere around that.
Yeah, yeah. And why is it so crucial, you think, to have those local offices in those areas?
I mean, we tried not having local offices, and it didn't really work out for them, because we found out that it's very difficult to win a customer in Finland if you don't speak Finnish, and it's very difficult to win partners and build a great relationship if you don't know who people are, etc. So this really is the way forward.
Yeah. And also you have 2 different segments from what I understand, financial and e-commerce. What is the main difference between those 2?
So e-commerce, I think everyone knows that there's an underlying growth in e-commerce, and e-commerce is great. We really love that business. I would say that it requires more account management because there are more products for each. You know, one advertisers may have 50 or 100,000 different products, and then we need to deal with all of that. So it's more work intense. Then the finance products are easier to handle because it's typically just a loan with certain terms. So fewer account managers are required to handle the advertisers. And also there's a regulatory environment which is more complicated in the finance sector. So sometimes we see regulatory changes that has an impact on our business, and then we sort of see a little bump in the road, and then normally we bounce back. And with e-commerce, we haven't really seen that, except for the different Corona ups and downs.
Yeah. Okay, Simon, thank you very much for this presentation and for the Q&A session. And thanks everyone for listening in.
Hello and welcome back, everybody. My name is Derek Laliberté. I'm an equity research analyst here at ABG, covering primarily investment company and media stocks, and have the great pleasure for the next presentation to have the investment company VEF with me, and Henrik Stenlund, who is the CFO and head of investor relations at VEF. So with that, I think we'll take it away and please go ahead with your presentation, Henrik.
Thanks, Derek. Indeed, great to be here. It's a short time, so let's just jump straight into it. So VEF, we're an investment company, as mentioned. We operate in the private space across the emerging world, fast-growing frontier and emerging markets, and we invest in fintech assets across those markets. We are listed on Nasdaq First North. Our latest reported NAV was $762 million. This is per end of Q4. We have a healthy cash position with roughly 60 million, some firepower to continue investing. And we have seen 18 holdings in the portfolio since inception, and we made 4 exits, and I will talk about the 2 successful ones quickly later on. From a historic point of view, we have delivered 30+% IRR on a NAV per share basis, which we're quite happy about and hope to be able to continue that trajectory over time. So our investment mandate, what do we do and how do we invest? We target, from a sector perspective, all types of financial services companies or fintechs across these markets. And it can be credit, PFMs, payments, investments, and even embedded fintech, which is a new area for us that we're putting more and more focus on. On the right-hand side of this slide, you see where we have touch points in the portfolio with the green dots. From a geographical point of view, we target the scale markets. Hence, we are very focused on Brazil, Mexico, Pakistan, India, certain countries in Africa, etc. So large-scale emerging markets, that's what we like. We typically take minority stakes and board seats. We have representation in most of the companies, with the exception of a few smaller holdings where we have around 1% ownership, which is an exception. But we're very active owners, and we spend a lot of time with the portfolio. We like to think that we're a unique investment vehicle. There are very few ways to play this team across the emerging world, and we have managed to compile a very hard-to-replicate portfolio. So if you are interested in this team, the fast-growth emerging market, fintech-focused space, this is one of the obvious ways to play that team. We have a very diversified portfolio, both from a geographical point of view, but also from a sector point of view and stage point of view. But as you can see on this slide, the 3 core geographies for us is Brazil, Mexico, and India. That's where we're putting most of the efforts and work to grow this. On the right-hand side, on the pie chart, you can see a different representation of the portfolio, where some or a few names are starting to break out and becoming an even larger part of our NAV. Creditas being the obvious one, representing 52% roughly of our total NAV. So that's one of the companies that in order to understand VEF, you need to understand Creditas, because it's such an integral part of what we do and what we are. Second and third names, Konfío and Juspay, I will touch briefly upon as well going forward. It's been a very busy year for us. We looked at over 300 deals, and we pulled the trigger on 1 or 2 new deals this year. So it's a very thin needle eye to pass through. Again, some history. Generally, it's been a very good performance for us, with a NAV per share development generally going up, with a few exceptions. You see there in Q1 of 2020, at the start of the COVID pandemic, we wrote down the portfolio 25%, but since then it's been growing again very nicely. And the share price has roughly tracked the NAV per share with a few exceptions. And these numbers in terms of share price and market cap is obviously dated, as you can see. Today is a different story with the horrific things that's going on in the world. It's easy to invest money, but it's another question to get money back. And as mentioned, we've done 4 exits, 2 less successful, but 2 extremely successful. And that was in Tinkoff Bank and in Iyzico Payments, a Turkish payments company, where we got in the range of 60-65% IRR on those investments. So we're quite happy about that, and something we hope to be able to replicate. And that's what we're working super hard to achieve. I also want to mention our shareholder structure. We have a very supportive marquee investor-based number of names with Rain Caniff from a Swedish perspective, Swedbank Robur Funds. We have Wasatch, Fidelity, Wellington. Super strong shareholder base that's been extremely supportive over time when we've been raising money. We also see a trend which is interesting, that some of those international big names are actually starting to invest directly into our portfolio besides being shareholders in VEF. Brazil, again, that's the big part of the portfolio. So I'm going to quickly touch upon why we have focused a lot on Brazil. And that's not by coincidence, it's by design that we have such a big footprint there. So it's a scale market, as mentioned. It's super important to us. It's one of the most online markets in the world. Obviously, internet penetration and smartphone penetration is what's driving much of the distribution around the financial services companies or the fintechs in these markets. It's a very revenue-rich market in terms of unit economics. Brazilians are paying some of the highest interest rates anywhere in the world, while the banks are charging tremendously high fees on all their services as well. And it's a well-banked ecosystem, which means that many of the consumers are sort of acquainted with financial services. So it's not so much a case of educating everyone, but rather offering better, smoother, and more efficient and better priced products to the customers. Obviously, operating in the fintech space, regulatory landscape is super important, and Brazil has had a very friendly and enabling central bank that's been supportive of the fintechs coming out of that geography. Great people and ecosystem, both from an entrepreneurial perspective, but also from a co-investment perspective, because we do invest with the local VCs in each and every market, which is super important for what we do. And last but not least, it's a very functioning exit market. We've seen names like Pags, Stone, more recently Nubank, XP making tremendous exits and IPOs in that market. And again, the 56% of our NAV is represented by mostly Creditas. It's over 90% of the Brazilian exposure. Creditas is a digital secured lending platform focused on consumers, and they leverage the assets of the core assets of their consumer base, which is their cars, their homes, and their salary or the payroll. So Creditas is building a focused ecosystem around these assets, providing loans. And this is in a country where, again, Brazilians are paying some of the highest interest rates anywhere in the world. At the same time, roughly 70% of all the cars and homes in Brazil are owned debt-free. But they're super leveraged on the unsecured consumer side, which is heavily priced and just far too expensive. And this is where Creditas is offering an alternative to them. Very fast growing company, and this is the company that's probably the most impactful for us in the near and midterm, given the size of the NAV, but also the fast growth. They're growing about 3x a year. Latest reported numbers show a loan portfolio of 3.7 billion Brazilian reais, which is the equivalent of $725 million of a loan book, and that's secured. Everything is secured in this case. This slide is just to give you some visuals on the development of Creditas, how fast they are growing. So most of the metrics are pointing up and to the right, as you can see, besides the net income. And that's driven by the aggressive growth and investments in product and services. But very healthy unit economics in this company. And again, getting ready to IPO. They're getting IPO ready sometime in 2022. Quickly moving on to Mexico, our second geography of focus, where we have 2 investments, and again, completely driven by Konfío, our second largest holding. Mexico it's a big country, as many of the countries where we invest, and they have a very big number of SMEs. The SME space is generally unloved, we feel, across the globe, and Mexico is not a different story in that regard. Roughly 7 million SMEs operating in the country, while the banks are focused on only the corporate side, the big, large companies, and the retail, the high-end retail, so to speak, in the banking system. And less than 10% of those SMEs actually have access to credit. And that's where Konfío started as a digital lending platform, unsecured, focused on the SME space. Today, this is also a very fast growth company. Today, Konfío is a digital SME bank in the making. They have applied for a banking license, and they are exploring different avenues to acquire one. And a company growing roughly 2 to 3x a year on most of the metrics as well. I think in terms of size and shape, it's probably 18 to 24 months behind Creditas as a comparison. And these companies are evolving very, very quickly. So being a pure digital lending platform has now become, again, a digital bank in the making, but also a 3-pillar-based strategy where they now have started to offer ERP, think Fort Knox as a reference, but also payments, B2B payments and B2C payments. So that is sort of creating a holy trinity, if you wish, and catering to most of the needs that the SME space has. The core still being the credit side, of course, with their unique tech that's supporting that. But very well-funded company. And if you're more interested in Konfío, I suggest you go to our website and watch one of the investor webinars, which is available, where David Arano, the founder, is giving some more flavor on that. Last but not least, India. 9% of our NAV, and one of the geographies becoming more and more important. We spent 5 years roughly looking at and researching India before we actually found our first investment that ticked all our investment criteria. And that was JustPay. We now have 3 holdings there. Super happy about that, and we look to add more over time. But JustPay is a very unique company that I would like to spend maybe 2 minutes on. First of all, India. Scale market, that's knocking in open doors, obviously to say, but it's also one of the most advanced and complex digital payments infrastructures operating in that country. And India was also one of the first countries to mandate 2-factor authentication for digital payments. That, in combination with the extreme number of different payments options which is available in India, you have a big number of different wallets. You have credit cards, debit cards, QR codes, BNPL type of payments, UPI, etc., etc. And those 2 factors in combination is creating a tremendous friction for many of the merchants. And the consequence of that is that the conversion rates at the checkout is being hurt. And that's where JustPay comes in. So they're a very tech-focused company, and they've built a unifying layer that sort of solves for the 2-factor authentication and has value-added services that increases the conversion rate for the merchants. And the client base that they're working with is Amazon, Uber, Flipkart, Ola, Swiggy, Geo Group. So one of the biggest, or some of the biggest merchants operating digitally in India. That's their client base. A fantastic company, extremely well positioned and uniquely positioned in the payments ecosystem in India, effectively operating more as a SaaS company, if you wish, but they're deriving the revenues as a payments company, meaning by a per transaction basis. Now, India is known, and many of you know this, the take rates in India are tiny, It's a different world compared to Brazil with the juicy economics that we talked about. So this is a volume game. And if you look at the volumes that are passing through the pipes of JustPay on a yearly basis, from a GMV perspective, it's $75 billion, and they are facilitating more than 8 million transactions per day. So a company that is extremely well positioned in the ecosystem, set to grow, and also growing with a growing market. And this slide is just to provide you with some more color on their relative positioning with their peers. There are no exact peer, to be quite frank. They are super unique here. But also in terms of payments volumes and the trajectory with UPI payments, which is the public free infrastructure in India. So they are growing with their merchants and the market. We have extremely high hopes for JustPay, and they recently raised money as well, like the top end of our portfolio. Maybe just a quick summary before we close this. So NAV is continuing to reach new highs. We delivered the highest NAV and NAV per share since inception at the end of this year. Creditas, again, understand Creditas if you want to understand VEF. It remains the key asset for us, and we can see that the imminent impact on NAV will come from Creditas, probably. In the current volatile market conditions, I think it's important to touch upon how the portfolio from a funding perspective looks as well. And the top 5 of our holdings, which represents 80% roughly of our NAV, are well financed and recently raised money. So they don't need to tap the capital markets in the short term, which provides us with a big comfort. We see the investors increasingly investing alongside us directly into our portfolio, which is a testament to that we are doing something right. And we have a tremendous pipeline of new companies, and we hope to be able to communicate some new exciting investments in the near future. And I think that's it for me.
Thank you very much, Henrik. That's certainly very, very exciting. So as a first question, I was wondering if I'm sure a lot of investors are curious in which of your holdings do you see the most upside from an IRR perspective right now? I know that Creditas is such a large holding in your portfolio, but if you just look at the sort of absolute upside in the individual holdings.
I think it's easy to revert to the very small holdings in the company if you look from an IRR perspective. But in terms of absolute dollar terms, I still believe in the short term that Creditas is the case at this stage. Again, as mentioned, they are getting ready to IPO, to get in a position where they can decide depending on markets, etc. It's election year in Brazil this year as well. So many moving parts, but yeah, we have high hopes for that. But then again, with the type of growth rates that you see across the top end of the portfolio, companies growing 2 to 3x on a yearly basis, that's compounding, which means that the potential NAV impact can be significant from more companies than Creditas. But we are long term. We look at 5 to 7 year investment horizons, even longer, depending on a case by case basis.
That's really clear. Thank you.
Yeah.
And with regards to Creditas, I'm not sure how connected this is, but we had this recent IPO of you mentioned the Brazilian Nubank,
yes,
right, which has been quite weak, I think, in the initial trading here. Can you say, has that in any way affected your sort of influenced how you're thinking about a potential Creditas IPO?
Yeah, not really. Clearly, we are very aware of anything happening in the capital markets, and specifically when it comes to fintech peers, if you wish. Now, Nubank is a digital bank. It's very different from Creditas, which is an asset-focused ecosystem, right? But they have collaboration. They have a strategic partnership where Creditas will start to offer their services into the 34 or 35 million people customer base of Nubank, which is tremendously exciting. But I think from an IPO perspective, we need to look at Creditas from a standalone basis, even though we know that markets will obviously look at Nubank, of course. then I think there are as many views. I think I read maybe 5 or 7 different analysts' coverage of Nubank, and there are similarities, but there are also different views on their ability to generate revenues and how sustainable the growth is, etc., etc. So I think we pay attention to the outside, but we focus on the actual asset in this case, which is Creditas.
That's really clear. Thanks for that. And also, I mean, you mentioned that. I mean, from a funding need perspective, the portfolio looks really good, and also your balance sheet is exceptionally strong as well. But when it comes to Creditas, if that listing were not to occur this year in 2022, but in, say, 2023 instead, would you consider the company still fully funded up until, in that case as well, or would you require an additional funding round?
So I would look at it from this perspective. I would say, yes, they are well funded, for sure. They recently raised $230 million, I think, just by year end. So they're exceptionally well funded today. But the level of funding is correlated with the growth of the company as well. So it is within the realm to decide whether they want to stay, depending on IPO or not, how aggressively they want to pursue and acquire customers and make acquisitions, which they have down the line. They're evolving the business model constantly. So we're not afraid in that regard. And also just I think it's important to mention. I mentioned the Q1 of 2020 when the COVID hit, and what Creditas did at that point, they just stopped customer acquisition spending, and they turned cash flow positive in 3 weeks. So the unit economics are there. So it's more a question of decision as opposed to can we make it. So we feel they're in a good position at this stage.
Okay, yeah, that's a comfortable place to be in, for sure.
Well, it's 52% of our NAV, so we need to be comfortable.
Right. I get it. And since you're investing in fintech and the financial space clearly, and we have this macro environment with talk of higher inflation and interest rates as well. Can you in some way generalize like what would the impact be on the portfolio or the portfolio companies from higher interest rates? Is that positive or negative for the portfolio as a whole?
Look, I think most of the models are sort of interconnected with and will be adjusted for rate hikes over time. You will naturally see a lag, but in the case of Creditas, again, the duration of the portfolio is connected to the funding of that specific portfolio, because they're an asset-light business and they're raising FIDICs, external funding vehicles, and the duration is connected to the loans as well, and the pricing is interconnected. So I don't really see a big risk, but obviously, rate hikes will put pressure on everyone in some shape or form. That's my sense.
All right, and as a final question, you have this. You're looking to list on the Nasdaq, the main Nasdaq market later this year. Could you give us an update on the progress there where we're at?
Indeed, we do. This is something we've been discussing for a long time, and it's a serious move, we think, and a necessary one. We have grown quite significantly over the last couple of years, and I think we feel ready to move to the main board to provide more liquidity, hopefully. Will it help with our traded discount? I don't know, hopefully. But more investors will be able to own us, also from an international perspective. And I think we guided the market and said that sometime in Q2 or Q3 we are planning to IPO and relist. So that's in the making. It's a lot of work going on at the office at the moment, preparing for this. But we keep the plan, and it's all positive.
Sounds good.
Yeah,
we look forward to that. I think that's all we have time for right now. Thank you very much, Henrik, for for participating at this seminar. You're always welcome here. And thank you everybody for listening in. And we look forward to the next presentation in about 5 minutes. Thank you.
Perfect.
Good afternoon and welcome to this event with Axactor. My name is Jan Erik Gjerland. I'm a research analyst at ABG Sundal Collier. With me today I have Kyrre Svae, Chief Strategy and IR at Axactor, and he will run through a presentation that he has made for us, and then we will open for my questions after that, and we will have a good session in my view. So Kyrre, the floor is yours.
Thank you so much, Jan Erik, and thank you so much for inviting us to present here today. If you please move to the next slide, I would like to go through the agenda. So we are planning to do a very short company introduction just to get you on the page on who Axactor are. And then we would like to share some of the highlights on what we are working on currently, and then our views on the outlook. So let's get started, and please move to the next slide. Axactor was established in 2015. We are headquartered in Oslo, and is one of Europe's top 10 debt collectors. So we have two main focus areas, and that the first one is the NPL segment. So that is where we buy defaulted debt and collect on those. The second segment we focus on is third-party collection. That is when we service debt on behalf of others. And then, as you see on the slide here, we have a third segment, real estate owned, which is a runoff segment we are exiting. Since inception, we have entered 6 countries, and our main shareholder is Geveran, who owns 46% of the company. So if you please move to the next slide, I would like to share some comments regarding our strategy. So Axactor was incepted to disrupt the industry on cost to collect. The founders saw a potential to do debt collection more cost efficient. And as you can see from the graph on the left-hand side, we believe that we are the most cost-efficient player already in Europe. And we do this through following a niche strategy where we focus strictly on NPL and 3PC. We will continue to grow in existing countries to gain economies of scale. And we focus on bank and finance, unsecured business to consumer debt. So that's short about who we are and the strategy we follow. If you please move to the next slide, and then one more, we can start to work on highlights. And if you have done some research on Axactor, you will ask yourself a question, I guess, which is why price book is significantly below 1. And as you see on the graph here, we incepted in 2015 and had a rapid growth, both in revenues and in profits until 2019. But 2020 and 2021 has been very disappointing years, where we have cleaned up errors we did during the startup phase. And it's 2 main errors. One is that we entered the RIOs, which is real estate in Spain. But now we have sold off 90% of the portfolio and will treat it as discontinued business going forward. So that's lowered our results in 2020 and 2021 significantly. Secondly, when you do a startup, you need to take risk and you have limited data and you need to grow rapidly. So during that phase of the company, we did some errors in portfolio acquisitions. And those have also burdened our results for 2020 and 2021. But hopefully that is to the past, and we will see black numbers again from 2022. So if you please move to the next slide. When we presented our fourth quarter results, we did a significant negative revaluation on our portfolios. You can then ask, what is then the current state of the company? And for here, it's important for us to underline that we still have a very robust balance sheet following the revaluations. So we have a satisfying equity ratio of 30%. We have sufficient liquidity reserves, 42 million in available cash and unused funding lines of 200 million euros. We have a satisfying headroom to covenants. We have no maturities until end of 2023. And very importantly, we still have significant investment capacity. So we can invest for on or about 300 million euros in 2022, whereas our replacement capex is only 108 million. And what does that mean? Well, that means that we expect to solve cases and reduce our book values to the equivalent of 108 million. So just to keep the company at a constant level, we need to acquire portfolios for 108 million, but we have an investment capacity of about 3 times that level. So that gives us the opportunity to grow. So if you please move to the next slide, I would like to share with you our strategy per segment. And on the NPL segment, it's all about blending the book. Axactor was incepted during a point of time where portfolio prices were at its highest. So that means that our back book, the current debt we hold, comes with a lower profitability than the average has been during the history, and which is also much lower than what we are acquiring for at the moment. So on NPL, the strategy is all about acquiring as much debt as possible to the current market prices, which is much more attractive than what we have on our current books. On 3PC, the pandemic has really affected the market by reducing volumes. So the pandemic has kept people from living their normal lives and their normal way of spending and consuming. So it's been reduced, and then defaults in society has been reduced, and hence we get less volumes on our 3PC contracts. So what is ahead of us on 3PC is basically volumes returning. But it will take some time, because now first we need to see consumption going back to normal levels, and then people need to default on that debt. So it takes some time before. But hopefully when we enter 2023, we will be back to normal volumes again. On the third segment we have, the runoff segment REO, it's in the tail. It's, as I said, 90% is sold off. It's only 29 million left in book values. So I think that's the highlights on what we are doing on each segment currently. And if you can please move to the next slide, I would like to go a little bit deeper into the NPL segment. So when the pandemic hit us in the start of 2020, legal systems basically closed down in Spain and Italy, which gave us a huge challenge on cash flow. So as you can see on the graph, we drastically reduced our investments, to safeguard liquidity and to understand the risk in the new situation during the pandemic. But now we have for a longer period of time been back to a state where it's normal operations, and as you can see, investments very positively are picking up again. And for 2022, we expect to invest between 200 and 250 million euros. So if you then move to the next slide, please. I would like to share one more point regarding investment levels. So in 2021, we invested for 71 million euros on what we call forward flow contracts, which is basically we commit to buy defaulted debt going forward from banks. So that was 71 million euros in 21, whereas we have already committed for 117 million in 2022. And if you remember, our replacement capex is 108 million. So this implies that we should grow just based on what we have invested so far. And then in addition, you will get new forward flow agreements, which we enter, and one-off acquisitions. So I think we are in a good place to return to growth in 2022. So if you please move to the next slide. I have used the last two slides to talk about investment levels. And on this slide, I would like to talk to you about profitability on those investments. And the way we communicate the profitability on investments is through IRR. And here we are sharing our gross IRR. So on our current back book, you can see that our gross IRR is 16.3%. And through buying more attractive debt in 2021, we have increased it by 0.6 percentage points over the last year. And that doesn't seem a lot. But remember, everything else equal, if we increase the gross IRR on the back book by 1 percentage point, we increase the return on equity by 2 percentage points. So this means a lot, and is again the essence of the strategy on NPL, to blend out the book with more profitable portfolios. It's also promising to see that the 117 million euros we talked about on the last page, which we have already committed for this year, is with a gross IRR of 22%. So it's 5.6 percentage points higher than the back book. So blending up the book is expected to continue going forward. If you then please move to the next slide. We have also used the last 2 years of pandemic to improve our operations and to become more cost efficient, which has been natural since we have been purchasing less and using less resources on onboarding new debt. We have been able to use resources to improve our operations. And it's very satisfying to see that we have been able to reduce our OPEX with 4% from 19 to 20, and furthermore 5% from 20 to 2021. So if you then please move to the next slide, and then one more again, I would like to share our thoughts on outlook. So what happens when you do a large revaluation? Well, it reduces the downside risk on collection performance because curves going forward are lowered. So we expect collection performance to be back at around 100% going forward. And then the cost program we did during 2021 will of course render lower costs going into 2022. If we look to investments, we expect to deploy between 200 and 250 million euros in 2022, which is more or about the double of our replacement capex. So the effect of that is that we expect to be back on growth in 2022. On 3PC, we did a smaller acquisition during the fourth quarter, and will, as of 1st of January 2022, get the full effect from the acquisition in our books. Nothing of the acquisition was in the Q4 numbers. So with that, I would like to conclude the presentation from my side, and I'd like to discuss some questions with you, Jan Erik.
Perfect. Thanks a lot for this very good introduction. To pinpoint it, your share price has of course been down a lot, as you pointed to, and you had some negative revaluation, and we also have seen a negative sentiment in your sort of peers as well. So how certain can we be then now that you really have cleaned the books as you have said you have done and are back to this fluctuating on the collection curve around 100%? Because this is probably the key question here. You've done it once, you did it twice. Why should we trust you now, so to speak? What have you done differently, and what are you seeing out there?
I think that's a very good question. And firstly, I think I have to answer straight out and say we can't be certain, but none of our competitors can be certain either, right? We live in the world of risk. The very unfortunate ongoing war now is a good example of that. But we believe it's correct at the moment. And have of course also done a lot of initiatives to ensure that it doesn't reoccur. And one thing is we haven't invested in REOs in a couple of years, and we'll never do that again. So that is kind of off the table. And then remember when we established the company, we had to grow fast. And we had to do it without almost any data available, which introduces risk. And those data are now to a much larger extent available to us. And we do not have the pressure of growing that fast. We have the luxury of being able to be disciplined. And I think we have really proven that in 2021. We could have acquired much more, but we have been disciplined to ensure high enough returns on the portfolios we acquire.
Perfect. Could you just shed some light into which areas or which countries you have seen the largest write-downs or revaluation, or if this is in all your marketplaces? Is it different how it looks when it comes to these assumptions, etc.? So could you just shed some light into that, please?
Absolutely. And there is one country that sticks out, and that's Sweden, with definitely the largest share of the write-down. And here I think it's the reason for it's a combination of several things, but one major thing is that quite the opposite of many other countries, the debt in Sweden on consumers are increasing fairly rapidly, even though number of people with defaulted debt are declining. So whereas in Norway you can see a reduction, for example, in consumer debt. So I think it's been the ability of Swedish debtors to repay their debt has been drastically reduced compared to what we assumed when we acquired the debt. But in addition, we did some pricing errors during the startup phase, which we have been suffering for in 2020 and in 2021.
Okay, thank you for that color. If we go to then Ukraine and the war, as you touched upon, how is this affecting your operation as you sort of have most of your NPLs in the Western European countries and none in the Eastern European countries? Is it anything that is hurting you in some way, or how should we read that? If you can shed some light to that.
Well, if you look to the portfolios, they are currently in 6 markets which are not in Eastern Europe, right? So we are in Finland, Norway, Sweden, which are the closest, but currently not expected to be affected directly. But we have 2 larger IT vendors, and one of them are Ukraine-based. So in that way, we are directly affected. But of course extremely worried. So, but not on behalf of our business, but on the behalf of our people. So, but the war did unfortunately not come as a surprise. So we offered all employees with our subcontractor to move out of Ukraine before the war started and relocate to Europe. So all who wanted to do that did that, and now it's all about supporting those who decided to stay back. But what we also did is to ensure business continuity. We did handover of tasks so that those who still are in Ukraine we have extra capacity and others who can cover. So, but in that way we are affected, but it's not affecting our operational capabilities or taking down any systems or in that way. It's more of the taking down some capacity in the longer run.
Understand. When it comes to the portfolios you don't have in Europe, in Spain and Germany and the Nordics, as you pointed to, how will sort of the increased sort of energy prices and spending, which they would not like to have really, hit you in some way or another? Has you sort of calculated anything about that, or what is your thinking around that topic, so to speak? A person who are in shit when he cannot repay his debt is probably in even more shit when the energy prices hits the roof. So it's about how should we read this around your collection potential going forward?
Yeah, very good question. So and it has a lot of different effects, right? Because of course it's negative for us when the disposal income for our debtors is reduced. I think we have been quite surprised about how that the energy prices before the war didn't affect us more. But of course it's expected to affect us to some degree now. But for us it's impossible to say to what extent and yeah. But it has some other effects as well, and that is of course it generates new volumes to the market as people default on other debt. So, but I think what we have seen is that over some period of time, the industry is fairly stable for this kind of shocks. So yeah, let's see. It's hard for us to say something certain about it now, and it's of course also extremely hard to know how this plays out.
I agree. You touch upon your gross IRR new loans you're buying at sort of 18 to 22% levels, and the back book is 16. How far down would you like to go, or how certain can we be that these 18 to 25 is the new sustainable level when it comes to taking on new debt to a good margin, so to speak?
Yeah. Well, again, we can't be certain, but in our view, that is the historical long-term average. And whereas our back book is stemming from the worst period of time regarding portfolio prices. So I think that's the main answer. And secondly, we now have the luxury of not having to grow that fast. So that also helps in being able to lift the gross IRR. And then also supporting for us is that last year we bought at an average gross IRR of 23%, right? So above the range we are expecting. And 170 million we have committed for this year, it's at 22%, right? So we will be within that range for this year as well, with a high degree of certainty. So yeah, I think that's
okay.
Behind.
When you talked about operational efficiency programs which have run through good during 2020 and 2021, and you'll probably have a lower run rate into 2022. How should we read this into the cost of collection, and also maybe in the lower cost efficiency within the 3PC business line? What should we expect from you going forward? Is it so that we should be much more down, or just gradually down, as you have been sort of coming down a little bit in the last couple of years from the higher level?
Yeah. I think we delivered a very, very strong 3PC margin in fourth quarter of 47%. But that's also a seasonally strong quarter. So but adjusted for seasonality, I think we have one of the higher margins in the industry already on 3PC. So I don't see any material improvements there going forward. I would rather look for top line growth on, and for us as a company, it's when you grow fast, it introduces the opportunity to do larger restructuring and cost cut programs, which we did in 2020 and 2021. Now, and we have done more of the easy part, if you understand what I mean. Now it's more about continuous improvement. It's not the major restructuring. It's more about becoming a little bit better every month. And that, so I wouldn't expect any further fast drops in our cost base, but more of continuously tweaking a little bit, improving it over time.
I see. Time is running fast. 30 seconds. Why should we invest in Axactor, you think?
Oh, it's a good and hard question. But for me, it's about we have not been able to deliver 100% collection performance. When we get back to 100%, it will of course mean a lot for our results. And I think there is a lack of confidence since we have not been able to meet the curves. So when you get back to curves, at that point of when you do that for some quarters, confidence will hopefully return. And then secondly, I think we have proven that we are on the path to blending out the book, which will improve profitability. And then 3PC volumes coming back after the pandemic will also hopefully help us.
Thanks a lot for that presentation and your answers on all my difficult questions. Thank you to the audience and also listening in, and welcome back. And thanks once again to Axactor. Have a great day.
Much, Jan Erik. Great talking to you.
Thank you. Bye-bye.
Bye.
Good afternoon, everybody, and thank you for participating in ABG's Investor Day. My name is Benjamin Silverstone, and I'm equity analyst here at ABG. I now have the pleasure of presenting the next interesting company, Össur, which will be represented by the current CFO and to-be CEO, Sven Solvason. Sven, thank you very much for being here today, and the word is all yours.
Thank you, Benjamin, and thanks to all of you who are listening in. It's good to be here with you today. I will go through a short presentation on Össur, explain a bit the background, sort of what we do, where we compete, and what our focus areas are, and then transition to more, let's say, forward-looking perspectives. So this should take 15-20 minutes, and then we can take some questions at the end. If you go to the next slide, please. Össur is today a mid-sized global medical device company, and we compete in two sub-segments of the broader orthopedic market, and I'll explain those in more detail on the following slides. We have operations in 35 countries. Actually, here in 2021, we added 7 countries to the list, and we have about 4,000 employees across the globe, but more concentrated, let's say, in the more developed, more well-funded healthcare markets of the world. Össur is a technology company. We invest about $30 million every year in research and development. We have around 2,000 patents that have something to do with how we fit devices and solve mobility problems, and fit devices to the external body. That's important to mention, that we don't do anything that is invasive as such. We only have externally fitted devices. The company has grown every year, except for the COVID year. Every year since the company was listed in '99, we've had solid organic growth on top of acquired growth, and the operating EBITDA margin for 2021 was around 21%, which is similar as pre-COVID levels. Ultimately, we're listed on the Nasdaq Stock Exchange in Copenhagen, and our main shareholder is the Demand Invest Foundation that has been invested in Össur since 2004. Okay, this was the highlights. If you go to the next slide, please. If we then dive into the two segments that we compete in a little bit more detail, starting with prosthetics. Here we have a complete offering for, and we basically offer and manufacture everything that is needed to build a fully functioning prosthetic leg and arm for individuals who have lost an arm below elbow or individuals who have lost a foot below or above knee. Most amputations are in the lower extremity or the below waist. That's simply because most amputations are because of, let's say, diabetes that leads to vascular complications in the lower part of the body that ultimately leads to amputations. That is the vast majority of all amputations. So probably 90% of the market is in lower extremity prosthetics. We segment our solutions by mechanical solutions and bionic solutions. Mechanical solutions are products that don't have any electronics or any sensors to help the user walk more normally. While the bionics are exactly that. The bionics are intelligent products that sense the environment, sense whether the user is walking up or down a slope, up or down stairs, and provide assistance such that when you see a person using a bionic product, they will come very close to walking like those of us that have two normal legs. So this is what we are doing on the prosthetic side. Bracing and support, that is let's say a market where we have products that serve or that are focused on a broad range of indications, everything from minor ligament pain to minor muscle pain to more complex post-operative solutions, or even chronic solutions like knee osteoarthritis. So this is a pretty broad product category, and we have quite a complete product offering in bracing and support, and this business is synergistic also with the prosthetics business, and I'll explain that a little bit better later as our main sort of go-to-market or sales channel are so-called orthopedic and prosthetic facilities that typically see both amputees and individuals who have a demand for some sort of bracing solution. Now, what is also important to mention here is that we are operating in the reimbursed world, as in most of our products, or virtually all of our products in our main mature or developed markets are reimbursed by some sort of reimbursement system, either public or private. If we go to the next slide, please, a little bit around our geographic footprint. Most of our business, probably around 85-ish%, is in, like I said in the beginning, in well-funded, developed healthcare markets. It is US, Canada, UK, France, Benelux, Germany, Scandi countries. This is the vast majority of our business. We have a growing business, and we let's say emerging market is around 10% of our business. That's not what you see in this slide. APAC also includes Japan, Australia, which we don't consider to be emerging. But if we pull the real emerging markets out from these three geographical areas you see on the slide here, that accounts for about 10% of our sales, and it's growing. That is the part of our business where we see the highest organic growth rates year over year. Just a little bit about the footprint, in addition, we are headquartered here in Iceland. Össur is originally an Icelandic company. We were founded here in Reykjavik 50 years ago. Today we have some corporate functions here in Iceland and a fair amount of manufacturing of the high-end, high-tech, low-volume prosthetics, and do most of the prosthetics R&D here as well. In the US, we have some R&D for bracing, and then in Mexico, we have a large manufacturing entity, and then we also do some manufacturing or outsource manufacturing to vendors in China and Taiwan for the more simple bracing products. If you go to the next slide, please. Just a little bit more details on these two segments, like structural details and a little bit about the growth dynamics, starting with prosthetics, which is a sort of a niche market in many ways. It is, we estimate, around $1.4 billion. It's fairly well consolidated. Össur has around 23-24% share, while Ottobock, a private company in Germany, has around, we estimate, 35-ish%. And then you have smaller companies that are maybe in fewer markets that are trailing after Össur and Ottobock. But in most markets, you will have a presence from Össur and Ottobock. Now, what drives growth in prosthetics, the easiest way to think about that is that we are serving an amputee population that is living out there and constantly need to maintain their prosthetic solutions and need to come in for maintenance, upgrades, renewals, etc. And this amputee population, at least in the developed markets, is growing at a low sort of single-digit rate. But what drives the value growth in the industry is that you have proportionately more individuals having access to higher technology or better products. And I'm going to come back to this point a little later. This is very, very central to the investment case. And ultimately, as I mentioned earlier, also we sell our products principally through orthopedic and prosthetic clinics, which are in most instances located outside of the hospital setting and are usually small service workshops where that serve amputees. The bracing market is a larger market in value terms. It's a more fragmented market. Össur is there among a group of companies that are sort of considered to be sort of second in market share after DJO Global, which is a US company that has about 20% share. The growth rates are lower than in prosthetics, and growth is primarily driven. These are volume. It's a volume growth. The average user of a bracing product is typically an elderly person. So as we all get older, on average, there's more demand for bracing, as well as demand for more active lifestyle, and also the prevalence of complications like osteoarthritis drive demand for knee bracing. The clinic, or let's say the route to market here is also orthopedic and prosthetic clinics, which is our same primary sales channel, like on the prosthetic side. All right, if we then sort of shift gear and move to sort of more forward-looking. If you go to the next slide, please. Our main strategic themes are growth, efficiency, and innovation. This is we sort of rally the organization behind these key themes and structure our initiatives along these lines. Just starting with on the innovation side, which is obviously a growth strategy in itself. We invest in innovation to drive growth. And if you go to the next slide, please, you see what we refer to as the technology trade-up. And I've already touched on this earlier. The growth in prosthetics is a lot around moving more amputees towards the upper right corner here, from mechanical solutions to bionic solutions. And this is our main task, is to convince payers that it's a good investment to pay for these devices, like the bionics, and there is very solid health economic evidence around bionics that supports let's say the notion that the healthcare systems of the world, they should pay for these products, because most of the cost for the healthcare system is when amputees, which are typically elderly people, fall and injure themselves and are hospitalized. And there's very clear data that shows that when people use bionics that sense the environment, that help the user walk more normally, people or users are much less likely to fall and injure themselves. And also they're much less likely to develop other problems that arise as a result of lack of mobility if you're using poor quality prosthetics. So the investment case for bionics is very clear. And today bionics account for, here in Q4, accounted for around 23% of the value in our product segment in prosthetics. So we're up by about 10 percentage points over the last 10 years. So this is a big, let's say, this has been a big growth driver for us historically, and will continue to be, as the penetration of bionics among the amputee population still remains very low. Then we have also here a reference to mind-controlled prosthetics, which is even the next step in technology development, which is around giving users more intuitive control of their prosthesis. We are currently going through an FDA approval process for sensors that we have, where we are working with a third-party company that has developed these sensors that we implant into remaining muscle tissue that then sort of communicates with the prosthesis and enables more intuitive control. So this is something which is a bit further out there in the future in terms of economic impact, but certainly the future for amputees to have more intuitive control of their prosthetic limbs. Now I need to speed up. I can see on the timing. If we can go to the next slide, please. Just a few other key themes when it comes to growth. We've talked about innovation, technology trade-up. We are also increasingly moving from just selling medical devices or components to our O&P clinical customers to also offering them different types of value-add services like reimbursement advice, and also very, very importantly, and that goes to the bottom point here, expanding in the value chain, offering our clinical customers to outsource certain parts of the customization process that is currently sort of done in the clinics today, to outsourcing this to us such that we deliver complete solutions to our clinics that serve the end users. And then a big part of the investment case here is also around emerging market access and geographic expansion. I mentioned in the beginning that we generate a small part of our business in emerging markets, but that's where the majority of amputees resides. And we are making investments into establishing presence in new markets and are actively developing business models that are more applicable in markets where there's less infrastructure and less established reimbursement and payment systems. And then ultimately acquisitions. We have been acquisitive historically and are currently and will continue to screen for targets that strengthen our business in the areas of acquiring companies, clinics that are servicing the users of our products. We are also actively screening for products that are complementary to our product offering, and then ultimately also screening for opportunities for market access and establishing a presence in markets where we currently are not present. If you go to the next slide, please. Just here you have just a little bit of numbers. Pre-COVID, growing mid-single-digit organic, double-digit, including acquisitions. Operating margins, gradual increase year-over-year, fueled by economies of scale and the prosthetics business growing faster than the bracing business, which drives positive margin development for us. And then ultimately, we used the strong free cash flow both to buy strong companies that strengthen our overall business, and then we return capital to our shareholders now only in the form of share buybacks. Just briefly on the next slide, you see the historical growth development. If you go to the next slide, please. Just a few more numbers on cash conversion, capital structure, and return of capital to our shareholders. And then finally, on the final slide, important for me to mention also our sustainability efforts. Our biggest contribution is obviously that we create products that solve mobility problems. That's our purpose. That's why that's what we do. That's why we're here for. That's the biggest impact we have on our let's say on our environment and our sort of constituents. But then we also have an ambitious plan in other areas to be as good of a citizen as possible. And we're carbon neutral here in 2021. We are both actively pursuing strategies to reduce our footprint, but then we buy let's say offsets for what we do for our carbon footprint to sort of mitigate the impact on our overall environment. I think that's the 20-minute mark, Benjamin.
Thank you, Sven, for the very thorough presentation. It's much appreciated. Just for the people out here who are new to the case, could you possibly just give an indication or an idea of how the timeline is for a new patient joining Össur for the first time, and how much of your revenue is recurring revenue from existing patients?
Yes.
Just to give an idea of that split.
Very good question. And let's say the two segments that we compete in are a bit different in what drives, let's say, the ultimate demand. Starting with bracing, which is mainly driven by sort of one-time incidents. There's an injury of some sort, which drives a need for a bracing product. That is the majority of the bracing business. Then you have the chronic, which is the slidgigt or osteoarthritis knee bracing, where we have a growing group of individuals that uses bracing to alleviate pain instead of doing knee replacement surgeries. So that's a little bit on the bracing side. On the prosthetic side, if an amputation will typically be performed in a hospital setting by an orthopedic surgeon, then once the patient is then ambulatory, they will be referred to an orthopedic and prosthetic clinic, which we consider to be like our main customers. In this clinic, the individual will be met by a prosthetist who will be, let's say, very influential in terms of what products and what solution is ultimately created for this individual, because the prosthetist will be knowledgeable about the payment mechanisms that are relevant in each and every jurisdiction, and will also advise the user on what the reimbursement will cover. So we have a lot of effort towards this prosthetist to convince him about the benefits of our technology. So this individual will then get a prosthetic solution which will need to be maintained throughout the lifetime of this individual. And we estimate that about 80% of our products in prosthetics are used for maintaining existing amputees and existing prosthetic solutions that are out there. So this is a very important element of the prosthetics business. And again, like I said earlier, it's about it's all about servicing the existing amputee population with better technology, better products that increases their quality of life.
Thank you very much, Sven. Just one last question for the last minute we have here. You obviously now 3 months into the year. There's been a lot of turmoil, both from COVID, Ukraine, Russia, a lot of things that are impacting a lot of businesses. Are you just able to give a quick indication of which factors have been on the radar at Össur during the last couple of months?
Yes, I mean, we went into 22 optimistic that we would have COVID behind us after sort of largely after the first few months of the year, and so far that seems to be a fair assumption. Obviously, the new crisis on the horizon is deeply worrying to us and as other companies, and I think all of us, our direct exposure to the conflict is minimal as such. We do have some employees in Ukraine, which we are taking as good care of as we possibly can. We have some product sales to Russia, which are currently on hold, and then we have some supply chain implications as well, which are not material and we've very much manageable. But it's more the bigger picture uncertainty that this conflict has brought, which we need to just monitor on a day-to-day basis. But again, we sort of the COVID impact has been significant for us, but we feel that we are gradually transitioning into a more positive environment. Absolutely. You're on mute, Benjamin.
Thank you. Thank you, Sven. Unfortunately, due to the time, we'll have to conclude the presentation here, but thank you very much again for being here today, and thank you to everybody who listened in as well.
Yeah, thanks for having me. Much appreciated.
Thank you.
Take care.
Have a good day.
Everyone. Cheers. Bye-bye. You too. Bye.
Hello and welcome back to ABG Investor Days. My name is Adrian Gilani and I'm an equity research analyst here at ABG. Today we are glad to be joined by the CEO of Hexicon, Marcus Thor, who will give a short presentation about Hexicon, and then hopefully we'll have some time for Q&A after that. But Marcus, I will leave it up to you with your presentation.
Great. Thank you very much. And first of all, thank you very much for having me here. Today I'll be speaking about floating offshore wind. So a segment of offshore wind that is in deep waters. And this is what we do at Hexicon. So my name is Marcus Thor and I'm the CEO. And let's get to it. I will today go through a brief of Hexicon, of what we do and our business model, followed by market developments, so what we see happening around the world of floating wind, that is, a business update from Hexicon, and be finishing up by looking forward. And to start off with, so Hexicon is active in floating offshore wind further off the coast and in deeper waters. And in these areas, we do two things. So we are both a project developer and a technology provider. We have our own patented technology, which is disruptive in the way of having two turbines on the same foundation, and I'll come back to that. That technology is very much driven towards the lowest possible cost of energy and the best chance there is to coexist with other stakeholders out at sea. On the project development side of the business, we focus on the early stages of development to originate new opportunities in new markets and take those through the early development steps where the value enhancement is great. That combined with, on the project development side, bringing in investors and partners fairly early. On the technology side, we're outsourcing a big portion of the specific designs when it comes to projects. That allows us to maintain a asset-light operations. So that keeps our capital intensity low of the operations and enables us to scale the business model into several projects and geographies. So we are currently active with projects across Asia and Europe. We just started gotten going in the US, which will be a significant long-term market for floating wind. And we'll be looking to add new markets to that in the near future. We're based here in Stockholm, and we are 25 people, all but 3 located in Stockholm. We've got 2 in the UK and 1 in the US. So I wanted to start off diving straight to what we're heading for. What is our vision and goals? And here, at a timing that is 2025, where we see that floating wind has gone from what it is today, which is test and demo and small-scale project of a handful of turbines only. There are total 18 turbines on floating foundation in full scale around the world, and that can be compared to over 10,000 on the seabed globally. There are, however, enormous amounts of planning ongoing across Asia, Europe, and the US for floating wind projects. So we will, during this decade, see large commercial scales being deployed. So what we see during the mid of this decade is that floating wind has transformed from early stage R&D into an important part of the energy mix. We see ourselves being a leading player within that field, and it's about ensuring that we maintain the early position that we have already created by being a very early mover in this space, maintain that role for Hexicon in the years to come, and that our technology is verified, proving all the benefits that we see and that we have spent years in assessing, that those are verified in full scale, and that our technology is an obvious choice for developers around the world. Specific goals: we want to have projects around the world with ongoing revenue generating operations in both Europe, the US, and Asia. Technology, that the TwinWind technology is verified with all benefits proven. And finally, on the financial front, that across Hexicon AB, the group operations that were EBITDA positive. How will we get there until 2025? We'll continue to work with partnerships. So we see ourselves as one success factor is to continue to deepen both existing and new partnerships. And I think that's especially important in the early days of creating a new market. We'll continue to mature, optimize, ultimately scale our technology for it to be used in big volumes, and continue to expand our competence base and organization across the geographies where we are active. So where are we and why are we developing a rather large project portfolio? Well, first of all, I'm extremely pleased where we are today, given, as mentioned, the fact that we are a company of 25 people and have managed to get the project portfolio of a net holding of around 2 gigawatt already. We're doing it for three main reasons. One is that revenues from project developments is shorter term than the technology. So this is part of the diversification across different legs of the business model. So we're seeing an ability, and we're already having revenue from the project development side of the business. So that's shorter term revenue potential compared to the technology. Second reason is that, of course, each project is an opportunity to install the technology down the line. But first we have to, in parallel, which we're working hard towards, and I'll come back to that, verify our own technology. We can't expect the technology to be used in greater volumes before it is verified. So to build a pipeline of projects enables an opportunity down the line to use the technology. And lastly, we're on a high growth journey. We are building our brand and position in this global arena. And there's no better way in my head to do that, to build a credible brand and to be associated with the right projects in the right markets with the right partners. So I'll come back to projects, but we have what we define to be projects in both South Korea, Scotland, England, and Sweden currently. So the technology then, which we named TwinWind. And the reason the word twin there is, of course, that there are 2 turbines on this floating foundation. And this is very different from almost all of the competition, where you would see 1 turbine on each floating foundation. Why do we think it's good, and why do we think we can place 2 turbines on the same foundation? Well, the key is that you're able to rotate this platform. So in the triangular shaped steel structure, the front corner that does not hold the turbine on it is where the mooring system is attached from beneath through what's called a turret. And that is basically a big bearing. So this allows the whole unit to rotate with the wind direction. So just like if you were to throw out the anchor from the bow of the boat, that boat would swing with the wind direction, and so will this technology. And that allows and ensures that the 2 turbines do not disturb one another. So they are maintained out of the wake of one another, and that means that we can place them very close to each other. And what that then gives you is a higher, what we call power density. So to squeeze in more turbines, more capacity, more electricity out of any given area. And this is important for 2 reasons. One is that it has some direct cost benefits, reduction of the amount of cable, etc. But it also is a way to add a higher likelihood of avoiding conflicts at sea. And any project development, especially when it comes to large infrastructure, is associated with a lot of needed engagement with various stakeholders. So to make sure that you avoid or minimize the conflict with other stakeholders is key, not only to executing the projects themselves, but for a swift permitting process. So the 2 main design drivers of the technology, one is the obvious cost of energy. But secondly, it's also about offering a truly sustainable technology. And by sustainable, what we mean by that is that coexistent part. So to be able to develop offshore wind in a coexistence with everything else out there, biodiversity, other man-made structures, shipping, military, birds, visual impacts, etc. And I'll come back to, we are working very actively right now towards the first installation of this technology in full scale in Norway, and that's targeting to be installed end of next year, and I'll come back to that project. So brief look around the world of floating wind, I wanted to mention 3 things. One is for a Swedish company to of course mention a lot that's happened very lately in the Swedish context. And that is that the Swedish government came out a few weeks ago with a new offshore wind target through new marine spatial planning to provide an additional 90 terawatt hours a year from offshore wind. And although personally I would have liked to have seen quite a lot more details to this, not the least the timing associated with it, I think it's worthwhile reflecting on that it is the first time we've seen a substantial target for offshore wind in Sweden ever. So it is, you know, a market that is certainly very swiftly going in the right way through the lens of offshore wind. In the US, the Biden administration is working very actively to put through a series of auctions. 7 in total have been decided for, and the last one was closed as late as just a week ago. The New York Bight, which I think gathered over $4 billion in so-called option fees or revenue to the state. And the largest one from RWE, they paid for 1 concession over $1 billion. So the US, in my opinion, is one of the larger long-term markets where we've just, since February 1st, have our own country manager working to position ourselves in that market. And lastly, I want to mention, sorry, now I got the wrong slide here. Here we are. Also want to mention what happened about a month ago, which was ScotWind. So the Scottish government and authorities have been planning and paving the way for an auction in different sizes across Scottish waters for several years. And those results came out just about a month ago, which is an extraordinary amount of 25 gigawatt of offshore areas in Scottish waters being awarded. And remarkable here is that 15 of those 25 gigawatt was in floating areas, so deep water areas. And not only the number itself, but 2 additional takeaways is one, that the world's largest offshore wind developer, Ørsted, Danish Ørsted, for the first time has now entered a floating project. And secondly, that the price difference for the option fees that were paid, and these are from developers from all across the globe, I think there were over 70 bids for these various areas. The price difference was around 15% between floating sites and fixed bottom sites. And then you need to keep in mind again what I did mention earlier, that floating turbines, there are only 18 around the world, and there are over 10,000 on the seabed. So the maturity is very different, but the way the industry values floating versus fixed opportunities are not that different. On to a business update of Hexicon. So I just wanted to start with mentioning a few highlights since our IPO. So we listed the company in June last year on First North here in Stockholm. And a few of those highlights is that our flagship project in South Korea that we're undertaking together with Shell have now secured all EGB licenses, which is a power permit in the Korean context, for the complete area with a total output of 1.3 gigawatts. Here in Sweden, we during the summer have created a joint venture called Freja Offshore, where we are together with our 50-50 partner Aker Offshore Wind, developing multiple sites both on the east and west coast of southern Sweden. In Norway, I demonstrate the project is speeding up towards fabrication start, where we during the period from the IPO have secured the turbine supply, so 2 Vestas turbines that will be used, and have partnered up with global contractor Worley to build the project. We have penetrated and engaged in new markets, including both the US and Italy, where we set up a new joint venture and project ambitions. And lastly, that Koens Hexicon, our joint venture with medium-sized company Koens in Korea, is outside with the project that we're doing with Shell, is developing new areas. And we have, during this period, secured 4 additional areas, around 450 megawatt each, around the coasts of Korea. And a brief look at the overall project portfolio. So again, our way of working through focusing on origination, bringing it through the early value enhancement steps, then inviting investments and partners fairly early, has allowed us to scale this into a substantial project portfolio. And by certain criteria, site control being a key one, we have a definition difference here between projects and prospects, which is a maturity difference. And on projects, we are working in both South Korea, as mentioned. We're operating there together with Shell and have been there for a few years. Towards a 1.3 gigawatt project, Hexicon's holding in that is 10%, and they were targeting a fabrication start somewhere at the end of 2024. So this is a market that's just pausing for a second on South Korea, and I lived there myself during 2019 to get this project off the ground. That's a country where the government has made some very bold decisions to kick off the floating wind market. So they're actually incentivizing through their green energy certificate system, they're incentivizing projects that are further off the coast and in deeper waters. So they get a premium the further off the coast and the deeper water you are in on the electricity you get paid for. So this is a way of promoting projects further off the coast where there is less conflict with near coastal activities, including the fisheries and the military. And I think that's, for a country like Korea, there was no other way than to go to floating wind, and they desperately need it. It's a very small country in relation to the 50 million that live in it. It's a very mountainous country, so doing anything large scale onshore is really not an alternative. And most areas are fairly deep. So it was early on identified as floating wind needs to be a key ingredient of the energy mix. How do we promote early projects to get that industry start rolling in the right direction? In Scotland, our early developments several years ago actually have, during the beginning of last year, was sold to Copenhagen Infrastructure Partners, the majority of it. So we've sold 90% of that project, and that's now being redeveloped and re-permitted for a 100 megawatt project under the leadership of Copenhagen Infrastructure Partners. I did mention Sweden, so we're in joint ventureship there with Aker Offshore Wind, developing multiple sites, capacity of at least 3 gigawatts on both the east coast and the west coast. And Sweden is quite interesting, being a fairly unregulated market in the offshore space, but the fundamental need, where I think that the alternatives are very few, looking at the electricity demand in the southern part of the country and how that will increase over time. So the fundamental need that you can sort of satisfy in a timely manner, there are no other good alternatives in my head. So floating wind, not only floating, but offshore wind needs to be an integral part, I think, of the future of the energy mix in Sweden. I'll come back to England in just a second because it's related to technology. And on prospect side, what I want to mention is that Hexicon's sweet spot market are the ones that are not necessarily fully regulated yet. So if you look at the fully regulated auction scheme markets, highest bidder, you pay, hundreds of millions of dollars and more for seabed. Those are not markets where Hexicon lead the developments. The ones that have the prerequisites to become such a regulated market and to really where floating wind is bound to happen, but it hasn't taken off yet, those are the ones that we place our risk money on and our bets on. And this we did very well timed in Korea, and this we're pursuing additional market opportunities in countries such as South Africa, Portugal, Italy, and more, where we think floating wind will inevitably come, but it's not really taken off yet. So as a technology provider, the burden of proof is with us. And our technology roadmap for the TwinWind technology is a two-stepped approach. First, we've got our proof of concept, which is a demonstrator project intended to be started fabricated end of this year, installation end of next year. It will be a single unit with 2 3-megawatt turbines. And here we're working with international global contractor Worley, who will not only take over the engineering ahead of fabrication, but then fabricate the whole project. And they have their own shipyard infrastructure in Norway. Following that, we've got what we named the TwinHub project in England. And there might be a slight confusion here between all these words using twin, but I'll stick with Norway and England. So in England, we last year acquired a piece of seabed intended for wave power. And this is now being developed for floating wind instead, using our own technology. And these two projects are very different in terms of what they provide to Hexicon, where the demonstrator in Norway is very much a proof of concept. And the project in England, not only in a different environmental perspective with waves and currents and winds, etc., but it's in a different market, it's a larger scale, multiple units, and it's under commercial terms. So we aim to participate there in the UK subsidy support scheme called the Contracts for Difference, which in this allocation round this year is the first time that they've ever had an allocated budget for floating wind. So this is actually open and ongoing now and will close later in this spring. Subject to being successful in that, we aim to commence the construction somewhere mid next year for a start of operation and the year thereafter. And I think fairly well timed now. Just wrapping up a little bit, looking ahead, where is our focus? It's very much on two things, which are the two legs of our business model. The technology, with a focus to prepare it for the construction start in Norway, and at the same time to go through a successful bid process for TwinHub, the stepping stone project, second step in the technology roadmap in England. And on the project side, to continue to mature existing projects in our portfolio and add new such to it. Because I'm absolutely convinced that the rate, the speed of developments in the offshore space, not the least floating, there will be so many new opportunities in new markets over the next few years. And the earlier you can position in selected such, the better. And we'll continue to grow our organization and capacities to grasp as much as we can of that opportunity and that growth of this sector. So with that said, I truly want to thank you all for listening, and we'll now hand over to questions.
Okay, thank you, Marcus, for your interesting presentation. I think we have time for a few questions, so I'll go right ahead. First of all, just talking about sort of the cost per megawatt hour produced for floating offshore wind, how does that compare today against fixed bottom offshore wind and as well as onshore wind, and how do you expect that to change going forward?
Well, I think extremely relevant question, of course. And if we look at floating wind today, it's more expensive than fixed bottom. But then let's remember also that 18 of those has been built to date compared to over 10,000 on fixed bottom, and even more so onshore, of course. Yeah. So what we're seeing now, and together with a lot of industry colleagues, is that we're pushing hard for what we think is very much achievable, which is to push costs down to around 50 euro per megawatt hour towards the end of this decade, so towards late 2020s. Yeah. And this is where it needs to be deployed at scale. And worthwhile mentioning as well that the comparison between floating and fixed, yes, it's relevant, it helps, but in a lot of markets, and the reason for the swiftly developing floating wind and maturing the technology is that a lot of places around the world do not have the luxury of large areas of shallow water where bottom fixed is more competitive. So as soon as you go deeper than somewhere 50, 60 meters, start becoming competitive with floating foundations. And on a global perspective, most waters are deep. Somewhere in deployable waters near coastlines, somewhere 80% of waters around the world are deep.
Okay, so looking at your advantage, being able to sort of install turbines further away from the coast, what's the competitive landscape like there today? Are there any competing technologies, or is your solution sort of a first mover in this space, would you say?
No, there are certainly competitors. Like any good space to be in, there's always competitors. And I would put it this way, I think I've seen at least over 50 different proposals and solutions for floating foundations. So just to be clear, it's the foundation. We don't do anything with the turbines. Yeah. It's the foundation that the turbines sit on. And out of those 50, 4, I would say, are more mature than we are. Not saying better, but they're more mature. Yeah. And the rest are a few in line with our project progress, and the rest behind. So we're certainly one of the early movers. We need to get it installed, which is happening in the next year. And I also think it's extremely important that the very few that have been tested in full scale yet, none of them have been built in series yet and used at commercial scale. And the industry deserves to continue to, be offered alternatives. We need to continue innovation, especially disruptive ones like we're doing. And just mentioning quickly on the competitive landscape and how we view floating wind as well. One reason for going further offshore, and one thing that's benefit for all floating technologies, is that you can be more flexible in where you site these. So you're not constrained by water depth. That means that you can more freely place them in the higher wind locations, not higher wind and being constrained by sea, water depth, which is the case for bottom fixed technologies.
Okay, those are interesting points. I think I have time for one last question until we have, and then we have to wrap up. But we've seen sort of energy prices spike recently, and we've seen the supply of energy, or the shortage of energy supply. Talk a bit about how this affects you directly at Hexicon, and also how this affects sort of the market and the demand for floating offshore wind.
Yeah, absolutely. I think that we'll see more. if the core reason and the driver for our existence and developing projects have been the transition from fossil generation into renewable generation. I think what's happening right now, which is, I'm not even going to speculate the full effect of it, but I think that what we'll see is that we'll place almost as high as transitioning to renewables, we'll place another criteria and word to it, and that is security of supply. Not being dependent for Russian gas and other imports. So alongside transitioning to renewables, will add security of supply to that prioritized key driver criteria for developing these projects. And that means an added amount of domestic developments. We certainly need to go as fast or even faster, I would say, to this renewable place. For our, in addition to, of course, it's very much been discussed, and how military perhaps even a more important stakeholder now than ever. So those type of discussions have started to increase. But I think one direct change that we could see is where you locate these projects, where certain markets are more vulnerable, have more dependent on the specific of being Russian gas.
Yeah.
So those, I think, will have a huge demand in the short to medium term going forward.
Okay, with that, I'd like to thank you again for your presentation and for answering all of my questions. And I'll just leave it up to you if you have any final remarks before we round off.
No, just thank you for listening, everyone. And it's been a pleasure, and I hope to come back soon and speak again.
Thank you.
Thank you very much.
Hello everyone, and welcome back to ABG's Investor Days. My name is Carl Bokvist, and I'm an industrial analyst here at ABG. With us now, we have the pleasure of hosting Piezo Motor, or soon to be called AcuV, and the CEO, Anders Kottenauer. Without further ado, Anders, thank you for joining us, and please.
Thank you. Pleasure to be here. Okay, we'll introduce a little bit the company as a starting point. We have been doing quite a bit of transformation of the company over the last, I would say, in particular, the last 12 months, but we started even before that. So what we do is we are building a company around the increasing demand for precision, around movements and positioning of physical objects. And we also are leveraging or using the increasing demand for really compact solutions in terms of both weight, size, and how we integrate the solutions. So this is a global demand, but we really have a clear focus on certain markets and applications. And we can expand those, and we will expand. But for the moment, we have a very clear strategy moving forward in how we expand the business. Part of that is to expand our global presence. We do that through increasing direct sales. So today, historically, we have had quite a lot of indirect sales in the company. We will keep doing that to a certain point for certain brands, but we're really also expanding our presence. As you can see here a little bit, if you look at our global map here, you can see we have now 3 businesses, 2 based in Europe, 1 in Finland, 1 in Sweden, and also now recently 1 in the US. So based on that, we are also expanding the local presence in those entities in terms of operations, engineering, but we're also adding sales resources in the field. So this means establishing in DACH region in Central Europe, which is a really important part for the business, as well as in the US, East Coast, West Coast as well. We also have Asia. Today, it's a really distribution market for us, and we will continue with that for the time being, but over time, we will also establish ourselves in that region. So really for us, the other part that we expand is the product offering. We have done that through acquisitions, and we also do it through our ongoing platform development. New products will be launched. The final step is also to go into new applications, but as mentioned, we have a pretty clear focus at the moment for certain key applications, and we will step by step expand that. If you look at the financials, we have had, these are the pro forma numbers, we have had a big change over the last 12 months. So we have today about 150 million SEK for the full year 2021 for the 3 entities combined. And if you look, the organic growth here is purely based on the existing business we had in 2020, so that was about more than 30% organic growth. For the total businesses, we also have had very good organic growth in 2021. Q4 was in particular strong for us. We've had very good demand at the end of the year. We have also been able, if you look at pro forma level, to have a very good profitability for the business. So we're getting up to the levels that we have been, that we see as we have the potential in the business world to be really above 25% EBITDA levels, something that we really think we can achieve by the scale we're building into the business. So we have a very good base globally of the customers across the region. So the entities in Sweden and Finland are pure exporting companies, but the key markets, as mentioned, US, Central Europe, and in Asia. We have about 500 existing customers today, very good customers, growing base. And with those customers, we have a very high level of recurring business in the sense that once the products have been designed in, we have a good, long-lasting products with these customers. So for that reason, it's quite stable, the business. We see fluctuations over the quarters, but the trend is clear. We have very good organic growth starting to build up in a company with a very good pipeline. So as mentioned, we're changing the name of the company. There's actually the reasons for that is that, as mentioned, we have changed quite a bit over the last 12 months. So this is a name that reflects better, in our view, what we're building up and what we want to become. We also For us, it's very, very important that we keep the brands that we have established. They have a very good market recognition in the different applications where we're present. And so we will keep existing websites, we will keep the brands, we will develop the brands. But on a corporate level, we want to have something that holds everything together. We are not a company that we really want to integrate the businesses we buy. We want to combine it with high level of autonomy, but we really also want to make sure that we can get some scale out of this one. And on that, we will do in some ways on a corporate level. So really, I don't think the customers will see a big difference initially. We will keep the existing businesses as they are, but step by step, we will do new products together. Particularly on the commercial side, we will have much more shared resources than we've been able to do before. So it's really, I think, something that's going to step by step change our profile towards the market as well. So what markets are we really focusing on at the moment? We have four. We have what we call life science instrumentation, which is, as an example, can be cell manipulation, cell handling in different contexts. We also do have a pretty good pipeline and market presence in medtech. Could be surgical robots and similar things. Semicon is historically a key area for some parts of our technology. And there we have today a very good presence with some of the biggest players in the market, with products that I think have a very good potential to ramp up pretty well in the future. And then advanced industrial, the different types of optical applications, where we also have a pretty good brand presence and recognition of our capabilities. But in addition to this, we also have established a high volume market approach where we address certain application where we know there's a very big benefit of certain compact solutions that we have. Not only compact, it can be very cost efficient as well if you look at the total solution that we offer. But we have also spent quite a bit of time on developing the model to go to market there, where we really want to have very close partnerships with certain key players that can really help us to expand. So if you look at the mobile phone side, as an example, for mobile phone optics, we have entered into an agreement or partnership with a very strong player on that side to really develop that business step by step. If you look a little bit more in detail on the markets, it's what we currently serve. It has about 10 billion SEK market potential on an annual basis. But the individual segments, we're down into sub-segments, which in themselves have very good growth and also very good potential for us, with not only to capture market share with the new technologies that we offer, but also to enable some applications that are not currently done. So for us, we really see this as markets that tend to be quite long products, as mentioned, long life cycles. And you can also have niches here where you can have a very good profitability level. You can see we often have difficulty sharing company or customer names, but you can see some of the names here in each segment, which are either companies that we are already working with today or supplying today, or companies in our pipeline, or companies that we are addressing in the future. It's just to give you a sense of what type of customers are in each area. So the brands, we currently have 3 brands. I hope to add more in the future and give you a sense of what these brands do and how we work together. So as mentioned before, for us, it's really, really important that we find synergies between the companies that we buy. And sometimes that can be through technology, that can be through how we go to market. And it can also be on the new solutions that we can build together with these entities. And we have 3 today. One is Piezomotor, which is the origins of the company, which is really, I would say, the most well-known or best, broadest product range in the market for piezo-based actuators. And then we also have Sensapex, which is really about motion control. We want to push that into ways where we can automate a lot of manual processes today in some industries, like, for instance, in life science. And then we also recently acquired a company in the US called TPA Motion, which is origins really about linear motion and solutions around that, but also a system integration. This also gives us a very good presence in the US, very good customer base, and something we can expand or planned US expansion around. So meaning adding more technical resources. We also have manufacturing presence in the US, etc. But as I said, we really drive hard on IP, we drive hard on R&D, and some of these things we want to share across these businesses. So a little bit some application examples. You can see on the Pearson Water side, as an example, this is a medtech solution. It's about tissue diagnostics, where we probe a specific cell, in this case to see if it's, for instance, cancerogenic. On the Sensapex side, it's about micro injections on the cell level, which is super precise, and you need to have very, very high stability when you do these type of operations. So the TPA motion one is, in this case, is also life science oriented. It's a microplate handling. So we do have today a very high focus on the medtech life science, and I think looking at our pipeline, this will continue to grow. So product expansion. So we have really ongoing today. We already mentioned compact drives, which is something that we use for, as an example, the mobile phone industry, but also our core markets I mentioned before are really also something we want to push these solutions out to these type of companies that we have already as customers or in the pipeline. We also have lab tech automation as mentioned, automation of certain quite manual processes today that we think we have already existing technologies for. They can be very useful for data capture in some, for instance, in life science. And then stages, which is used in many different industries, and that's actually simplification of integration and helping our customers get scale. We have quite a lot of large customers, even though they individually have quite relatively low volumes. It probably can be from a few hundreds up to a few thousand for many of these customers, even if they are very big companies. So this is a way for us also to get more value out of our existing core technologies. So trying to explain a little bit our value chain and business model with this slide here. It's actually simpler than it looks here, but what we have been doing, originally we come from, I would say, an advanced component level. You see that a little bit further down in the value chain. And step by step, we want to increase and move forward. The reason for that is really there is a customer demand for it. As mentioned, even if customers are big, they might not have the scale themselves to achieve it. And it's also, in many ways, quite a complex know-how that we have that it's difficult for many customers to have themselves. And the second thing is also that we see a way of capturing value of some core technologies, basically adding more features around some really core technologies that we have to get a better value. You can get like 3 times X component level in value when you step up in the value chain. In some cases, we even want to go, or can we already do today, go even into really deep into some application level with more total solutions. And we have ongoing strategies around this as well. We do this in a very select way. It has to be fitting, of course, with the market situation, with the customer situation, but there are some really good opportunities for us to do that. And then, of course, we have I mentioned already, the high volume ones. Some of these technologies we will use across the markets that we see here, but also then we really find the partnerships to really scale up in some cases. Some things that for us it can be it's difficult sometimes to mix the business models, but it also gives us access to certain applications that it's going to be very, very difficult for us to do ourselves in the short term at least. Particularly today when you have also the COVID situation in the mobile phone side, where it's basically very difficult to even get access to be present in the countries. But through the partnership we have established those channels. If you look then at really what is driving our organic growth. Organic growth is super important for us because it really scales the business. And so we have good niches we're operating in with both very potential for very good margins, but also good growth. We do have the ongoing expansion of our product range. So we do that through acquisitions. We do it organically as well. Then, of course, step by step move into new application areas. But really a key thing for us that we have seen a big shift in not only driving sales, but also how we can control the sales and really control how we really get knowledge from the customers, is the increased focus we have on direct sales. So we're really pushing to have that. We have a good partnerships with our distribution channels, but really it's important for us to be close to the customers, both with advanced technical sales capabilities, but also technical support. We try to do most technical development R&D in our core R&D centers, but there will be certain application expertise that we need to have very close to the customers to speak their language, so to say. So we see the benefits of this model, and it's working really well for us in terms of driving growth. So final slide here, the investment case. So we have a very good base, a good customer base, more than 500 customers globally, that in themselves has, they have very good, they're in good markets, they have good growth themselves. We can also expand with new products to them. We have a very good pipeline, MBO pipeline, that we see come to fruition over the next few years. We also have, what we have in addition to what we can call the base business, if you want to call that, is really these new high, I would say, high volume application areas that we see could have a very good impact on profitability as well. Specifically if it's a licensing model where it basically goes straight through as a gross margin. And then we have an active M&A agenda. We closed 2 deals last year. We have an ongoing pipeline of M&A that we can hopefully do in the future, but of course we base that on many different the conditions in the world, etc. as well. But there is a good potential to both consolidate in some application areas, but also to add new technologies and market access to the business we're building up. And then finally, I think the very important for me and for our board is that we can also show profitability in the way that we see the business scales well. We are actually quite lean on the corporate level, but also in the businesses. We are very efficient, I would say, and quick to adapt to both new market conditions, but also to support our customers. So I think we are, we have a very good potential to have a good EBITDA level for the business and to keep that moving forward. We don't have any price pressure for our products. I think we also have an opportunity now if, for instance, raw material price increase and similarly, we can push that forward to the customers as well. So I think from that perspective, we are in a pretty good position. So thank you.
Thank you, Anders. So the first question is just on, given the portfolio structural changes of the business recently, and you highlighted the pro forma business overview of a full year. I think the margin was even 30% in Q4, and the margin target there or potential of 25%. How should one think about it? Should it be that the TPA business continues to drive profitability even further, or is it that the legacy Piezo reaches the kind of scalability that you're aiming for, and that will be the...
That's a good question. I think the TPA business for sure has good potential. We see good momentum in the US, and I think that will continue. That one part. The legacy business is really, that's a scale business. So we're very up to the place where we really have good growth, where we can also see really the scale coming into effect. Where we had COVID impact has clearly been the SensaPex business because of the access to the certain type of customers. That is something that I think step by step will improve now throughout the spring. But overall that business scales well as well. And where we have there is a really push into more OEM business as well that we have new platforms for. So I think it will be a combination to drive profitability. But we're also really pushing to share some core roles and capabilities across the group as well, so we can spread the costs across.
And the potential partnership there within telecom, it's something that's on a testing phase, so to say, right now, or a commercial partnership level. But thinking about the timeline here.
Yeah, it's a good question on the timeline. As always, we are we have a partnership, and so there's actually at the end there's a first level, or is the OEM that really sets the timeline. But then we have these called module manufacturers that are really also setting a timeline. But we have, from our partnership that we have established already, we have a very clear commercial push for this, and we have ongoing customer activities right now. We have a platform that we can use as a demo, and to be clear, we have developed this together with our partners. So it's some technology from us or a big part, but this was a very big part from them in terms of drive electronic sensors and similar things. And they are a highly capable partner, and with very good access. But it's very difficult to talk about timing. It's because of it depends on, at the end stage of the OEMs when they launch new products, but then also when we can fit into the new technology into different platforms. So it's really difficult to tell, actually. It's not as far out, really far out, but it's difficult to tell. But it's progressing, and there's a lot of activities around that's happening.
And you highlighted a few ways or areas where you potentially could see synergies between these three businesses. But the initial rationale behind the two acquisitions, how did you come across them, and why you felt that they had a good fit with your business?
So it's really, I would say, two things that has been the rationale for it. One is that we want to move up a little bit in the value chain to have access to more, that we can do more platforms towards our customers. That's part of the Sensapex side, but also TPA. TPA is also a way for us to access the US, to have a much bigger presence there. And they also have a very good customer base that we can expand other applications with. So I think so it's a combination. But what is interesting is that all of the three of them, we can really access the same end markets with these applications in different ways. But the potential is there to share resources in terms of sales, commercial expansion, marketing, and all these things. So it's something that we really can scale faster with these three companies.
And historically, the Piezo Motor side has been an R&D intensive business with a lot of investments. Do you foresee that the profitability from TPA, for example, will be able to cover the group's investment needs, or how should one think about capital allocation?
No, we clearly see that cash flow wise and investment requirements, we should be able to cover that through the group here for sure. What we're doing on the Piezo Motor side as well is to be, since I started there, we have made quite a big changes, and really to be more focused on creating more standard platforms as well on that side that we can then leverage faster. So that's also part of the plan. Become much more efficient in terms of capital allocation in our inventories, and also how quickly we can put solutions in place for our customers. So, but as an example, between these three companies, we can really share some core technologies like electronic platforms and things like that.
And just you mentioned here at the end, you believe that you had good ability or potential to continue to adjust prices to what we're seeing currently in the world. But on the supply chain side, how have you felt this impacting your business? What do you see going forward?
We have been able to manage it quite well so far. We have increased some stock levels. So parts of the business, for instance, the Sensapex side, have had some more complex, some chips solutions and other around that we need to buy quite well in advance. But I think we managed it quite well so far. I personally think that some of the supply chain issues will become better in the near term, because I think it's also been a bit of a panic buying by many different customers in parallel in the world. So I think that will probably calm down a little bit. But of course, there might be other supply chain issues. But I just today was making sure that we had access to certain raw materials that we need in our production, as an example, with the current situation. So those are the things we keep an eye on.
And the final question, you mentioned a few customer areas. Healthcare was one, but semicon was one. And here, just for people who are interested in looking at your business, is it an exposure towards the investment part of a semicon market, i.e., the significant capex programs that we have been reading about for quite some time? Is that, the kind of driver that benefits you as well?
Yeah, we supply into the basically the manufacturing equipment that goes into that market. So we would be, you can see it as tier ones into the, to the big players in that sense. But we were quite well diversified in there. So we are not, we do different things, and the end applications might be different. So it's not just one single thing that we're supplying into, it's different things. So I think but I also see that industry has changed quite a bit. It's largely driven today by memory demand, as an example. So you have much more stable investments going forward. I've seen that over the last few years at least. So I think this feast or famine has kind of disappeared a little bit, and at the moment there's quite a big, good demand in that market for across the board, I would say.
With that, Anders and Pietro AQV, thank you very much for joining us.
Thank you. It's been a pleasure being presenting here today.
Yeah,
thanks.
Take care.